Meanwhile, Jay Powell making his first public comments since the end of his term as Fed chair, sounding the alarm about politicizing the central bank. And Berkshire Hathaway making one of its big moves, first big move, by new CEO Greg Abel buying Taylor Morrison Home, $6.8 billion. It's Monday, June 1st, 2026. Spark Watch begins right now.
Good morning, everyone. Welcome to Squawk Box right here on CNBC. We are live from the NASDAQ market site in Times Square. I'm Becky Quick along with Joe Kernan and Andrew Ross Sorkin. And on this Monday morning, you are looking at higher opens across the board for all three of the major averages, which all closed at record levels on Friday. Right now, it looks like the Dow futures are up by just over 165 points. S&P futures up by another 20 points. The NASDAQ indicated up by 86. Crude oil prices, which last month saw their worst month since April of 2025, of course that was when tariffs were announced, are actually indicated higher this morning. WTI is up to $90.70 a barrel. Brent crude is up by just over 3% to $94 a barrel. And then you've got Treasury yields, which right now it looks like the 10-year is sitting just at 4.46. The 30-year is just below 5% at 4.99, and the 2-year is sitting at 4.03%.
Meantime, NVIDIA jumping into the PC business. The company dominates the market for AI data center chips. Now it's going to be making chips that serve as the main processor for personal computers as well. Speaking at the Computex tech event in Taiwan, CEO Jensen Huang unveiling a new N1X processor made alongside Microsoft. It's going to be incorporated into a new RTX Spark superchip and debut this fall in a new line of Windows PCs from Microsoft, Dell, HP, and several other manufacturers.
There is no question this reinvention of the computer is as big of a deal as the reinvention of the phone into what we now know as the smartphone. And so this is the beginning of that journey. This is the beginning of a new line. And so we have a roadmap for this. This is a brand new product family for us. Every single generation of architecture, we will have a desktop, a laptop, a workstation, and then a desktop, a laptop, and workstation. And the thing that I'm just incredibly pleased, incredibly honored, is that 100% of the world's PC industry.
And this may be the beginning, or at least another indication of just this idea of, quote unquote, moving to the edge. More and more AI processing ultimately may get processed by physical computers. That's not been the case thus far for the most part, but if that is true, perhaps this is to some degree even a hedge, if you will, against whatever you think is going to happen in the cloud. Shares in NVIDIA are rising while shares of PC chipmaker Intel, we should mention, pulling back in a pretty significant way, about 5% this morning. So if you own NVIDIA, you are happy. If you're a taxpayer, you may be less happy, which becomes sort of the next interesting sort of dynamic in terms of how folks root or root against different stocks.
I don't think we're going to be able to spend any of that Intel money anytime soon as taxpayers. Are we getting? I mean, I feel like an owner, but I don't feel like we're ever going to.
I remember when we were all supposed to get dividends. Do you remember when the Trump dividend was coming? So I'm still waiting for
I've looked. I haven't. There's no address on my house. You know what I'm saying? There a lot of people have them, but we don't have an actual.
Well,
I don't know why. Maybe it's in the mail. We're going to talk about chips in South Korea. The cost be surging to a record high amid a tech stock rally in South Korea. And Samsung shares rose by 10%. I'm looking at someone to read in a second. Very troubling. Topping a $1.3 trillion market cap. LG shares were up by 30%. Executives from both Samsung and LG are expected to meet with Jensen Huang later this week, raising expectations for potential collaborations on AI and robotics. And I was just going to say 400 points on the Dow again on Friday. So it's like every version of some type of resolution for Iran, even though then it sort of peters out, the market seems to seems to go up,
Yep.
and then it doesn't pull back. And then there's more talk about it today. The market's up again today.
Right.
And it
Oil
just-
prices are up, and it goes, and the
And we
equities
sit
go
here,
up.
we talk about it, and then I read this today, got very troubled. Market Watch. It's not just tech stocks. The broad-based strength of the market right now gives investors reason to stay the course.
Make you nervous a little?
People are starting to buy into it, and it was, we were not buying into it for a long time. We were like, this makes no sense. This makes no sense. Why does this keep happening? And as we close in on 7,600 first on the S&P, we're getting near year-end targets.
Why cite that? The Journal's front page.
Journal, yeah, same
The
thing.
S&P 500 just posted one of its best 2-month runs ever. That often means more good times
More
ahead.
good times, yeah. Both of them. I saw both of them, and both of them.
You're thinking it's the Sports Illustrated.
I'm just thinking it's starting to. I love it when the rally's really hated. We're gonna have Muhammad on. He can tell us whether it's hated enough to continue. This is good, probably, right?
It is. There's some deal news to tell you about. Berkshire Hathaway is buying home builder Taylor Morrison for $72.50 a share in cash, or $6.8 billion. That excludes debt. If you include the debt, it's $8.5 billion. It's a 24% premium to Friday's closing price. It is expected to close in the second half of 2026, and it will add the home builder to an already sizable housing portfolio that includes Clayton Homes and Berkshire Hathaway Home Services. There are also a lot of kind of derivative companies that Berkshire owns that go into home building. If you think of Acme Brick or Shaw, which makes carpeting and flooring, you've got Benjamin Moore Paints, you've got Johns Manville, which makes insulation. So there's a lot of other
Acme
companies.
Brick I have.
You have an Acme Brick. You and Wile E. Coyote.
Yeah, he sent me. Warren sent me an Acme Brick when I asked for a
When you
Netflix.
asked for NetJets.
What was that, about 20 years
NetJets
ago?
card. Probably was. Probably
20 years
was. I
ago, I
still have
remember
it.
that.
Told
I
not to.
still- I've never put it into anything I've built.
That's valuable. It's a gift.
It's a good.
This is the first big deal for Greg Abel since he's been the CEO. I did speak to Warren Buffett about this yesterday. He said, Greg did this faster than I could have done it, smoother than I could have done it, and I never talked to the CEO. He has watched. Taylor Morrison CEO Sheryl Palmer is going to be on Squawk on the Street. That's coming up at 10 a.m. Eastern. It is first on CNBC. This is just really interesting in the idea of would Greg Abel be able to move quickly and to do these deals quickly, as Warren Buffett has always done. If you had Warren's word on a deal, it was as good as done, and it sounds like this is basically what Greg has picked up and done too. He spoke with Warren Buffett about it, told him, I guess, when he first went down to meet with the CEO, with Sheryl, he went down to Arizona, spent about 5 hours with her, and when he came back, he didn't think that he had a deal. Talked to Warren about those things, but I guess about 4 days later, she called back and said that her directors were okay with it, the price is fair, nobody else we would do a deal with like this. And again, he spoke with Warren Buffett about this, and I believe he spoke with the lead director, Sue Decker, about these things, but didn't talk to the rest of the board until after they had completed the deal. And that's kind of the Berkshire way to try and move quickly on these things. If you've got a deal that goes through with some of these. We did speak with Sue Decker in May, I guess just last month, beginning of the month at the Berkshire Hathaway annual meeting, about what the parameters would be for Greg, whether he'd be able to do deals like that. She said at a certain level, there would be
So what's the size? Do you know what the size is?
I don't know. I threw out numbers like $10 billion, $20 billion. She just said at a certain level there would be something. You know, this is, I guess, 8.5 when you assume the debt that goes through with it. But Greg can do these deals pretty quickly, and he can do them without necessarily asking for the full board approval on
It really doesn't help with the amount of cash that they have that they need.
No, this is like less than 3% of the cash on hand. They have close to $397 billion in cash on hand. So it's small numbers, but the idea that they are betting on home building is pretty important. Some of these stocks have been fairly depressed because interest rates have remained high, above 6%, high over the last 10 or 15 years, not high historically what you would think of, but it has, the number of housing starts has been down, has been declining, and so they're buying into that market.
Right. Meantime, in geopolitical news, the U.S. saying it struck air defense radar and drone sites in Iran over the weekend. And CBC's Dan Murphy joins us live from Abu Dhabi with the latest. Good morning.
Andrew, good morning. Well, the Iran deal remains elusive this morning. President Trump also seemingly losing some patience with his critics. On Truth Social, Trump said Iran wants to make a deal, but he also hit back at what he called political hacks on both sides of the aisle for negatively chirping, he says, about his approach. Just sit back and relax. It will all work out well in the end. It always does, he wrote. Markets aren't so sure, though. We're watching oil prices pop right now after Israel's prime minister gave the order for his forces to strike inside Beirut today. Prime Minister Netanyahu posting on X saying, in response to the repeated and ongoing violations of the ceasefire by Hezbollah and the attacks against our cities and citizens, I've instructed the IDF to strike terrorist targets in the Dahieh district, that is Hezbollah's stronghold in the southern suburbs of Beirut. Kuwait also reporting a new wave of attacks this morning, and strikes between the US and Iran also resumed over the weekend, with each side claiming to have hit military targets near the Strait of Hormuz. Tehran also weighing in, the senior negotiator Mohammad Ghalibaf responding on X, saying the naval blockade and escalation of war crimes in Lebanon are clear evidence of US non-compliance with the ceasefire. Every choice has a price, he says, and the bill comes due. So we don't know how the Israeli strategy in Lebanon could complicate this latest US diplomatic effort, but we do know that Tehran wants a halt to fighting in Lebanon as a condition for any deal. Right now, it appears that there is an escalation path in Lebanon, which is certainly going to ultimately perhaps delay the diplomatic off-ramp that the president has been pursuing. So we're watching and waiting to see exactly what happens next here. It's back over to you.
Hey, Dan, what's the explanation there for how we're just talking about the equity markets? We keep looking at these equity markets moving higher and higher, and yet here we have, you know, WTI crude back at 90 bucks, Brent at 93, $94. What's the feeling on the ground about that?
I would say it's a headline-driven market right now. We also had Axios reporting over the weekend that the US and Iran were discussing this MOU that would lift the blockade in the Strait of Hormuz. That has, of course, pushed oil down double digits through the course of last month. Inside this MOU, there is also talk of extending the ceasefire and setting up this 60-day negotiation window to resolve the big ticket item here, which is Iran's nuclear program, and for the Iranian side, that sanctions relief as well. The reporting suggests that Trump is asking for several amendments to that draft right now, particularly around the nuclear issue. CNBC has not independently verified that report, but analysts that I'm speaking to today are saying that that is the primary reason why we've seen oil move off the back of this. You can see just a modest pop in the grand scheme of things, up around 4% right now. But again, coming off a pretty low base here, given the positive momentum, the positive headlines that we've seen around the diplomatic track that have really helped to pull crude off the higher highs that we've been following over the last couple of months.
Okay, Dan, thank you. Appreciate it.
All right, coming up, Jay Powell delivering his first public remarks since the end of his term as Fed chair. Highlights what he said after a break. Plus, we're going to talk to markets with Mohamed El-Arian with all the major indices pushing to new highs. Squawk Box coming right back. In his first public remarks since the end of his 8-year term as chairman, Fed Governor Jay Powell sounding the alarm over a politicized Fed and calling for a defense of democratic institutions.
Like so many other institutions, the Fed has been undergoing a stress test. Congress wisely chose to insulate monetary policy decisions from political pressure. All other advanced economy nations have done the same.
Joining us now, Mohammed El-Arian, professor at the University of Pennsylvania's Wharton School of Business and chief economic advisor at Allianz. I guess everyone views things a little differently. It's kind of a Rorschach test. There are people that think, I guess, what Jay Powell's talking about, resisting the the pressure from President Trump about lowering rates. But, there's a lot of critics of how involved the Fed got in a lot of things that were far afield from its dual mandates, whether it was DEI or whether it was climate change or whatever. So it sounds good what he said there, but I think the new chairman would certainly say you went far astray from where you should have been.
Yeah, and others
You
would.
might say that too, I think.
I would, and I would say let's not forget we're now in the 63rd consecutive month of inflation above target. So there's been failure on policy.
That they cut rates into.
And there's been failure on communication. But I think we got to get used to, Joe, Chair Powell has carved out, former Chair Powell has carved out independence as his thing, and we will hear from him repeatedly on this.
Yeah.
But the debate is moving on. And there's a real question mark as to what does the Fed do in this environment, and also how divergent will the Fed become from other central banks. So I think the central banking debate will move on, but Chair Powell has carved out his issue is Fed independence.
See, we could be Fed independent debate on steroids if Trump starts on, President Trump starts on the new chair to move quickly to cut rates into an inflationary environment. It may not, you might want to move on, but we may not have moved on from Fed independence.
Yeah, and we're going to see. I think there's so many interesting issues right now that Fed policy is one of them, but there is a real question mark, and you guys talked about it. We are now entering the 4th month of a war that has disrupted supplies of energy, and yet markets are in their 9th week of consecutive increases, and yet the willingness to spend by investors, by governments, by consumer hasn't been dented at all. And the question now becomes ability. Can everybody continue to spend despite what is going on in the real economy? And that's what we're going to figure out in the next few
The
weeks.
Fed has made a mistake by not lowering interest rates. You're in the Trump camp, even despite where we are in terms of what's happened in our economy.
So before the war,
Right.
and particularly, I felt they should have started in July, which they didn't. Now I think you stay as is. You neither hike nor you cut, waiting to see how the economy plays out. If I was a single mandate central bank, the ECB, the Bank of England, I'd be hiking. But the Fed
Right,
is
but
not.
the idea then of lowering when you wanted to lower, was that the right call in retrospect? In retrospect, you would look back and you would say we should have done that?
We should have done that knowing what we knew then, but nobody knew that we were going to have a war that's going to extend into the 4th month. That is a real exogenous shock that we're living through right now. We are managing it well. Both the real economy and the markets are managing it really well, but let's understand, we're living on buffers. We're living on oil inventories, we're living on this saving, and we're living on borrowing. And there's a limit to how much we can run down those buffers.
We talked about 2 articles, and this is just hideous too. S&P signals, best 2-month gain, signals more gains ahead. Like, be careful. Market Watch, same thing. That this could presage a very good next 6 months, next year. We're going to have Tom Lee on a little bit later. He's talking about the best 2-year period coming up, maybe in history. I wish he would have been on before you came on. But our bets in the past, I didn't think we were going to retest the lows a lot of times, and you did, and you won because you made it by 1 point. We retested, and then went to new highs, and here we are. You're on. I'm not bearish. I'm not saying that. I'm not anything. I don't know what I am right now, but you're uncharacteristically positive now about equities.
So no, let's be clear. I believe in the AI promise. I think this is absolutely transformational. I totally believe in that. I rather do relative trades than absolute. Tech versus the rest. US, Asia versus Europe. These for me are very clear trades.
Okay. AI is real. How about Micron going from a $200 billion company to a $1 trillion company in like a year?
And you can look at Dell.
So AI is real, but are the stock valuations real?
I think most of them are. You had Dan Ives before, and I really do listen to. I have a lot of respect for Dan Ives, and he has been calling it absolutely right. It is the rest of the market that has been pulled up. That is more questionable. But if the relative trades for me are really obvious.
So if you don't have S&P targets, you'd continue to be raising your S&P target. You'd be at above 8,000.
I'd continue to raise my tech target, but I do make a differentiation. Similarly, I would continue to raise my Asia target, Taiwan, Korea. I think those are real. Europe, I'd be really, really careful about.
Because of your stance prior to the war, if the war were to end, you'd be back in the cutting camp because of productivity. Would you feel comfortable even with inflation above the 2% target? Do you still feel comfortable in this argument that a growing economy based on productivity doesn't need interest rate hikes to deal with inflation? It will deal with inflation on the supply side.
So I am comfortable that AI is going to lead to a productivity increase, which is going to increase the speed limit, the safe speed limit, the anti-inflation. However, I'm not in the camp of the minute the war ends, it's like flicking a switch and everything's going to be fine. CEO after CEO in the energy sector have told us, and I believe them, it will take months to restore normal oil production and oil shipment. So no, I wouldn't move immediately. I would wait to see how long it takes to normalize the energy market.
But if it was 85 crude or 80, I can feel it already that people would say that the crisis is past, that we can definitely deal with another couple of months, even 6 months of 80 if we know that 60 is coming.
And that's because people aren't looking at what has happened to inventories, what has happened to the saving rates that has fallen, what have happened to cash balances.
So we're on the cusp of something that's not great.
We've borrowed from the future, and at some point, we've got to resume normality, or we're going to have to face the fact that we've borrowed so much from the future.
Do you think that we had another strategist on last week that said, this is all fine until the end of this decade, and then we're going to have a 10-year secular bear market?
Yeah, I don't look that much forward. I mean, good for him.
I know you don't, but you know, if there's a promise of AI, and if you notice it, I mean, it's not physics, but they call it like time dilation. Did you see how quickly quantum moves are happening in what we do based on what we're able to learn in terms of technology?
Yeah, I just wish we were younger because...
I do too, because we could live forever, eventually.
Between AI, life sciences, quantum...
We just missed it. That's the irony of our we probably just missed a lot of great things, but we were there for a lot of great things.
I mean, the two of them
these
are really
two,
lucky.
These two.
You and I are in a different camp.
Yeah, we're in a different camp. But I just think that the technological advances, it used to take, the quantum leap would be 1 million years sometimes, or even longer. And then it got down, and then you get the internet, and then now AI, and it's
So let me give you a phrase which I think sums it up, and it comes...
Oh, you love phrases. I love these.
It comes from James Manica of Google, who Andrew knows and Becky know. And he says, this is not just the Industrial Revolution in terms of the general purpose technology, it's also the Enlightenment in terms of the invention of inventions. So you're combining the Industrial Revolution with the Enlightenment, and the potential is absolutely huge.
Yeah, I was reading a fascinating piece earlier that humans, really, we were just the code that allowed this super intelligence. We sort of enabled it, and it's going to take it from here.
And it is, and in all this...
Weird way of looking at it. We're just the code that...
Did you read it?
No.
I happened to read it, and it quoting, all the leaders of Elon and Sam Altman and others, and it is science fiction, because I've read some of science fiction where the wars are being fought with intelligent machines, or humans are sort of a secondary part of the whole Well, I don't even think that they're the lowest form of intelligence in these future.
We enabled all that. You want to know what science fiction? The Mets on a 4-game winning streak. That's science fiction.
I saw. I was watching because they played the Reds last week, and
We
they
beat the Reds.
finally. I think you lost the series, didn't you, or was it they split the series?
We won on Thursday. That's what matters.
Oh, Jesus. Yeah, you lost the first 2 games, I think, didn't you? And then the Reds beat Atlanta yesterday. Atlanta's a team to watch. I don't think the Mets are a team to watch. Mohammed, how about the Knicks? You don't like the Knicks?
But I love the Knicks.
Oh, you do love the
I love the Knicks. It's going to be a good series. Good final.
You think so?
Yeah.
It could be too.
Okay. Coming up, SoftBank shares, they are soaring overnight, topping Toyota as Japan's most valuable company. We'll bring you details on a major new investment in Europe next. And CNBC has an exclusive interview with CEO Masa-san. We'll bring you his comments at the top of the hour. And SoftBank committing more than $80 billion to build AI data center capacity in France. It's partnering with French engineering firm Schneider Electric to develop a large-scale production cluster in Dunkirk as part of the build-out. And CBC's got an exclusive interview with SoftBank CEO Masa-san that's coming up later this morning, and we're looking forward to that.
When we return, a shocker at the box office. Low-budget sci-fi horror movie Backrooms had a massive debut weekend. We've got the details right after a break.
Good morning, welcome back. Squawk Box live from the NASDAQ market site in Times Square. Dow has added to some of those early gains now, up a couple hundred points, up 380 points on Friday, so that's 500, almost 600 points in two sessions. And NASDAQ didn't do quite as well on Friday, neither did the S&P, but they're chipping in today.
NASDAQ was up, I think, 8% for the month of May. It was on a tear through the whole month. There's also a shocker at the weekend box office. The movie Backrooms, which is a film based on 20-year-old Kane Parsons' popular YouTube series, brought in $81.4 million in North American ticket sales. That set a record for an independent distributor, A24. That film cost just $10 million to make. It's about a furniture store owner who finds a door to an endless maze of empty, off-putting spaces. The box office haul is roughly on par with the opening of the latest Star Wars film on Memorial Day weekend. That one, which is The Mandalorian and Grogu, I think had a budget of $166 million to make.
There's some other weird thing going on, too, that I've been told called Obsession.
Yep, that's the other one.
$750,000 to make.
Yep.
That's 60 million
Wow.
right now. It's another horror. The worst horror movie is great. You got to admit, right?
Horror movies are the way to make money.
Certainly.
But they're fun. I mean, Halloween to this day.
But that's always been the model. I mean, this is the Jason Blum model.
Blum, that's what I was just thinking.
Is this a Jason Blum?
I don't know. I don't think it is. But I'm just saying the horror genre is a lot cheaper to make than typically most other kind of movies, and the margin can be meaningfully higher.
Right.
Coming up, how AI is changing the American workforce. We'll talk about that next. And a reminder: get the best of Squawk Box in our daily podcast. Follow Squawk Pod on your favorite podcast app and listen anytime. We're coming right back. Welcome back to Squawk Box. It is Jobs Week. The May employment report will be released Friday with AI disruption dominating that discussion. Joining us right now is David Marchik. He's the Dean of American University's Kogod School of Business, who is the incoming interim president of the university. I want to congratulate him. In January 2023, he oversaw the implementation of AI into 100% of his business school's curriculum. Good morning to you. There seems to be, David, a sea change even in the last week on this idea that AI is going to take everybody's job. If you literally put the words AI and jobs into Google and just look at the headlines, AI doesn't have to mean layoffs. Apollo's chief economist says he sees zero evidence of AI-related job losses. The FT has a story, what if remote working, not AI, is to blame for weak junior hiring? What's going on?
Good morning, Dr. Sorkin. I know that I can only call you doctor now that you have an honorary degree.
Oh, this is true.
I think that that's true. These signs and projections of an apocalypse are just not happening. There have been 16 major studies done in the last year and a half. None of them show the type of apocalypse or major job loss that some had predicted. What we do see is a significant change in the type of jobs. There's going to be job churn. And those jobs that have AI skills in them are going to pay 50% more than jobs without AI skills in them. So I think that there's going to be a lot of change, but it's too early to tell whether we're going to have a major net job loss or net job gain. We're just not seeing the net job loss that people had predicted.
But David, when you think about young people coming out of school today, whether it's the business school or undergraduate, there is a deep concern, as we saw even just by the boos that were taking place at commencement addresses across the country every time the word AI was mentioned. There seems to be a pent-up anxiety, I think in large part because you have conversations with young people and they say there's a lot of kids in their class that aren't getting jobs right now.
Well, I didn't hear the AI boos at your commencement, but there have been some at others. I think it's a scary time for many people. There's a lot of change in the economy, and anytime there's change, there's a lot of insecurity. We are seeing some downward pressure on early career jobs. One study said that there's been a 14% drop in jobs for early career workers. So there is a change, and I think the response is that we need to infuse AI into curricula to train people to prepare for the AI economy, to give people those skills, and to enhance the skills that are so human. Critical thinking skills, working in teams, the ability to problem solve, all the skills that you showed, and I talked about you as an entrepreneur.
Yeah, no, you were
when
very
you
kind
spoke.
to do that. But David, what I'm trying to understand though is there's a certain logic train. I think that, you know, writing oftentimes forces people to learn, meaning when you actually have to physically write something down, either by hand or typing, you have to put your ideas in a particular order to be able to effectively communicate, for example. And one of the things that's maybe so magical about, you know, a ChatGPT or a Claude is you could put down all sorts of ideas in all sorts of orders that make no sense, just sort of a brain dump, if you will, and it'll probably put it in a logical order for you. And what that ultimately does to someone's own agency, but also their ability to learn when they're young about creating a sort of persuasive argument or putting things in sort of a logical way.
AI cannot replace fundamental human skills, reading, writing, reasoning. You have to learn those fundamental skills, and then AI can enhance your ability to be effective and productive. So we teach, for example, what's wrong with AI before we teach what's right with AI, and then we teach students how to ethically use it. And that's what they're going to need to use in the workplace. You can't just outsource writing to AI, you're going to fail.
But so when you say, but here's the hard part, when you say that students need to learn how to use AI, I 100% agree. And then at the other end, I think to myself, you know, they should be taking AI classes, but they maybe also should go to classes where they get a blue book and a pen and a paper and should be forced to write essays without even a typewriter anymore, because given a laptop, your propensity is going to be to go to Claude, or effectively, maybe to cheat the system, if you will.
So we're doubling down on exactly what you said. We're doubling down on the ability to make an oral presentation, to be able to think on your feet, to work in teams. And we are requiring students to write in blue books. You have to have the fundamental skills. You can't outsource those to AI. But if you have the fundamental skills plus the AI skills, you're going to do much better in this economy.
Okay, David, I want to thank you. Appreciate it very, very much. And congratulations on your new post.
Thanks. Come back and speak again.
Will do. Thanks again.
All right, coming up, we're going to tell you what prediction markets are saying about the Knicks versus the Spurs in the NBA Finals. That's next. But first, the AccuWeather forecast with meteorologist Bernie Rayno.
We'll have a couple of spotty showers today in Boston, New York City. Your exclusive AccuWeather forecast, though, calls for a beautiful day. Washington, D.C., shower or two around Chicago. Still steamy in the southwest with a couple of thunderstorms this afternoon. Much less humid air arrives tomorrow. Hot in Texas and hot in the southwest. If you're doing any traveling, shouldn't be too many delays today. I'm a little worried about a delay or two in Atlanta and Miami. AccuWeather for Business delivers proven superior accuracy with often earlier site-specific warnings that reduce false alarms and costly disruptions so your business stays best prepared. Visit business.accuweather.com.
It's all set. The NBA Finals, Knicks versus the Spurs. San Antonio defeated the Oklahoma City Thunder in Game 7 of the Western Finals over the weekend. Game 1 is Wednesday night in San Antonio, and the prediction markets indicate that the Spurs have the edge in the final, but 63% is not.
Not overwhelming.
That means nothing.
And by the way, the Spurs had a much smaller chance of winning in the prediction markets over OKC than New York does right now.
Before we knew who was going to be, they just did whether the Western Conference, and it was like 80%. But now that it's the Spurs, it's fallen.
Yeah, and by the way, they just have a 7-game series. They got beat up pretty badly, but Wemby.
It was your guy that did it.
Harper. I know, he was awesome.
It was unbelievable. That 1 3-pointer towards the end was like, where? But then you saw SGA just, I mean, he didn't even need to look sometimes.
By himself, Shea.
He was. Some of those shots were incredible. Kalshi putting their money behind San Antonio, taking it all with 37% only, backing the Knicks. So 63-37 is where it stands.
Okay.
This has got a lot of interest. The Knicks,
Very
big media market because of the Knicks.
Yeah.
And then it's not OKC. It's, San Antonio, 2 new teams to do it.
Yeah.
Wemby.
And a very young team with, with everybody who's on the Spurs at this point. It's interesting stuff. When we come back, rising tensions in the Middle East, the U.S. conducting more self-defense strikes on Iranian targets, while Israel expands its offensive in Lebanon. We'll have more on what this could mean for talks between Washington and Tehran and how the rest of the globe is reading what's taking place. Also, SoftBank committing billions to build Europe's biggest AI facility. Masasan just spoke to CNBC. We will bring you some of that conversation when Squawk Box returns. The United States striking air defense radar and drone sites in Iran over the weekend. Joining us right now is Michael O'Hanlon. He is Brookings Institution's Foreign Policy Director of Research. And Michael, I think we're at day 93 or maybe day 94 since the Iran war first started. We are officially in a ceasefire at this point, but we do keep hearing about these skirmishes and these sort of defensive moves, as the Trump administration calls them. Where do you think things stand? How are we positioned right now?
Good morning, Becky. Well, I think that we've learned from the last couple of years in the Middle East that ceasefire has been redefined in the English language. And certainly that began with Gaza and with Lebanon. And now we're seeing that at a lower level of hostilities, thankfully, in the broader Persian Gulf region. And so, I think obviously both sides are maintaining blockades, so we're still in a conflict. It may not involve active lethal shooting most days, but some days it does. And in order to maintain the respective blockades, both the United States and Iran need to be active militarily, which means that they're sometimes threatening to the other. So in a sense, it's inevitable. There'd be some degree of low-level clashing. The question is, will it escalate? And obviously, will we get to an indefinite ceasefire and then some kind of a lasting settlement? But I think you have to expect this because we're not at peace. That's the fundamental reality.
Yeah, we keep thinking that we are nearing some sort of a negotiated pact, or at least the framework for one of those pacts. As that's happening, Israel is continuing to push further into Lebanon. At this point, they've captured a strategic high ground at a historic Crusader castle that it hasn't held for a quarter of a century. How do all these pieces fit together?
Well, you're right to raise that because, of course, Iran has said that with their proxy Hezbollah, sort of on the receiving end of a lot of Israeli attacks in Lebanon, they're not very happy about that, and they want a stronger ceasefire in Lebanon, too. That will probably complicate talks because I think on the nuclear issue between Iran and the United States, the broader international community, the path forward is fairly clear that at some point, whether soon or in 10 or 20 years, Iran can be allowed some very limited level of uranium enrichment to claim that it's preserved its prerogative, but never have anything close to the highly enriched stuff it has now, and meanwhile get that highly enriched stuff out or diluted or something. So you can easily imagine how that kind of solution or compromise is framed. Less so with Lebanon and Hezbollah, where Israel clearly has an interest in battering away at Hezbollah as long as it can, and I don't know that it's going to accept a ceasefire. President Trump may have to use every bit of leverage he's got with Prime Minister Netanyahu at some point, because I don't think Iran will agree to a lasting deal otherwise.
Hezbollah, though, obviously has been an antagonist for so long with Israel, and Netanyahu is now taking criticism from those who say that he is, bowing to the Trump administration and not pushing further on that. Your expectation is that President Trump will be the one who comes in and says, enough, we are looking at a broader situation here?
I think so. It may not be right away, and perhaps Prime Minister Netanyahu is going to play for time and pretend to go along with the idea of bowing to Trump's demands at some point, but then just ask for another week or 2 or 3 or 4. Netanyahu's pretty good at seeing the political and strategic openings. So that may be the situation we wind up in the course of the summer. Or maybe Netanyahu will say, okay, we've advanced far enough, but I'm still going to do the occasional strike. And we'll see if Iran can live with that. Those are the sorts of back and forths that I expect over the next few weeks. I don't expect a clean single agreement.
And then you've got China watching and questions about what happens to Taiwan with all of this. What's your assessment, Brookings' assessment of where Taiwan lies with all of this?
Well, I don't want to speak for my colleagues, but for myself, I'm a little bit more sanguine about the ability to maintain deterrence in the Asia-Pacific, even as we focus on the Middle East, even as we focus on Europe more than the Trump administration would like, and even as we run down some of those munitions inventories. Obviously, that's bad news, the latter part. We need to replenish those and build those up. And there are some good ideas out of the Trump Pentagon for doing that. I'll give them credit where credit's due. But in the meantime, I think the summit went pretty well between Xi Jinping and Donald Trump. I hope Trump doesn't go so far towards calming relations with China that he leans towards abandoning Taiwan. But on balance, I think both sides recognize this is not an issue to be played with lightly. Neither side can afford a conflict over it. It would be the most dangerous thing to happen in our lifetimes, Becky, if it ever did happen, and could risk World War III or nuclear conflict. So on balance, I'm happy that President Trump seems to understand the importance of Taiwan for Beijing, that Beijing insists that it not ever become independent. We don't really have a formula yet for how a long-term Commonwealth or Confederation could be agreed to, and I think Xi Jinping set that back in the way he treated Hong Kong in the last half-decade. But nonetheless, I think on balance, things look to me moderately steady, moderately calm in that realm, thank goodness.
Michael, very quickly, I know it's a question that seems to be confounding everyone right now, but how long do you anticipate the Strait of Hormuz is going to continue to be closed?
You know, we're now on June 1st, and by about mid-April, largely thanks to your good questions and how they forced me to think this through, I was expecting that it might last much of the spring or into summer. And I guess I'm going to stick with that, even though we're now already into June. It's sort of easier to make that call when we are on the verge of summer. But I think this could easily go a little further because Iran wants to test what will happen to American will as global oil prices go up, and also wants to test how strong Mr. Trump's resolve would be as midterm elections get closer. And meanwhile, the United States doesn't want to give in to Iranian demands that it control the Strait of Hormuz in any way, shape, or form going forward. So I think both sides are still trying to establish and observe how much leverage they have with the other. It doesn't feel like we're quite ready for a ceasefire or a peace deal just yet.
Michael
a true
O'Hanlon.
ceasefire, I should say.
Yeah. Michael O'Hanlon, thank you. It's good to see you.
Becky, thank you very much. Good to see you.
It is just after 7 a.m. on the East Coast. You're watching Squawk Box right here on CNBC. I'm Andrew Ross Sorkin along with Joe Kernan and Becky Quick. Among today's top stories, NVIDIA will now make chips that serve as the main processor for personal computers. CEO Jensen Huang unveiling a new N1X processor that is made alongside Microsoft, and it's going to be incorporated into a new RTX Spark superchip, and it'll debut in the fall in a new line of Windows PCs from Microsoft, Dell, HP, and several other manufacturers. Dom Chu is going to have a rundown of all the stocks moving on the back of this story in just a couple of moments, including Intel moving lower on the back of this news as NVIDIA moves some of the AI processing to the edge. I think there's always been a question about whether all of it will take place in data centers, or all of it will take place, or at least some of it will take place on your actual laptop, or potentially even your phone, and what that therefore means to data centers longer term as well. In his first public remarks since the end of his 8-year term as chairman, Fed Governor Jay Powell sounding the alarm over a politicized Fed and calling for a defense of democratic institutions. Powell speaking in Boston last night.
Like so many other institutions, the Fed has been undergoing a stress test. Congress wisely chose to insulate monetary policy decisions from political pressure. All other advanced economy nations have done the same.
And Blue Origin reportedly faces a months-long setback. This after last week's New Glenn rocket explosion damaged the launch pad. We talked about that damage to the launch pad when it happened. That is the big challenge that they now face. Among the projects said to be impacted, the rollout of Amazon's satellite internet service LEO and future NASA Artemis moon missions. And we discussed LEO as well and what that ultimately means, whether Amazon's going to have to try to put some of those satellites on X flights or others in the future to try to get that service up and running. And there's a downstream effect, as we discussed, because there are big customers. I don't know if the customers in this case include Delta, but for example, Delta is planning to use the LEO satellite service instead of the X service, and so they need to get as many of these satellites in the sky as quickly as they can.
In hindsight, did you read any of the analysis about how devastating this really was? That it really wasn't.
There's not a backup.
It really wasn't covered
Yeah.
by media correctly. That it was like existential, like almost an existential threat to Amazon's business? I mean, the
Blue
rocket
Origin,
business,
yeah.
the Blue Origin business? It destroyed everything.
You saw the images.
Right,
It
but-
really destroys the entire launch pad.
So then what
the
do you
launch
do?
pad is, it's interesting. If you go into that factory, which is gigantic, they're building, lots of different engines and all of the different stages and the like. But that exists far away from where that's taking place. That's not the part that you need to worry about. You need the launch pad to be able to actually do this. And if you don't have the launch pad, well, and by the way, the launch pad unto itself is custom for the designs of what they've already done too.
I read some analysis, though, that suggested that X had multiple launch pads for reasons like this, that SpaceX had problems when they were doing some of these things. We all remember some of the launch problems early on that they had, but they had duplicates of many of these things, redundancies, so that you weren't reliant on having to rebuild that one. I don't know how quickly they can rebuild this.
They're talking about months. It could be 2-3 months, could be longer. And then the question, of course, is, you're going to have to start up and do all of this stuff again. Right. So it's not just, and then there's a question, and maybe the answer to this point of duplication, maybe if you're going to do this again, you would create 2 launch pads or 3 launch pads. And I also don't know how much they have a lot of real estate down there, but I don't know how, the spaces that you can get to do that as well.
Is SpaceX, did the valuation go up on the IPO based on that?
There were some people who were talking about that Friday. We mentioned it on the program.
It clearly puts SpaceX more in the position of being the monopoly power. Right now, SpaceX is the monopoly.
How long does it take how long will it take to get back to where they were?
I think the argument is a minimum of several months.
Oh, just months?
That doesn't seem like as big of a
several months.
setback.
At a minimum.
Yeah.
But it could be longer. And by the way, they need to also make sure that the engines work, so that it's not just.
Yeah, this was just a test.
This was just a test. So you have to get the whole thing up and running, and then make it all work. The big issue is, I think we all have to root for competition in space.
Correct.
And so you have to root to some degree, whether you want to or not, for Blue Origin to work, so that there are at least 2 of these companies that are competing in space. Otherwise, you do have a single company.
Bezos
Which, by the way,
was pretty.
Also a single point of failure to some degree too.
Yeah, and Bezos himself admitted it in his statement that he put on X.
He said it was a tough day.
It was a very rough day. But we will rebuild whatever needs rebuilding and get it back to flying. It's worth it.
What I think it will do, and I think we talked about this briefly in the interview with him, there is, or at least the plan had been, to start to take outside money for Blue Origin. Thus far, Blue Origin has been completely and utterly financed straight
by sales of Amazon.
By Jeff selling Amazon stock. What I don't know is how this impacts that plan. Meaning, does this make you more likely to try to go out and get outside money because you maybe want to actually build more? That could be one answer. But on the other end, are the investors going to be as excited as they might have been otherwise? I think these are all the questions.
Rocket science is hard stuff. SpaceX had a lot of fiery crashes in its early days, too.
Brain surgery is not easy either.
Yeah.
It's rocket science and brain surgery. We promised Dom Chu, patiently waiting. I was going to ask him a question, an honest question, but I guess maybe I'll do it at the end.
An honest question?
It's an honest question. Have you ever had 4 birdies in a row, especially to win a tournament?
I've never had 4 birdies in a row to win a tournament or anything.
Life.
I've had 3 in my life before. I've had three birdies
total.
in a row. 3 birdies in a row, right? And that's like a turkey in bowling, right? So I've done that, but I haven't had 4.
And then Jack's house this week is always exciting. Right?
It will be. I think it's one of those. I mean, it's a even before
iconic,
the technical signature event, kind of moniker, it was a signature event, right?
And people want to shake Jack's hand as a winner.
Yes.
I think they want that more than a trophy.
And they want a milkshake there at Muirfield Village as well. Anyway, all right. So let's get you through some of these movers here, because as Andrew did point out before, we're checking some of the action in those movers coming on the headlines of that NVIDIA push into PC computers and laptops. NVIDIA's new processor is going to be incorporated into that new super chip debuting this fall in that fresh line of Windows PCs from the likes of Microsoft and Dell, HP, Lenovo, and others. Those shares, as you can see, they're all moving higher in the pre-market. Meanwhile, you got shares of chip maker Intel, been a king in the PC market for ages now, down about 6.5% on that news. So keep an eye on that chip complex on NVIDIA getting into personal computers at the edge, to Andrew's point. Meanwhile, you got United Music Group shares, which are down right now by just about 1% after the company's board of directors on Friday unanimously rejected an unsolicited takeover bid from Bill Ackman's Pershing Square Capital. The board said the proposal materially undervalues the company. It said the takeover was not in the best interest of shareholders or music artists or the company, which is behind musicians like Taylor Swift and Kendrick Lamar, amongst others. Pershing Square declined comment on that. Shares are now down over 30%, you can see, over the course of the past year. And then shares of Yum Brands in focus right now are gaining just about 2.5% to 3% on reports the company's in exclusive talks to sell its Pizza Hut franchise and operation to private equity firm Long Range Capital. The deal could come together in several weeks, according to people familiar. Last year, Yum said it was reviewing strategic options for that Pizza Hut business, including a possible sale, because it struggled to keep up with Yum's other brands like Taco Bell. So keep an eye on Yum Brands on some potential deal news, Joe. I will send things back over to you, and now I'm kind of hankering for a milkshake, so I don't know what I'm doing here.
Okay. All right, thanks, Dom.
You got it.
Okay, SoftBank pledging $81 billion. This is a lot of money to build Europe's biggest AI facility in France. And CNBC's Arjun Karpal spoke to CNBC's to CEO Masa Son earlier this morning, and he joins us now with the highlights. Good morning.
Good morning to you as well, Andrew. Look, it was a huge investment here in Europe. It's the single biggest AI data center investment in the continent, as it tries to catch up with some of the big deals we've seen over in the US as well. Now, France has been touting things like low carbon, its nuclear power here, and that's enticed SoftBank to make this 75 billion euro investment here. Now, as I was speaking to SoftBank CEO Masayoshi Son, we discussed SoftBank's positioning. It's trying to be at the center of this big AI boom with its investment in companies like ARM around chips and its big $60 billion commitment to OpenAI around the models as well. And we talked about where we're at in this investment cycle right now. Masayoshi Son said that this is a 50 to 100-year journey around AI. He said this is just the beginning of AI, and he believes this is going to be 50x bigger than the dot-com boom. But I asked him, given the run-up we've seen in valuations in some of the public markets and the private markets, is he concerned about a correction? Here's what he had to say.
There's always a correction, okay? Even year 2029, there was a crash in Wall Street. That was basically because of electronics and motorization. Now, if you look at the history, electronic and motorization, 1929, it crashed, but went up and up many, many years for the next 100 years after that. So that kind of thing is going to happen. There may be some correction, but that would be a best investment opportunity time to me, you know, if there is any correction.
Masayoshi Son believes a correction is coming, but actually could be a good buying opportunity for the company as it looks to continue to expand its portfolio around AI. Look, Son is ultimately bullish, and we know he's known for some very, very bold bets over the years, some more successful than others, if you think about Alibaba and WeWork, but right now all effort is going in to companies like ARM, to OpenAI, which is a big focus right now, and investors are certainly backing the vision of Son at the moment. The stock is up over 360% over the last year as Masayoshi Son continues to try to put SoftBank right at the center of this AI story. Guys, back to you.
Okay, Arjun, thank you. Congratulations, great interview. Appreciate it.
Coming up, fun stress Tom Lee, not for nothing, who said in the darkest days, who said it's going to end the month huge, it's going to be a huge rally, and I mean, I got the Twitterati nastiness to prove that if he's the slightest bit wrong for a day, they're all over him. And once again, though, it's been borne out through the biggest months that we've seen. This is exactly what he said. He'll be joining us in just a moment. He was pretty rare what he was saying. And an infectious disease expert is going to tell us why he feels the U.S. isn't prepared for Ebola. Squawk Box returns in just a moment. us now Tom Lee, Head of Research at Fundstrat and Chief Investment Officer of Fundstrat Capital, as well as a CNBC contributor. Tom, welcome. I don't know if you heard me talking. I don't need notes to talk about you because you're on a lot, and I remember what you say. And just to sort of set the stage for what we're going to talk about, in the past you've made some calls that people should never make. Like it's going to be a good inflation number on Friday. S&P is going to be up, 8% this week. And a lot of times it was borne out. And you've got a reputation for being fearless that way. The most recent thing that you did, which came through, and it doesn't really show it that great on that chart right there, but for the year you were bullish, and we were going along quite nicely till the war, and I remember it was almost a mini Liberation Day sell-off, not quite as bad, but pretty steep, and you said it's already done, and by the end of this month, we're going to be significantly higher. And it was right in the midst of things hitting the fan. Not only did that happen, we took off in April, just like you said, and we've continued in May. So, I mean, you could take a complete victory lap. And we've got so many people that come on here that have no idea what the market's going to do near term or long term. And it just contrasting, what you do so well from time to time. You can't do it forever, though, Tom. You're going to be wrong one of these days. But you're right again this time.
Yeah, well, thank you, Joe. I know it's been a tough market for folks. I mean, I'm not surprised. We were kind of expecting 2026 to be a year where turbulence could happen and people would see head fakes. But there's still some really powerful tailwinds for America. One is, of course, the AI story. And now we're learning about the energy independence, right? America can deal with high oil because we're not going to have a shortage of it. And then there's further tailwinds coming because as AI moves downstream, it's really benefiting American businesses. I think that's why S&P earnings came in for just the first quarter $10 higher. That's $40 for the year. And if you just put a 20 multiple, that adds 800 points to the S&P. So I think there's a lot of grounding for why stocks are able to recover. So it's, but again, I think we still might have challenges between now and December. So I think everyone still needs to be vigilant, but generally bullish.
What did you say about the next 2 or 2.5 years being some of the best market activity that we've ever seen? You still feel that way? And that was not on this show. You said it somewhere else. But what is your forecast for the next 2 years, and what's it based on?
Well, I think a couple things are coming together, Joe, that are going to really support a few things that may only happen like once in our lifetime. One is I think the U.S. economic growth rate is actually starting to step up. In other words, we could grow at 4%, and for a mature, largest economy in the world to start to accelerate growth, that's pretty astounding. The second is the U.S. is one of the biggest exporters of the most important tool in the next 10, 15 years, which is AI products. And that means we are a net, essentially, exporter of a high-value product. And there's so much capital, I think, misallocated today because so much of it is held in private alternatives, but it's going to move into the public market. So I do think that, plus the demographic tailwind of millennials and Gen Z adding to the workforce, but then also beginning to inherit generational wealth, I think that is going to set up for after 2026, perhaps, over the next 2 years, some of the biggest gains of the stock market in our lifetime.
We just had a board. So you think we hit 7,700 near term, and then there's a pullback, and then after the midterms, is it coincident with the midterms, the pullback, and then we had higher afterwards? Was that correct?
Yeah, I think that's. I mean, this is our best guess. I think June markets can still build on the gains, just not at the rate that May did, and I think it is money moving downstream, so there's going to be software rallying and beneficiaries of AI. But between, let's say, June and October, we do have to digest potentially 3 major IPOs coming, and the market will try to understand Kevin Warsh's new sort of model for inflation, but I think the market always tests the new Fed. And then we have that normal seasonality around midterms. And so I think we could have a drawdown that'll feel like a bear market. And as you know, that February to April was just a 9% decline, but it felt like a crash. And so I think markets are going to really struggle if we start to have a drawdown. And then, of course, from October, I think that's when a very strong rally starts.
Andrew Winston, I was gonna say how bad you've been on crypto, but I don't know.
I was going to go to a slightly different place, and we could do that too. But I was going to ask him about Mark Cuban. I don't know if you saw Mark Cuban said that he's now dumped or sold all of his Bitcoin, given that he no longer believes it's acting as a hedge against inflation or anything else. Argues gold has proven to be a better bet, and that Bitcoin has not acted the way it should if it's supposed to be digital gold. What say you?
Well, you know, on the one hand, I think Mark is right. Crypto's been disappointing because crypto should move with, you know, equity markets, and it should be rallying with software. Software has really started to rally big, and crypto hasn't moved. So I think there are what I call, quote, rage quitting, people selling here as if something is wrong. I mean, one, I think that's what always happens at the end of crypto winter. You know, if someone asks me, is the thesis for Bitcoin or Ethereum broken? You know, it's absolutely not, because one, the more work we do, and we're hearing it from founders like Palantir, Bitcoin and Ethereum are really the future of money, because mass and compute, or compute and energy, however Elon puts it, really are what's scarce, and you're going to need to control agent systems. And as AI systems evolve, right, we're now talking about using commerce and operating websites, you need decentralized identity and verification. That's really what crypto does. And we know Wall Street wants to go towards tokenization. It's a vast improvement in efficiency of actually how money moves, and it's an innovation. Well, that only happens on Bitcoin and Ethereum and other smart contracts. So the future isn't changed, but the spotlight today is, of course, on semis, memory, starting on software. But as people focus downstream into the future, that's really, I think, when the bid comes for Bitcoin and Ethereum.
Because when you talk about stocks, it was so easy for you. You did it. $10 times 4, that's, you know, $40. Put a multiple on it, that's 800 points. Why do you even try with Bitcoin or Ethereum? What's your comparable analysis to be able to come up with anything to make predictions about Bitcoin or Ethereum? There's nothing that you can base it on, Tom, except maybe psychology or sentiment or something.
Yeah, well, actually, market sentiment plays a huge role, because it's sort of essentially risk premium. But there are two proven ways to value crypto. One, of course, is just network usage, because wallets and activity per wallet still explain, like, even now, 87% of the rise of Bitcoin. So as long as more people use it and they're transacting it, the value of Bitcoin should go up. It's a network effect. And the second is the umbrella value of gold. You know, gold when it hits 5,000, if Bitcoin had the same network value as gold, and gold is not as scarce as Bitcoin, that would put Bitcoin at around 2 million. So to me, I think there's still two ways to look at the value. And of course, for Ethereum, it's been shown for every dollar of tokenized assets, you know, tokenized dollars or others, it's created $1 value for ETH, the coin. So if you believe Wall Street's going to tokenize, Ethereum's price should go up a lot.
Okay. All right, Tom, good to have you on, and we'll check back hopefully in the next couple of weeks. Thanks.
Okay.
Thank you.
Coming up, family offices in the U.S. making a major shift, with many moving cash outside of the country. Robert Frank's going to have the details of a new survey in today's edition of Inside Wealth next. But first, before we go to that break, check out the early S&P 500 winners and losers. Welcome back to Squawk Box. Family offices making big portfolio changes, shifting money away from the U.S. And Robert Frank is here. He's got more details about it in today's edition of Inside Wealth. Good morning.
Good morning, Andrew. Good to see you. Well, global family offices are making the biggest changes to their portfolios in years, and many are moving out of the U.S. and out of the U.S. dollar. 60% plan to change their allocations. That's about twice the levels of the past 5 years. That's according to the new UBS Global Family Office report. Now, nearly half of family offices say they are overexposed to the dollar, and 2/3 expect confidence in the dollar to decline. The only region in the world that family offices plan to reduce this year is North America. Advisors saying this is not a sell America trade, but more about true global diversification.
All the other family offices around the world are now diversifying out of the dollar-denominated securities, out of the U.S. a little bit. Still over 50% invest in the U.S., but looking at different regions, currencies, and booking centers.
And the new catchphrase in family offices is jurisdictional diversification. That's spreading your money over a broader array of countries, tax regimes, and legal systems. At a time of geopolitical uncertainty, geopolitics, not surprisingly, is now the #1 worry among global family offices. That's followed by global trade and inflation. For more on how family offices are investing and how the wealthy are spending and investing their money, you can sign up for the Inside Wealth newsletter at cnbc.com/InsideWealth.
Okay. That's pretty crazy stuff. Pretty crazy stuff.
Yeah, and one thing I would say is that there's a big split. It's the overseas family offices, the non-U.S. family offices, that are mainly diversifying away from the U.S. The U.S. family offices are actually investing more in the U.S. They went from 86% in the U.S. to 88%. So there's this big divergence.
Is that the case in all areas, though, that everybody's looking more at home investing? That certainly seems like the mentality we've seen.
Definitely. Definitely, that's a big theme.
Okay. Robert, thank you.
Thank you, guys.
Thank you.
Before you go, is there a policy thought on this?
Yes.
Like how much would you need to change the policy to avoid this from happening?
I don't think this happening is a bad thing. I think family offices are getting more sophisticated. They want to be truly diversified around the world, whereas before it was like you're in the U.S. and maybe one other country. But I think where policy comes in, we saw tariffs play a role. We see government debt play a role on the dollar, and those are things that are directed related to policy.
Thanks, Robert.
Thank you, guys.
When we come back, Berkshire Hathaway is striking a deal to buy homebuilder Taylor Morrison. We'll have the details, the stock move, and some comments from Warren Buffett about that deal. All of that coming up next. Squawk Box will be right back. Squawk Box. Berkshire Hathaway is buying home builder Taylor Morrison for $72.50 a share in cash, or $6.8 billion excluding debt. That's a 24% premium to Friday's closing price. If you include debt, it's an $8.5 billion deal. You can see this morning that Taylor Morrison home shares are up substantially, $71.85. That's an increase of about 23%. It puts it just below that price that Berkshire has said that it will pay for it. That acquisition will add to the home builder to an already sizable housing portfolio at Berkshire that already includes Clayton Homes and Berkshire Hathaway Home Services, as well as a number of other companies that kind of play into home building, everything from Acme Brick to Shaw Carpeting and Flooring, Benjamin Moore Paints. I spoke to Warren Buffett about this deal, who, by the way, this deal is the first deal that Greg Abel has done as the CEO since the beginning of the year. It's the largest acquisition for Berkshire Hathaway since last fall, when they paid $10 billion for Occidental Chemical. Here's what Buffett said about Greg with this deal. He said, "Greg did this deal faster than I could have done it. He did it smoother than I could have done it, and I never talked to the CEO. He has launched." I think this is kind of their way of getting the word out that Greg is doing these deals on his own. He spoke with Warren Buffett, a board member, about it. He spoke with Sue Decker, the lead independent director, but the rest of the board wasn't notified until later. Taylor Morrison CEO Cheryl Palmer is going to be joining Squawk on the Street. That's coming up at 10 a.m. Eastern Time. That is first on CNBC. And Squawk Box will be right back.
Welcome back to Squawk Box after some good gains on Friday, which saw the averages close at new highs. We're adding to those this morning significantly. We got 30 points, 31 points on the S&P, closing in on 7,600. There's the Dow, firmly ensconced above 50,000, and the NASDAQ pitching in as well this morning. Treasuries, not a whole lot to see. Could change, obviously, this week with the big employment report coming on Friday. And then oil, all these gains that we're seeing in spite of an upward move there, 3.4% back above $90 for WTI. Squawk Box getting some guests roused up. We're going to be back in just a moment.
Wake up.
From an AI anxiety to AI opportunity, an MIT professor who also heads the AI-driven Enterprise Institute releasing rankings on where each company in the S&P 500 rates on AI. He's unveiling it right here on Squawk Box. Paul Cheek used publicly available data in 4 categories and joins us live this morning. Good morning to you. Help us understand what you learned and what the rankings are. I don't know if you want to. We could play the game, if you will, the old Letterman game, move from 10 to 1, or we could go 1 to 10.
Hey, I love a good game. Thanks for having me, Andrew. Excited to share a little bit more about what we found at the AI-driven Enterprise Institute. And what it ties back to is this simple idea that from Peter Drucker, you can't manage what you don't measure. And for quite some time, we've been unable to truly measure AI maturity because surveys and existing rankings are generally overstated. What we've said is we want to identify the behavioral basis, evidence-based from publicly available data as to how mature AI-driven enterprises are today, the S&P 500. What we found by profiling 10,563 board members and executives is that there is a huge AI literacy gap amongst boards and C-suite executives teams. What we found is that at the high level, information technology companies are at the top and materials companies trail. We're really excited based on the data, not just in looking at who's at the top of the rankings, but also who we might expect to be at the top who currently aren't.
So when you look at that, how much of this is moving around? How much of this is sort of static, do you think?
Right now, we're looking at a point in time. We've looked at the year 2025, looking at a variety of different sources. So we're tracking things that are a little bit more static, such as patent filings, focus on AI patent groups. We're looking at source documents from websites, job posts. We're looking at everything from articles, keynotes, presentations, podcasts where executives are mentioned, as well as one of the leading indicators of culture that will exist within the workforce for any of these S&P 500 companies, job posts. This is moving, and it's moving quickly, faster than we've ever seen before. You know, a lot of companies right now are looking at the return on investment of AI, but really what I believe they need to be looking at is the avoidance of loss. The fact that an organization today has a place in the S&P 500 does not necessarily guarantee that moving forward, and that's something that, you know, I work with a lot of executives at MIT on. So while our ranking today, the index that we've launched this morning and that we're already getting outreach from CEOs on, it's changing, and we're going to continue monitoring it month after month after month.
You said you're getting outrage from CEOs. What's the outrage?
Yeah, well, we're starting to see people go in, download the data, look to see, you know, where their company stacks up in the ranking amongst their peer group. One of the questions that we've heard most often is, we want to know where we are amongst our peer group. Right now, a lot of the research and data out there is on sectors specifically. Here's our sector versus another sector, but we want to empower boards and C-suite executive teams to know where they stand compared to their closest peer group. And that's why we have sector normalization as we look at the different companies in this index.
And obviously, one of the big questions we talked about earlier this morning is just the idea of jobs. You talked about looking at job postings in the context of AI. There's also the question of whether there's going to be job firings in the context of AI or just not job hiring, if you will. And yet it seems like in the past week or two, all of that whole sort of narrative has been flipped on its head. Where are you on that?
Yeah, you know, we're starting to look a little bit more at the data as it relates to layoffs, what that does in terms of financial performance, context around those layoffs. But we've looked at 161,645 job postings from the S&P 500. What we found is that only 5% of those are for AI-related roles. But my belief is that AI will, in time, create more jobs than perhaps it takes from the economy. So we'll see how it plays out. Again, something that we're going to be tracking extremely closely. But if we think about the definition of an organization around a group of people, I believe it'll be a group of nodes moving forward. These organizations need chief node officers.
You also talked about this idea of it's not about necessarily growth or productivity unto itself, but about avoiding loss. Can you explain that?
Yeah, absolutely. You know, I think a lot about the obsolescence for an organization. Right now, I hear a lot of executives talking about, you know, people who use AI will replace people who don't in the workforce. And while I think it's important that people develop AI skills and literacy, what I truly believe is that, you know, there is a greater risk, and that is of an organization using AI replacing one that does not in the marketplace moving forward.
So this is just about trying to avoid completely cannibalizing your own business, but maybe you have to cannibalize part of your business in the process. Paul, I want to thank you. There's an article we should mention up on CNBC.com right now about all of this and more. Thanks.
When we come back, containing the Ebola threat, a top infectious disease expert says our nation isn't prepared amid federal funding cuts and job vacancies at health agencies. Dr. Michael Osterholm, who is the director of the University of Minnesota's Center for Infectious Disease Research and Policy, will join us with his warning next. Welcome back, everybody. Our next guest argues that budget cuts and vacant job posts have left us unprepared for the latest Ebola threat. Dr. Michael Osterholm is the director of the University of Minnesota Center for Infectious Disease Research and Policy. And doctor, thank you for joining us this morning.
Thank you.
Why don't you lay out where you think we are in terms of Ebola and getting our arms around this virus at this point?
Well, first of all, just remember that Ebola is a virus that's transmitted primarily through body fluid contact. So unlike the hantavirus situation we just went through, where we were worried about respiratory transmission, in this case, that's not the situation. However, that would make it seem like it's easier to control, and in many ways it is. However, it is such a massive issue in Central Africa with the closeness of people, the rituals requiring touching the bodies of they're dead before they're buried, has put this really into a very rapid transmission situation. As you may recall, we actually had a very serious Ebola outbreak back in 2014, 2015 in Western Africa with over almost 30,000 cases. I think this has the ability to far outstrip that. It's a situation where with what we have on the ground right now in Central Africa, among the countries where we're seeing this, it's just inadequate to respond in any meaningful way to slow things down.
This is a different strain than the 2014 strain. That was the Zaire strain. This one, we don't have any real medicine to kind of go after with, to impact this strain in particular.
Yes, exactly. We didn't really have any medicine in 2014 either, and we don't have it now. However, what we did finally get in 2014 was a vaccine. We don't have a vaccine for this particular strain, Bundibugyo, which is the one that we're dealing with. And our hope, though, is that in the days ahead, we're going to find that by vaccinating with that other vaccine, it still may provide some protection, even if not against getting infected, at least dying from it. But one other challenge we have is this virus does not show up on usual testing. It takes a special kind of test to do this, and they're in very short supply. So imagine you have somebody coming into your clinic with a severe fever, and your first question is this malaria or is this in fact Ebola? And so this has made it very complicated. The other thing that's going to make it complicated is, for example, the United States supporting this effort. In the previous outbreaks, we have sent people on the ground where they have provided incredible support for controlling the outbreak. Right now, the message is to Americans, if you come to Africa and you're willing to basically roll up your sleeves in the sense of getting involved with this, but you should get exposed to the virus through an accidental needle stick, or you should come down with Ebola, where you're not welcome back in our country. To me, this is absolutely a very impossible situation to try to convince people to go and help out. And I would just add that to me also, as a public health practitioner, I always thought that we never left our soldiers on the battlefield. And that's exactly what's happening with this government right now.
The Trump administration's plan was to keep American Ebola patients in Africa. A Kenyan court ruled against that. What is our backup plan in light of that? I know we have one doctor who's being treated in Europe.
We don't know. At this point, it's really up in the air. If you look at the U.S. plan on responding to the Ebola, in the previous two administrations, and in fact in Trump 1, there was actually a very detailed plan that had been written, that had been prepared to how we would respond. At that time, remember, we had the USAID and we had PEPFAR, both organizations that while they were dealing with a number of different infectious diseases, particularly HIV with PEPFAR, the resources they brought to bear immediately in Africa was remarkable. We don't have that anymore. If you look at the CDC and the expertise there, they've pretty much routed out the expertise with, in many cases, up to a third of the employees in given areas are no longer there. So we really have been left hamstrung as a country to help respond. And this is not just an altruistic issue. This is about for all of us. If we start to see Ebola spread because of contact with people in Africa who then are leaving the countries, going elsewhere, it's just going to complicate the issues even more in terms of how do we end up stopping this outbreak.
The U.S. plan, part of it to this point, is to prevent travelers who have been in those nations, who could have come in contact with this, from arriving in the United States. That's not enough, I take it you believe.
That's not even an issue in a sense. We know that with Ebola, one does not even become infectious until you're quite severely ill. So unlike
21
some
days, I think,
infectious,
is the period of incubation.
yeah, that's a period of incubation, but if once I become sick, once I develop a fever, you're not infectious for literally several more days after that. So by following these individuals and with the first onset of a fever, getting them into the hospital and getting them into a controlled environment where they won't transmit is simple to do. In the 2014 outbreak, the one case where we had transmission in the United States was an individual who was from Africa who came to Dallas, Texas to visit family, and at that point became infected or became ill and was hospitalized and transmitted to the nurses in the hospital, but to no one in the family that he had lived in a crowded apartment with for the previous days because he wasn't yet ill or only mildly ill. And so we don't have to have people quarantined in locked isolation areas. We can actually monitor their health and very simply, once if they develop a fever, get them into medical care. So this isn't even a scary situation that some are portraying it as, that, you know, I have Ebola or I was exposed to Ebola, I'm on a plane, I now transmit to a lot of different people. That's just simply not the case.
So what would you most like to see happen right now? What do you think needs to happen to address the situation?
Well, we are in a situation where the WHO has been greatly reduced in its ability to respond because, again, the United States pulling out, our dues are no longer there available for them. We lack human resources. I think we just are going to have to find ourselves really taking this on with inadequate tools. And the best we can do is try to provide coordination. I think the United States surely should step up even more. We need to make sure that we can get people to go to Africa to help work on this situation by guaranteeing them if they do get infected or if they're exposed, that we'll take care of them. We won't leave them on the battlefield. And I think just help people understand that right now in this time, we're going to see a lot of additional cases.
Dr. Osterholm, thank you.
Thank you.
It is 8 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin. And among today's top stories, NVIDIA is jumping into the PC business. The company says that it will make chips that serve as the main processor for personal computers. Those processors will debut this fall in a new line of Windows PCs from Microsoft, Dell, HP, and several other manufacturers. NVIDIA shares up by about 2.2%. Japan's SoftBank is investing more than $80 billion into AI infrastructure in France. In an exclusive interview, the CEO, Masa-san, told CNBC that President Macron pitched him on the project, saying France has the power generation capacity, and asked SoftBank to build the data center. SoftBank shares up by 14%. And Berkshire Hathaway is buying home builder Taylor Morrison Home for $72.50 a share in cash, or $6.8 billion excluding debt. That's a 24% premium to Friday's closing price. Taylor Morrison, CEO, will be on Squawk on the Street. That is coming up at 10 a.m. Eastern Time.
And we've got some breaking news to bring you right now. Sources telling me that Barry Diller's People, formerly IAC, is preparing a $18 billion bid to buy MGM, the casino giant. We're going to watch and see where this stock goes. The offer, what I'm being told, is at $48.30 a share. The stock was trading on Friday, I believe, at about $43 a share. It represents about a 10% premium over the Friday close, but represents about a 30% premium over the last 90 days. Worth noting that Barry Diller's People, which of course was just renamed, had been IAC for many, many years, owns about 26% of MGM already. The company has 2 board seats, one of which Barry is on himself. So he is on the board of MGM, which is going to, of course, take him out of the voting process for this transaction. And we're going to, I'm told that this bid could come today. It's not finalized just yet, but this stock now moving on the back of that news up at 47.97. The question, of course, is whether this bid could put the company itself into play and whether other suitors could emerge to try to buy MGM. Of course, one of the big sticking points is that Barry Diller's people owns 26%, not just of the company, but of the voting shares of the company. So,
and if anybody else steps in to make a bid, you're not going to get
right.
26% right off the
So
bat.
his ability to effectively have a blocking position against any other bid makes this more complicated if, in fact, other bidders were to emerge. Now, it's worth noting, if you look at MGM's stock, that it's actually come back recently. It had fallen for some time. There, of course, is the competition that has been coming, by the way, in the form of Kalshi and Polymarket and the like. Part of Barry Diller's original, I think, thoughts on MGM were Vegas, but also the digital side of this. Also, of course, there's Macau and the plans to build out in Japan. So some big news. A lot of folks, I think, had thought that IAC was effectively shedding assets, if you will, to sort of focus on people, and I believe the people's still a huge part of this, but MGM is their other major stake, and this would grow that stake in a very, very big way. So we're gonna watch to see what happens there.
You say Barry and MGM, and I immediately think of MGM Studios as the place that he would be doing this. They have a huge number of Las Vegas Strip properties, the Bellagio, Aria, the Cosmopolitan, MGM Grand.
Is there some debt in this too?
Yeah, so the $18 billion figure that I just mentioned, it would include debt. On an equity basis, if you just math out the $48 that we're talking about, is about $12 billion. So it's basically
market cap on Friday was 11.1.
It's basically about $12 billion plus the assumption of $6 billion of debt. I am being told that this would be financed entirely in cash, so this is not a cash and stock deal. That people would be. It's funny to be describing a deal and saying people are going to be buying MGM.
Yeah.
So I keep saying Barry Diller is buying MGM. Barry Diller's people is seeking to buy MGM. Of course, we're going to watch the wires to see whether that proposal crosses sometime today, and of course, what kind of reaction we get from the board of MGM Casinos. Resorts, I should say.
Yeah. We talk oil, price of oil, crude moving higher. Joining us with more on the energy markets, Rebecca Babin, CIBC Private Wealth Senior Energy Trader and Managing Director. It's good to have you on this morning. Good morning.
Hey, how's it going, Joe?
It's going well, thanks. When we talk about oil, there's so many sort of new things to consider this time around. We are self-sufficient in this country right now, and people have a hard time, figuring out if we got all this oil, why do we have to price it where the rest of the world prices it? Then there's all this inventory that people had, and we don't know when that's going to run out. People are saying the clock is ticking and we're getting close. And then there's all this floating oil, like an armada of floating oil in the Strait, and we don't know how quickly, that could solve this problem if the Strait were to reopen. With all that in mind, what do you think is going to happen over the next 3 months, Rebecca?
So you made all the great points of why this is so hard to price and hard to model. I would say two things. The key point you're addressing is the clock is ticking. So we talked about all the buffers that we had coming into this. We talk about how energy independent the U.S. is to a certain extent, but we're eroding through all those buffers. So as time goes on, we're just not going to be able to keep the price contained as inventories deplete. And when that happens has been a bit of a moving target. And I will say this, Joe, the market and analysts have called it a bit wrong, including myself here, thinking that if we got to here in June and we didn't have a reopening, we'd be at 120, 130. What we've really seen is some very significant demand rationing and destocking out of Asia, particularly in China. So that's really been the next lever that has been pulled. And it hasn't been in road fuels. If you looked at data that came out last week, gasoline demand in the U.S., even with gas prices well above 4, was strong, but it's been in the petrochemical sector. So it's less apparent to the numbers that analysts currently track. So when we think about when this comes to fruition, I think we're really looking at, if we do not see 50% of the flows through Hormuz resumed by the end of June, we're in a very different scenario. At that point, more of the SPR that's been released, that's 400 million barrels that was released by the SPRs globally, will be very, very much eroded through, and I think prices will be meaningfully higher. Now, the market is very much looking forward to that, saying, we're on a diplomatic path, this is coming, it's going to be rocky. Now, it's really hard when you look at the physical market to have that confidence, because we're going to see those inventory draws over the next several weeks. So it's a key factor. But I think the last thing I'd say is, don't necessarily look at how many boats are coming out of Hormuz. Okay, there was 150 million barrels trapped behind there. We've lost 1 billion barrels of supply. Think about who's coming back in to refill, because that's the sustainable supply we need in the market to make this market recalibrate.
Has anything happened in Iran where it had nowhere to put the oil and they had to close some of it down, which might be closed permanently? Where did we heard that was going to happen? Has it happened?
Great question. Yeah, the shut-in levels in Iran, from what the data that we're seeing, they're about 80% full on storage. So they are not having to fully shut in their production. They still have some storage available. But again, that will deplete and they will have to shut in. I think the thing the market thought there was, oh, they're going to shut in and all of a sudden their fields are going to be ruined and they're not going to be able to come back up. You know, they survived COVID. They survived Trump's initial sanctions, which took their production really low. They are decently adept at figuring out how to maintain their oil fields in these scenarios. So I wouldn't be counting the clock on that as much as I'm counting the clock on when flows start to come through and where inventory levels are.
And so this is July we're looking at. What to get a barrel of oil in certain parts of the world today, what's the most that people are paying right now?
So the most people are playing, sometimes we look at the physical market that's happening in kind of Brent dated futures, and that's around, you know, $3 or $4 higher than where Brent is trading now, 94, 95. It's nothing like the premiums we saw when this conflict erupted. And this is another key factor. We saw hoarding. Everyone reached out and bought everything they could get their hands on. Physical market players are now saying, I don't want to be the last guy who bought, you know, $110 crude. I'm going to destock into this because I see a diplomatic path. So the physical market is counting their chickens before they hatch or counting their barrels before they ship, just like the paper market is at this point.
You mentioned June and whether it gets back to 50%. I don't know, just the way, the writing on the wall with what we hear President Trump saying and sort of the real, he seems dead set on getting something done to at least reopen the strait. Don't you think that it's likely that it's only June 1st, if I got that right? It's my father's birthday. But don't you think it'll happen this month? You don't know any more than anybody else, I guess, but I just get the feeling that he's going to try really hard to get that strait reopened. Just is it possible to do it?
Sure, but keep in mind, he's not the only player here. And, you know, we're in a 3-to-tango situation here. We need Iran to make the concessions that make it work. We need Israel involved, and we need Trump. So I think if it were just Trump, wanting to get this through, I think that might look different. But we have more players involved, and we have a scenario where everyone's testing each other's leverage, and it's playing out over a longer time horizon. Wanting it really bad and getting it to the tape is very different.
Okay, great. All right, Rebecca Bevan, thank you.
Thank you.
All right. When we come back, the Dow, the S&P 500, the NASDAQ, the Russell 2000, all at record highs. But our next guest sees some cracks in the foundation of this current rally. Wait until you hear what he has to say. Rockefeller International Chairman Ruchir Sharma will join us to explain his case next. Squawk Box will be right back. Welcome back, everybody. Our next guest sees cracks in the foundation of the current market highs. We want to bring in Ruchir Sharma. He is Rockefeller International Chairman and Breakout Capital founder and CIO. His latest piece for the Financial Times is titled "The Truth About the American Profit Machine." And Ruchir, this is a really interesting way to look at this, because people keep saying this time is different. This is different than the dot-com bubble because all of these companies make money. It's not the sock puppets and Webvan and all of these things that we were looking at before, but you're looking at it a little differently. Explain.
Yeah, I think there are three factors here, if I can sort of get into it briefly. One is the fact that I explained that this is a very mathematical equation, but the mirror image of running a very large fiscal deficit is that your corporate savings tend to be very high. So the big difference between the late 90s and now is that we're running a fiscal deficit of 6% of GDP. And that is artificially boosting corporate profits. It's like an income transfer happening between the public and the private sector. The second point that I make here is that history is somewhat wrongly remembered, that now we like to poo-poo the entire dot-com boom. So I looked at what were the earnings actually at that point in time. And then you figure out that the earnings of the tech sector and the earnings now, at least the earnings growth, was quite similar. It just is that because we had the crash later, that everyone remembers that, with all the negative connotations, but actually the earnings growth of the tech sector in that 5-year stretch of the boom was 20% as well.
Cisco and Lucent and all of those
Exactly.
companies, they were actually making a lot of money because the investments were being made.
Yes, and the fact is that their valuations got much higher, but just in terms of earnings, that was there. And the third very important factor, which I think is a big difference in this era, is that back then there was hardly any private investment going on. That what you saw is what you got, which was it was all happening in the public markets. You're getting massive amount of IPOs because that was the only way of raising money. The private markets barely existed. Now a lot of the funding happens in the private markets, and that's where a lot of the loss-making companies first start. And
Like
you get to see them.
OpenAI and Anthropic and SpaceX.
Yeah. So back then, you couldn't sustain such high rounds of funding if you were just in the private markets. Now you can do that and come to the public markets much later. So you combine these three things and you figure out, what, the profit picture today, yes, of course, it says a lot about the American dynamism. It says a lot about how America is doing much better than the rest of the world and the profits remain the envy of the world. But actually, if you look deeper, these three factors are somewhat misrepresenting what the true picture of American profitability and American profit growth currently is.
And I guess that you don't see it ending well. I guess my question would be when?
There's one factor which has ended every single bull market or every single AI bubble type scenario that we've seen, which is higher interest rates. And here, the importance of higher bond yields becomes even more important, right? Because every single bubble that I've looked at for the last 300 years has ended with one factor, which is you end up getting higher interest rates or some liquidity event which takes place. This time my point is that that's likely to come from at some point in time when bond yields become unhinged. And we've seen that the market doesn't like bond yields getting anywhere close to 5% on the 10-year. So I think that that's when you begin to see this entire thing get into reverse, because the government is by any chance forced to tighten their belt by running lower deficits. Corporate profits will come down because they're being artificially funded today, I say, by this very expansionary government deficit that we're running.
Yeah, I was going to say, we look at things in the past for why you get business models that no longer work. One would be you're used to 0% financing. That disappears and that breaks things. If you have the government unable to spend to the same level, I guess you're saying that would soak up a lot of the capital and it would go there. If you look at the PE ratios, though, on some of the leaders of this, they're not out of whack, particularly NVIDIA. You look at it, and I think it's forward PE ratio of 23 times, but the PE ratio even at current earnings is 32 times. That's not insane.
Yes.
That's really low, actually, when you consider how fast the growth has been.
Yeah. I guess because we keep comparing this to 99-2000, right?
Yeah, so where are we in that comparison?
Yeah, so we are nowhere near 99-2000 as far as the valuations are concerned. But the only caveat I have today is that the earnings could also be in a bit of a bubble. And that's because the earnings are being artificially inflated, as I said, because of these three factors, including the government deficit. Back in the late 90s, the government barely ran a deficit. right? So, but now, in the middle of a full expansion, we're running a 6% of GDP budget deficit. Just that the entire world is very excited by the AI story in America, so they're willing to fund this massive deficit, and partly because China is so weak that the capital keeps coming here. But if something were to disrupt that flow of capital coming into America, or because, let's say, some concerns were rising that the budget deficit just keeps going up, that could disrupt this. So I think that I agree that this is not yet like 99-2000 as far as the valuations are concerned, but the earnings growth, it's not that different from what we saw in 99-2000, and the fact that earnings are, unlike back then, are being artificially inflated because of the massive government deficit, and also that if you look at the total earnings, not just the S&P 500, you include the private companies as well, you get a bit of a different picture. So I think that's the point I try to make in the piece today.
I mean, I guess the good news is that some of those companies are about to go public, like a SpaceX.
Yeah, but like we'll then see as to how much the public markets can absorb, but the valuation picture will change then for the overall market as well, because the profits of those companies is nowhere near as high as the established companies today. So I think you will see a change in that.
How quickly do you think we're going to see profits out of those companies?
Well, I think that, so far they're surprising on the upside, and that's what keeps the momentum going. I mean, Anthropic, we've seen that how quickly that they've gone, but we're seeing some rotation out there.
But do you think SpaceX is going to be a profitable company anytime soon?
I don't think so. I mean, there's nothing which suggests that it's going to be profitable anytime soon. But as you know, Andrew, that you've looked at this as well, which is the fact that there is no science to know when does a bubble end or when does a mania end, right? But the only consistent factor in 300 years is when you end up getting higher interest rates. So it comes back down to that until you get that, this momentum keeps going.
So what do you tell people to do? Stop putting more money, new money into the market? Do you tell them to sell and run for the hills? Because if this goes on for a while, even if you're right, they could get burned by the idea that prices jump a lot more before they come back down.
Yes, so true. And I think, therefore, the smart traders who come on your show, including some of the big hedge fund guys, they're all saying that currently stay invested, because for the next year or two, they don't see the prospect of this ending. So that's one way of doing it, that you stay invested through this, knowing that these are the flaws. The second thing which you do, which is what I've been saying, is that around the world today, there are some very cheap quality companies, which is the fact that you have companies today which have been ignored. So at one end, you have all these companies which are getting pushed up a lot because of the AI boom. On the other hand, you've got companies which are being disrupted, the software companies and stuff. You can stay away from both because you don't know how much the disruption goes, because AI is for real. On the other hand, you could end up buying all these cheap companies around the world which are just getting ignored just now, just because you're in the midst of the entire concentration happening in this cohort of stocks. So that's one sort of way that often buy the stuff which is being ignored. As they say, the opposite of love is not hate, it's indifference. So don't buy the love or the hate, you buy the indifference. So I think that's one way of doing it. But yeah, I think that we have to be open-minded to this, that this momentum could keep running. And as some of the smart guys have said on your show, this could still be October 99 rather than March 2000, and the NASDAQ doubled in that period.
Love and hate. Fine line. So love and indifference, the opposite of love is not hate, because it's love and hate are the same thing. Right?
Exactly.
Okay.
Same emotion, but indifference is the worst.
The worst.
Yeah.
The worst.
Yes, thank you very much for coming.
Good to see you.
Thanks.
Keep that in mind.
Coming up, the NBA Finals. They are set after the Spurs closed out the Thunder over the weekend, while Knicks fever has now gripped the city as the team looks to end a 53-year-old championship drought. We are going to get on the business end of the court with Boardroom co-founder and CEO Rich Kleiman. We're going to break it all down. He just walked into the studio as we speak. Rich Kleiman, who's wearing some cool new Travis sneakers. Okay, this is going to be, we got a lot to talk about. Squawk Box coming right back after this. Welcome back to Squawk. The San Antonio Spurs beating the Oklahoma City Thunder in Game 7 of the Western Conference Finals. On Saturday, the Spurs now set to host Game 1 of the NBA Finals. It's happening on Wednesday against the New York Knicks. Joining us right now is Boardroom co-founder and CEO Rich Kleiman, and a long-suffering Knick follower who's not that suffering this year, finally.
No suffering.
No
very
suffering.
Exciting, very exciting time.
So what do you think is going to happen here?
I mean, I think that leading into the conference finals, there was this feeling that whoever came out of the West was guaranteed to win the championship. I completely disagree. I mean, I think the Knicks are playing the most connected basketball right now. I think something that goes unsaid is how much they all trust each other, and you can see it on the court. I hate how long this break is.
That's
but
what I was going to ask. Is
right.
it better that they haven't gotten beaten up, or is it the break so long that they get caught?
Listen, the Spurs are a young team, so getting 4 or 5 days from the end of that series, they're at home. I don't think it becomes
Sunday,
a real...
Monday, Tuesday, Wednesday, 4 days.
Yeah, I don't think it's a real disadvantage, but I think when you're as hot as the Knicks have been, and obviously Mike Brown, when he was an assistant with the Warriors, understands the preparation needed for an NBA Finals. I'm sure they've practiced in game mode, and they're staying fresh, and they're just a connected team right now.
Okay, but Kalshi doesn't agree with you right now. So I don't know if you believe the numbers, but right now you look at it, the Knicks, they're saying, at least the marketplace, if you think the marketplace has spoken, don't believe it.
Yeah, well, because, you know, New Yorkers obviously see things the way we see them. I'm sure the odds are different than they would have been 2 weeks ago, but I would imagine that the majority of the country is still seeing the Spurs and Wemby as the better team. They won 62 games, and they just beat the Oklahoma City Thunder, who no one thought would be knocked out.
If the Knicks win,
yes,
does it fundamentally change the economics of the Dolan family empire? Or is it almost irrelevant?
Well, I don't know if it's irrelevant. I don't know if there's like a direct monetary impact day one. I would imagine having home games, obviously the prices are insane, but having more home games and having the ability to monetize this run. But in general, I mean, just this entire resurgence of the Knicks, I think, has done so much for the economic profile of the Garden MSG. I mean, think about Dolan and just how much negativity he got for so long.
So long.
The guy's crushing it with the Sphere.
Right.
And the Knicks, who people thought would never win under his ownership, have had this incredible run over the last few years.
Okay, so do you give him credit, or do you say this happened despite him? I mean, there were people...
You have to give him credit. How can you not give him credit? Listen, you can't knock him when the Knicks have been down for so long and then not acknowledge the fact that he is the owner of this team. And the Knicks have built this, and he put people in place in Leon Rose and West that were not a guaranteed selection to the common NBA fan. And they've made changes along the way, and he supported the leadership in making those changes. So you have to give him credit for sure. And the environment in the Garden is like nothing that anyone has experienced in sports.
Ratings.
Yes.
Going to be huge.
I think ratings will be huge. You know, it's funny because when I was younger, a lot of times I always imagined that when the Knicks were in the finals, that the whole world would be watching. But the Rockets series, I think, that they had in '94 is pretty low rated. I would imagine similar for the Spurs, because New Yorkers think the whole world revolves around us. And honestly, it does, but that's not true for everyone. I think, well, just so I say, I think the ratings in this series, because of the story around the Knicks, because of Wemby, I think the ratings, and just the overall demand on these events right now, I think these finals could be the highest rated, or one of the more highest rated in a long time.
And do you think it changes the ratings for the NBA more broadly? Because one of the big questions has been whether the ratings can be maintained during the regular season.
Well,
right? Playoffs, hot.
Well, Adam just made an amazing move. I don't know if you guys saw what he changed to the tanking problem of last year. And to me, that instantly changes
bottom three teams.
The bottom three teams, yes. And that's all you need to do. I thought that was well put together, because instead of making some completely drastic overhaul, that simple change will change the dynamics right away. I mean, there's players that sit out that are injured but potentially could have come back, that I think the team and themselves will feel the need to come back earlier. So that competitive change, the in-season cup, and just the momentum of this finals, and again, this demand on sports, I think the NBA is actually in the best place they've been in.
Talking about being the best place they've ever been in, can we talk about two things happening in July? One is the World Cup.
Yes.
But the other is the best that it's ever been, which is this Game Plan Conference, which
Thank
we
you.
put
That's why I'm
together
here. Yes,
4
let's
years
talk about
ago.
it.
But this lineup this year, which is happening now in concert with Fanatics at the Fanatics Fest, is unbelievable. There he is, the GOAT. Can we call him the GOAT?
Yeah.
Let's just call him the GOAT, LeBron James. No, I know, but people, that people have the debate all the time about who is the GOAT. I'm super excited about this.
I think there's 5 GOATs on that.
There's
screen.
a lot of GOATs on that.
LeBron James, Jimmy Pitaro, Michael Rubin, the maestro of that whole week, Adam Silver, Lindsey Vonn, and there are more coming.
And there are more. Let's tease that, because there are. I know it's a secret, but we've got some big secrets coming.
We have some big secrets coming. I think Joe's not paying attention, but if Joe was, he would be like, I need a ticket to this conference.
Another interview coming up. I'm listening. I'm listening.
This is.
How can we be on the next interview? I'm right here.
This is the hot. This is.
Because I have to. I can't be unprepared.
Right.
Yeah.
This is honestly going to be the hottest event. I mean, I don't want to oversell, but I think given what's going on here.
First of all, think about what's happening in June and July, period, in New York, right? We have the finals right now. You have the U.S. Open that will be out in Long Island.
Yep.
Then you have the World Cup. You have Fanatics Fest, which has become this like world event of like stopping the world of sports in the middle of the summer. You're going to have the ESPYs here. You're going to have Game Plan here. The Baseball All-Star Game is that week. The Yankees play the Dodgers right after Baseball All-Star Game. It's an incredible time. It's becoming the epicenter and convergence of all sport. And I just got back from the Champions League in Budapest.
I saw that.
I have to shout out PSG in this incredible back-to-back victory, but it was probably one of the most epic experiences of my life. Yeah, just incredible.
Okay.
And that time in New York will be pretty special. And if the Knicks win the championship, into that, it's going to be hard to explain.
Okay, well, we got an epic experience coming up at Game Plan. Want to make sure you all go to cnbcevents.com/Game Plan. You can request an invitation to this year's event. Rich, want to thank you.
Thank you, guys.
It's going to be exciting.
Thank you, Joe.
Andrew's
it's been great talking to you.
Yeah, Andrew, you're going to have to do all the new compounds being introduced at the American Society of Oncology conference, which is coming. That's what you
have next?
Yeah.
So you want me to stay on?
I want you to stay on. I just want you to cut me some slack for having to try to figure out.
I cut you some slack. That's way more heavy than my Game Plan conference.
And your Travis sneakers, which I'm trying to
We didn't
figure
talk
out,
about those. Get a camera on these new Travis sneakers.
All they want to talk about is your sneakers, man.
There it is.
Wow.
Right there.
Wow, I don't like that crease, though.
Yeah, you're creasing them.
I should have been sitting differently.
Rich, this pancreatic thing is, I mean, it's deep. Have you been reading about it? It's our first time ever for this RAS pathway that they have something bind to it. Double the survival for pancreatic. Impossible to treat pancreatic.
That's best news of the day, without question. You're right, Joe. I appreciate the fact.
You called me out because I'm okay.
Well, now I take it back and I apologize.
No, it's okay. Coming up, the latest. You want to read it for me?
Yeah, the latest breakthroughs in cancer treatments. Details after the break.
It's known as ASCO, the American Society of Clinical Oncology, holding its annual conference. We talk about it every year. Join us now on the latest cancer treatment announcements is Jason Gerbery, B of A Securities, Senior Large Cap Pharma Analyst. Jason, thanks for joining us. I'm looking at a list of companies that you cover. I mean, you cover almost 20 companies or more. How many companies do you cover?
Close to 30, right? But we cover the large cap pharmas, and the large cap pharma companies generally tend to have a bigger presence at ASCO.
At ASCO, how many of your, and you've got a lot of buys, you've got a couple of underperformers, I guess that's sell, some neutrals. How many of these ratings could change based on the data that's going to be presented at ASCO? And I guess what I'm leading to is, give me the top 5 things you want to hear about that are that are research is being conducted right now that could be really blockbuster and actually change a rating for you.
Sure. So look, ASCO is a really important medical meeting in the biopharma space. Oncology is the biggest revenue generating category, and all the large cap pharma play in the space. And so ASCO is really where you get the largest download of new clinical data that could change clinical practice, right? And so, for us, I'd say that some of the highlights at the medical meeting were data around a biotech company, Summit Therapeutics, that had data on a new drug that has the potential to be a foundational medicine, the PD-1 VEGF drug category. And that's important because pretty much all the U.S. large cap companies are going after that mechanism as really the kind of drug that has the potential to be a drug like Keytruda, right? That has potential utility across 30, 40 different tumors, so broad utility. And I would say that the multiple myeloma space is ultimately pretty active. There was some interesting data for J&J's multiple myeloma portfolio at the medical meeting. In terms of rating changes, I would say that a lot of the updates are more incremental, not going to drive rating changes. We've already absorbed, I would argue, the majority of the important clinical data flow. I think the most important thing for us, maybe at this point, going into tonight, Merck is hosting an investor meeting, and in the lieu of some competitor data, how are they going to defend the Keytruda franchise? Keytruda is a $30 billion drug, a huge drug coming off patent towards the end of the decade. We think that they have the assets in-house coupled with some recent M&A deals to replace Keytruda, but the competitive bar certainly got higher when we mentioned the recent data from Summit Therapeutics in frontline lung cancer.
Multiple myeloma, we talk about that constantly. What is the current state? I thought it was managed somewhat already by certain drugs. What is the end in sight for multiple myeloma? What's the holy grail at this point?
Yeah, or currently you're either getting a transplant or you're getting a quadruplet regimen in the frontline setting. Patients who progress are now eligible to get cell therapy. That's a one and done treatment that's highly effective, that gives some patients the chance at potentially a cure. Sorry, what's that?
Yeah, a cure instead of just managing the disease. Right?
Yeah, and that's attractive as a one and done therapy. Now, J&J had data for what's called its BCMA bispecific, which showed efficacy comparable to CAR-Ts, but you have to give that monthly. And so that may hold appeal for community oncologists who manage 80% of these patients. And so those are probably some of the more interesting data that emerged out of the meeting. I think it's going to be a real competitive slog. But the good news for J&J is they basically have an option for every line of therapy, really, for the first 3 lines of therapy. So I think they're somewhat agnostic to what therapy you get as long as you're getting a J&J therapy. And so when you look at J&J, I think over the last 6 to 9 months, a lot of the strength in the stock has been predicated on some of the favorable updates around its multiple myeloma franchise.
Jason, just off topic, I mentioned the pancreatic cancer drug, and I decided to try to do some quick background a couple of days ago on the mechanism, and I kind of opened a can of worms. It's pretty complicated. I guess my question would be, is there reason to think that the mechanism used to make a dent in pancreatic cancer, is it conserved through a lot of different solid tumors? Is it something that actually might be really positive as far as developments go for a lot of different tumors, or not?
Sure. So Revolution Medicine is not a company that we cover, but basically it's a precision oncology strategy, right? So it's intended for patients with certain types of cancer that have a certain expression profile, right? And so pancreatic cancer patients with that RAS mutation have and meet that profile, right? And so pancreatic, lung cancer, these are some of the settings where this could have potential utility.
Right. Because there has been nothing at this point, and it when you hear that it doubles survival, but it doesn't sound like a long time, but that's showing some type of efficacy, which heretofore you couldn't really get that.
Yeah, it's a major advancement. Actually, it was presented yesterday at the plenary session at ASCO, and it was the only presentation that got a standing ovation. As you mentioned, right, there's a dearth of innovation in pancreatic cancer, and the good news for patients is drugs that show this sort of efficacy in the second-line setting tend to show an even more improved effect when you get into earlier line patients, so frontline patients. And so I think that's the hope here, is that that treatment benefit could be even more profound in earlier line patients as well.
So you can get a standing ovation at ASCO. I was the only one. That's interesting. All right. Thanks, Jason. Appreciate it.
Appreciate it. Thanks.
Oh, okay.
Okay, recapping our scoop from the top of the hour, Barry Diller's People Inc. preparing to bid $48.30 per share in cash for the 73.9% of MGM Resorts that doesn't already own. That values the casino giant at more than $18 billion, including debt. Shares of MGM already trading at $49.63, so above the price of what we understand is the bid that is coming from Diller's People. We're going to keep our eyes on this stock. It's a fascinating move to see what happens with People and then ultimately what happens with MGM.
Your point before was that this could kick off some sort of a bidding war, but that Barry Diller, through People, has 26% of the voting.
26.1% of the voting.
Could turn away other suitors.
Right.
However, where the market is right now maybe suggests that people in the markets suspect he would have to raise his bid.
I think by default,
10%.
I think by default, there's going to be some kind of negotiation that takes place. You're looking at a 10% premium today. You're looking at a 30% premium over the last 90 days, but of course the stock has run up recently. I don't think on the back of rumors about this, really actually on the back, though, I think actually of some success at MGM in recent months, and a sense that it's that Vegas is back and everything else. So we're going to, we'll see, and hopefully talk to some analysts and also see what Barry Diller and MGM's board ultimately says about it. But they are going to have to ask for more. So this is likely just the beginning. Coming up, feeding the AI boom, just one of the topics we're going to cover with Chris Kelly, former Chief Privacy Officer and General Counsel at Facebook. And then later, David Faber will be at the Stargate Data Center in Michigan today. You don't want to miss his conversations with Oracle CEO and OpenAI Chief Sam Altman. A big interview coming up in just a little bit. Squawk Box coming right back. It's day one of New York City Tech Week. Joining us for the latest on all things tech and AI, Chris Kelly is founder of Kelly Investments, former chief privacy officer, general counsel at Facebook, and co-owner of the Sacramento Kings.
Thanks so much for having me.
Who do you think is going to win the finals?
You know, I think it's going to be a hard-fought battle.
Are you making a bet on Kalshi right now?
I am not making any bets. I do not make any sports bets.
You do not?
I do not.
Even outside of basketball?
Even outside of basketball.
Allowed to, I believe.
I am allowed to, but I do not. I watch the prediction markets pretty carefully. I think that there's a lot of interesting things going on. I mean, look, I think the Spurs have incredible young talent. I think the Knicks are on a hot streak right now. I think it's going to be a great series.
Let's talk about the state of the sort of mythos preview and what you think that portends for cyber security. Where do you think we really are at this point? We're now about a month and a half, 2 months in to the process.
And some sort of leaks at the margins, too, of the real power outside the containment zone that they're trying to put it in. And I think we'll see more of that. And I think that we'll see, an upward improvement in cybersecurity because of it over time.
Okay.
We can also deploy...
So you're not worried?
I wouldn't say I'm not worried. I wouldn't say the sky is falling, but I also wouldn't say that, there's going to have to be a lot more attention paid to the cybersecurity side of these. And I think we're going to discover that there are a lot more 0 days sitting in our existing systems than people anticipated or thought. But ultimately, that will lead to better. A lot of this is hygiene, good hygiene in terms of your code and in terms of your operations.
What do you think is really at risk right now, then?
I think that there will be some major systems that are challenged in significant ways, and I think that you'll see ransomware increase and some other attacks. But ultimately, you'll get to better processes.
The other main topic I imagine that we're going to be hearing about a lot this week is the whole idea of token maxing. Whether folks have, when I say folks, companies have spent too much money or have maxed out the amount of tokens they're going to spend, and whether that's been a productive use of money that they can justify.
That's exactly right. And so I think that you're going to see a variety of ways that companies ration the tokens and that they try to set up processes that use fewer tokens and ways to acquire tokens more cheaply as well. Some interesting kind of pre-buy structures, some of which you've seen in data centers already, but I think you'll probably see that as well in the
So I was watching Dario Amodei from Anthropic was trying to actually teach people online, I don't know if you saw this over the weekend, how to use Claude in a more efficient manner, because most people try to use the highest order model, thinking that they want the best answers, and he's saying,
if you need
don't do it that way.
You don't need it for simple stuff. You can use,
So how do you think that changes the business, though? Is that a short-term fix for this immediate problem, or is there a longer-term challenge that we're not talking about?
I think it's a bit of a longer-term challenge, because you can't have everything spiral up in cost and operations. And as I like to point out, for a couple of years now, we're using gigawatt data centers to model a brain that runs on 20 watts or less. And so somewhere you have to think about how there's efficiencies in the way that these things operate and code, and you have an explainability problem in a bunch of AI models right now that existing companies and new companies that spring up are going to have to help the existing companies make more efficient.
So David Faber is going to be out at this new Stargate plant that they're trying to build in Michigan with Jeff Blau and also with Sam Altman and the guys from Oracle. Do you look at the build out of these data centers and think we're spending too much, we're spending too little, that there's going to be some technological breakthrough either on the software side or on the hardware side that's going to fundamentally upend the economics of this anytime soon?
I think that the incentives are pretty strong to upend the way that the economics are working right now. There are a lot of existing players who want to build this out, but you also are having some political backlash to data center siting happening in a variety of localities as well. And I think that that's going to make it increasingly difficult to just build. The compute power that's being built out by the big players, both the new AI players, but also my former colleagues at Meta, Google, Amazon.
Since you mentioned Meta, where do you think Meta really stands in this ballgame at this point?
I'm not sure anybody knows right now. I think that they've got a bunch of ideas that they are working on to up the models and their quality, and that some of them have been launched already and a bunch of them haven't yet achieved fruition. I think they're going to be fine over time. I mean, I think, Gemini, the Facebook Meta seems to be moving away from the llama models more to the scale AI type of approach. We'll see how that goes over time, but are they going to let themselves fall too far behind? I don't think so.
And do you think, we're all anticipating this big SpaceX IPO, but XAI is a big component of that.
It is.
Do you think of XAI in the same breath as Claude or
Well, no,
OpenAI?
they're renting out most of their infrastructure now. So that, I think says...
But do you think that's fixable?
Maybe. I mean, I think that there's certainly a desire on Elon's part to be in the conversation.
You'd think between the data that he can collect off of X, for example, and so many other things.
Starlink.
And Starlink unto itself. And by the way, not just that, if you believe that he ultimately buys, for example, Tesla, the amount of data coming off of
the cars,
if you think about the robots that he wants to build, and the sort of AI imagery, that could be pretty powerful.
I think it could be.
And that would be the argument to do it, I think.
But it all has to sort of come together in a variety of ways. They've got to get the get the IPO out, and we'll see how it trades, and we'll go from there.
Hey, Chris, we had a guest with us earlier this hour, Rashir Sharma, who said that this is not that different from the dot-com bubble in his view, that you may be looking at companies that are a lot more profitable this time around, but a lot of the companies that aren't profitable are being kind of hidden in the private markets at this point, for one thing. And for another thing, the government's running a greater than 6% deficit, and all of that spending is taking off the spending that is basically helping pad corporate profits because it's spending that they don't have to do as a result. Does that ring true to you?
I think that there's some truth to that. But I do think the fact that so many of these companies are profitable and that there are real revenues flowing through the system makes a big difference.
He pointed out that companies like Lucent and Cisco and all those others had really great profits before, too. It was the dot-com companies themselves that didn't.
Well, and the venture capital that was funding those companies was flowing into the Lucents.
Right.
And I do think that some of that's happening with tokens right now and OpenAI and Anthropic. Right. But I do also think that there's there's a real ecosystem that's developed here that is sustainable over time that will definitely use these hopefully more efficient tools.
Chris, I want to thank you.
So great to join you as always.
Have a great week.
Thanks so much.
You bet.
When we come back, Barry Dillard's People Inc. preparing a bid for MGM Resorts. That story and more when Squawk Box returns.
Breaking on Squawk Box this morning, we scooped it. Barry Diller's People Inc. Preparing to bid $48.30 per share in cash for the 73.9% of MGM Resorts it doesn't already own. Japan's SoftBank investing more than $80 billion into AI infrastructure in France. CEO's Masa-san telling CNBC that President Macron pitched him on the project, and Berkshire Hathaway buying homebuilder Taylor Morrison for $72.50 per share in cash. Price tag about $6.8 billion, and that excludes debt.
A lot of news. And by the way, when you say we scooped it, Andrew scooped it.
Oh.
He got the scoop on the Barry Diller news today, and we will continue to follow that and see what happens with it. Let's take a very quick look at the markets as we prepare to hand things over. The S&P, the Dow, and the NASDAQ all closed at record levels on Friday, and they are indicated higher this morning. The Dow up by 138 points, the S&P up by 18, and the NASDAQ up by about 65. Treasury yields are at this point looking a little bit weaker, at least for the 10-year. It's at 4.45, 30-year at 4.97, the 2-year's at 4.02. That does it for us. We'll see you tomorrow from Washington, D.C. Right now it's time for Squawk on the Street.
Good Monday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer here at Post 9 of the New York Stock Exchange. Favors at Stargate's data center in Michigan. A lot more on that in just a moment. Meantime, we do kick off the month of June. Future strong. S&P going for a 10th straight weekly gain, which would be the longest since the mid-1980s. Software's on a tear, jobs number on Friday. Oil is higher as the U.S. and Iran trade these fresh blows as this apparent stalemate continues. The VIX is still below 16. Our roadmap begins with the AI revolution. Favors on the road live in Michigan at one of Stargate's data centers. Part of the AI transition, which SoftBank's Masa-san tells CNBC is 50 times bigger than the dot-com boom. NVIDIA jumping into personal PCs, announcing some new products overnight, actually pressuring shares of Intel, Qualcomm, and AMD. And then, of course, there's Berkshire buying Taylor Morrison, one of Berkshire's first major moves since Greg Abel succeeded Buffett as CEO. Let's begin, though, with David at Stargate's data center in Michigan. Big day, David. What do you got?
Yeah, we got a lot of different people to interview, of course, here, but also just to get a feel for the size and scope of these projects, guys. We talk about it so often. So much of what we discuss in terms of the stock stories that we are constantly analyzing end up being about things that will go here in what will be an enormous data center. There you can see drone shots of the property that I am currently on. It's in Saline Township in Michigan. 250 developed acres. It's a 1,000-acre site, but 750 acres will remain undeveloped. But you get a size of the scope from looking at that and from looking at me, perhaps, with some of the a lot of cat moving equipment around here, Jim. By the way, $16 billion was the price. We've had Jeff Blau from Related Digital, who will join us again in a bit here as well, on the show discussing this deal. Remember, they did it as a 144A, where PIMCO came in for a lot of the debt. Blackstone and Related Digital are the equity here. But the size, the scope, the dollars, all of this, of course, going into a site that will consume as much as 1.4 gigawatts of power. That's what your sort of typical nuclear plant would give out, Jim, just to get a sense here as to what we're talking about. Power, data centers, and then everything that goes in them that we talk about so often.
I am so thrilled you're there because I feel like part of the narrative that's been lost is what's actually going on at these places, and also, frankly, what Oracle's doing, because that stock's been up huge. All we do is focus on Anthropic and focus on OpenAI and SpaceX. David, I will tell you, last night in a seminal speech at Computex, you heard Jensen Huang talking about how these places are beginning to make people a lot of money. Are they talking about, once it's done, being able to make a lot of money off of the compute that it will generate?
Well, I think the expectation is certainly the developers and the equity here expect to get a good return, as does PIMCO. You know, you've got, ultimately, your credit risk is Oracle, right? And we've talked a lot about this. This goes back to the original Stargate plan that was announced back in the very early days of the Trump administration from the White House. We're up to, I think, as much as $500 billion, $300 billion committed by Oracle itself. SoftBank a part of it. We're going to hear from that interview with Masa-san as well. Yeah, Jim, certainly that's part of it. We've obviously got a lot of questions about compute of late, the need for it, the use of it, what is being used efficiently, and perhaps what isn't on the corporate level. We were talking a lot about that last week. But certainly that's a key part of the overall is the idea that that this is going to power a lot of cash flow for these companies. Oracle stock price, by the way, as you know, Jim, was up sharply on Friday. Yeah. Obviously, we focused on the move in Dell because of the incredible quarter. But don't want to forget, and you just mentioned it, that Oracle also moved sharply on that as well.
Yeah, it's been a gigantic move that's been overlooked. David, I see that you have Sam Altman on. I can't tell you from my perspective, this is a person who has to take advantage of all this compute because it's not enough anymore just to say, listen, we're real popular, because that deal's coming soon. Will you be able to get a sense from him about what's really going on behind the scenes in terms of the company making some money someday?
Well, I hope so. You know, we're going to be focused, I would think, given where we are, of course, on the construction of data centers, where Stargate is, their ability to have compute. But, you know, I'm hoping that we'll get as much time as possible with Mr. Altman, who's so central to so many of these key questions, Jim. Don't want to predict, always hard to know exactly where we'll go or what we'll discuss, but certainly being here, that's going to be the focus. You know, you could sit with Sam Altman for hours and never run out of questions, as you guys well know.
Yeah, well, listen to that sound from Masa, which is actually a story about French AI infrastructure, Jim. And the ADRs for SoftBank are soaring this morning.
Well, I mean, I can't stress enough how important the keynote was by Jensen Huang. The stock, by the way, is still not back to where it was at 348 last week.
You've been writing about relevance.
It's just incredible because they botched this realignment with one of the indices companies, and there was no buyback at the time for NVIDIA, so it just collapsed, and people thought there was really something wrong. But one of the major emphases by Jensen was, listen, we're not just about the hyperscalers, although he did point out that the big partners are indeed the big three, SpaceX and Anthropic and OpenAI. But I thought he went out of his way to say, look, Indonesia, France, these are the countries, they're going to be fighting for our chips. And it really was a very subtle shot at Amazon and Google for their chips, which he just says basically will cost you a lot and not run hot and not help you.
Yeah, no, I thought that we've been waiting for them to maybe slap back a little bit at these frenemies in Amazon and Google. To bring you up to speed, the company is jumping into the PC space by unveiling this new N1X processor alongside Microsoft. It'll be incorporated into a new RTX Spark Superchip debuting in the fall on a fresh line of Windows PCs from companies like Microsoft, Dell, HP, and Lenovo. Here's Jensen at the keynote. This is Taiwan's Computex earlier today.
There is no question this reinvention of the
There is a question.
is as big of a deal as the reinvention of the phone into what we now know as the smartphone. And so this is the beginning of that journey. This is the beginning of a new line. And so we have a roadmap for this. This is a brand new product family for us.
Brand new.
Every single generation of architecture, we will have a desktop, a laptop, a workstation, and then a desktop, a laptop, and workstation. And the thing that I'm just incredibly pleased, incredibly honored, is that 100% of the work.
So you got HPQ up 4, you got Dell up, you got ARM and Intel.
Okay, so this is
I should say AMD and Intel lower.
Yes, well, this is an ARM-based revolution. The PC will be based on ARM. Obviously, all the other stuff is based on ARM already. This is an agentic-based PC, of which, you know, that can do agentics, that needs ARM. A direct slap, by the way, on AMD and Intel having a PC chip that just doesn't work. It doesn't work really as well. But I think one of the big surprises, besides ARM, because we all knew that Rene Haas is having a talk with Jensen on Tuesday, was this tie-up with Microsoft. And it was hinted at in some tweets on some postings on Friday, but holy cow, remember, I was concerned that Microsoft and, of course, Salesforce were both going to be forgotten about. Microsoft, well, Salesforce is now up 35, so obviously that one was money good. But this Microsoft, oh my, This is big. Because I had not thought of Microsoft as being as important, but don't forget, Microsoft's Azure, they have their own Amazon Web Services, and like Google Cloud. I don't know, if I were Google and Amazon, I'd have to respond.
Yeah, and we'd enjoy that back and forth. David, to Jim's point, ServiceNow up 8, almost 9 pre-market. Adobe up 6. IGV just had its best month since 01.
Yeah, it's up, what, 20% from the April lows is the IGV. I mean, we've spent a lot of time, obviously, talking about perhaps some of the challenges for key companies when it comes to the disintermediation that many still think may be coming from software agents offered from the likes of OpenAI with its Codex and/or, of course, Anthropic and Claude and others. But it is worth noting that key point. Now, there are also companies that are a part of the IGV, Jim, that I think it's important to point out. We've seen earnings from them be strong, in part because they're enabling the layer of AI. They're not necessarily going to be competing against it. And so you do need to differentiate amongst your software companies in some ways, don't you?
Oh, yeah. I mean, and some of those I've been saying over and over again should not have been in that stupid index, like CrowdStrike, which has now doubled from when people thought that somehow I mean, there was this period where Anthropic was going to be CrowdStrike, Palo Alto doing great. They both report. David, you're absolutely right, but I will point out that Jensen went out of his way to say we're not hurting software. We're not about hurting software. And I also may want to say that a bottom may have been reached by a very sobering interview I had with Mark Benioff. And I think you would say Mark was anything but saying, hey, listen, we are out to win. It was more like, enough. You know, you guys don't understand us. We're going somewhere. And David, I think that lack of hubris really worked.
You do, yeah.
Yeah, I do.
I mean, it's not as though, Jim, that we're not going to continue to have questions about some of these business models and/or their ability to move from a price per seat model, sort of an outcomes model, as well, is not going to be an issue. You know, I do wonder, so, you know, there are going to be, I guess my point is, while we may see rallies, it's not necessarily a sign that all is clear, is it?
No, but they got to 12 times earnings, and a lot of these companies are pretty lucrative. I would point out, David, one of the things that really struck on me was that, look, I don't talk to a lot of hedge funds, but I belong to these clubs, you know, I mean, I like the Elks Club, but these are different. And everyone came up to me and said, isn't it time to short Salesforce? And I wanted to say to them, God, you stupid. But I didn't do that because I'm at the club. You can't do that. You got to say, I think it's ill-advised.
A little bit late.
Yeah, you know, they're at the club. You can't, you know, the club is different.
Yes.
You know, it's not like you or me.
Yeah, the other one we didn't mention, Jim, IBM up almost 9 pre-market. Barclays comes in with an initiation by 350.
Quantum.
Yeah.
Quantum.
Yeah, there's a bunch of quantum headlines. D-Wave out today.
You know, is it time to talk General Mills and Conagra yet?
Jim, Staples versus the S&P are at a 23-year low.
That's why I brought it up. Yeah. It's rather extraordinary. Just extraordinary. And everyone wants to say bubble. Okay, you know what? They can go buy all the General Mills they want to solve the bubble.
Yeah, I mean, do you think, is there headline risk if we do get a broadening this summer? That's the big question.
Look, the only broadening that I see is just that an outfit like that we have being developed, FedEx Freight, because they too have stuff that goes to the data center. The data center is the biggest build out, bigger than the interstate highway system by far.
Yeah.
David's there. We'll hear more.
I know. I mean, the hole in the donut, David, remains the consumer. Journal with a big piece over the weekend. Americans falling behind on their $1 trillion plus credit card bill. The wealth effect is making up for a lot of that.
Yes, although to the point you've made many times, Carl, right, who is that actually benefiting to a certain extent? But there is a significant wealth effect from all of this, and from the beneficiaries of it in the stock market, certainly, and those who are providing capital to it, potentially over time as well.
Oh my
guys,
God!
I did want to, use the opportunity also, if you take a look at sort of that story that Carl was referencing, to go back to that interview that Arjun did with SoftBank's Masa's son. It's been a long time since I've spoken to him. I can remember going back many, many years
Sat
ago.
right at
Massa was one
support.
of the earliest proponents of AI.
Woo!
Unfortunately,
Dang, bound ding ding
the
ding, please.
portfolio at the Vision Fund at the time, was Vision Fund 1, did not necessarily.
Spy just had a huge knife. They figure out what the news is.
And I'm his mom.
You could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Real-time market moves, earnings breakdowns, and trade-ready insights. Follow me on X at Sam_Vardis and connect with me on LinkedIn or Instagram for more.
Welcome back to Opening Bell. I'm Tom White in for Nicole Petalides. Let's get you set up for the trading day.
What?
Joining us now
You don't have no cleavage.
Jeffrey Katz, Managing Director of Fixed Income at
With
TCW.
highway robbery.
Welcome to the show, Jeffrey. You know, I wanted to get your take before we get into the discussion on fixed income and the volatility there. I wanted to get your take here on the equity markets and the outsized moves that we've seen, the optimism.
No cleavage this morning. It's not a good sign. I wish the bell rung right here when I mean, that's perfect bottom. Over attacks on Lebanon. I was going to say the Zionist crap don't sound right to me, but SPY's at the 200 on the 1 hour. I mean on the 15-minute. And I was using that the other day with an inverted hammer. So that's pretty bullish there. Well, what kind of day do I expect? We're going to find out. I think I'm going to take my time here. Burrow's up in volume and ABTS. It hit my first support. Yep, wait and see. Good morning, retail traders. My name's Washboardjim. I'm the founder of the Sneaky Snake trading strategy, where I talk about chart patterns, moving averages, and being in the now. And last week was a real good week for me. Had a couple I got stuck in. And the fat cats are still ringing the bell about a big pullback, so we gotta be careful still. And you got Iran acting stupid again. I just say we blow them up, take care of it now. This is a tough one. These people are strong-headed. They've been at war for 47 years plus, ever since they were a civilization. It's like one of my nephews. He's always had to get in a fight with someone in the family. And pure ignorance. Google's pulled back here to my low support. You got a double bottom coming up on a shoulder line of AMD. Yeah, I'll take my time. Not in no hurry. Not today. Dell had that huge you said look at that double bottom. Amazon. And what's that one? SNDK. This is a little bit crazy. If you can do it, I can. If I can do it, you can do it too. I don't want to go bankrupt. If I can do it, you can do it too. Good morning, Arm V for you. Good morning, Sarah Lee. Nice to meet you. My name's Washboardjim. We got a double bottom on Mears MSTR. My dog, I was called Master, and I said, Mears. Listen to Mears. He'd stick his head up. LAES. We got go through these. How many more minutes? 3 more minutes. We got BRZE, penny stocks. They popped up this morning. And Getty might be a buy at at $1. We got Bind. And NW. Boeing. Bye-bye. CrowdStrike was the other one. CRWD. This could be a Fibonacci setup here. If I can do it, you can do it too. I don't want to do it. You can't make me do it.
Like we've seen in the last 2 months, the stock's best performance through the first
Sammy's here.
trading days of the
No
year
cleavage.
Ever on record.
I'm going to have a hard time today. Marley's the only one left. If there's no cleavage, it's going to be a bad day. SoftBank plans a major data center build out in France. There goes my ding-a-ling-a-ling. June 1st. The 757s or the 756. Look at the 756 on the SPY. I mean, this is support 124. Triggered. First support triggered. The 124 to 143. Because the candy man can, because he mixes it with oil and makes the world go round. Fan man can, cause he mixes it with 6 to do. Na 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 na. Mixes it with love, makes the world go round. They're at 155. To the 9. You can make the rainbow. The candy man can. The candy man can. Mixes it with love and makes the world go round. Candy man can, cause he mixes it with oil and makes the world go round. 9 EMA. Any man can. She mixes it with oil. Makes the world go round. La da 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 da. Ah, very good. We're at the 9. We're at the 9. Hit the 9. So that's got to break. We're going to find out if this thing's a badass or not. We had a double bottom here from Friday. We hit the 200. Yep, there it goes. Oh. Hey, 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 there it goes. We got NVIDIA. CEO was talking smack this weekend. We're about to hit my resistance on NVIDIA. Randy. Jimmy called it 220.89. NVIDIA. Everything is beautiful in its own way. Life's like a band every day. Na 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 na. Prepare ye in the name of the Lord. We got a Head and Shoulders coming up. The 21 EMA. We got a squeeze we're working on. Baba. PDD is cooking pretty good. Na 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 na. Do, 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 do. I watched an interview about Dick Van Dyke at 100. I thought that was pretty cool. Looks to me like the IWM wants to break out. Kind of real steep on the bottom there. So SPX. The 7,600 strikes. $5 for the SPX. Everything is beautiful in its own way. Life is a miracle, day and day. SPX calls, scalping the lotto. Strike is at 7,600. At $5. We're at 570. Everything is beautiful. Hi. No. We're above all the moving averages right here. I'd still, the SPY's got to break to 63 before it becomes bullish. IWM did break out. Jimmy called it. You're coming up to another resistance at the 63. Oh shit. Somebody just dropped that down real fast. Not liking that. Not liking that one bit. Back to even here, $5. Thought we had some strength. I don't know. Not not feeling it yet. Big C. What tweezer top resistance to break. Let's see if we'll give it one more try here. I mean, one more chance. Not try, because I'm in it. But I'm not liking it. Not liking that candle at all. Everything is beautiful in its own way. Okay, now as we come up here and approach resistance, there we go. Now it's time to exit the trade. Should be up more than it's not. 560. You know, I'll take it. I didn't feel comfortable with this candle. So that's how you do it. That's how you do it. I'm out at 560. Yes, I am. You got a problem with that? It's too freaking bad. Can anybody see where I misspelled something in that? I can do it. But I'm not going to do what that girl does. $20,000 in credit card debt. I'd only do that if I got, if I did that, it would have to be on one of them real fancy jets, where it costs you about $34,000 to fly the thing. I forgot what they call that jet. 34,000. 34,000. Jet flight. FLIGHT. Commercial aircraft cruising 30. No, not feet, you idiot. $34,000. Zero regrets. I paid charter jet rather than fly Spirit. Well, it's coming back up. Could have got back in at $5 again. Sure could have. NVIDIA did pretty good off that 200 on the 1 hour, 4 hour. So, this, you see this here? Resistance. Resistance, support, 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 resistance, resistance, NVIDIA.
No headwinds created from these higher crude prices since this conflict started at this point. We'll see if this takes hold at all at this point, because, you know, equity markets still at or near record highs here.
Yeah, Tom, what do you think about that, Bear?
For joining us with a couple of levels.
Okay, the calls are at 450.
Equities and
Jimmy, no trust,
now,
like you
let's take a
said.
look at the markets with our trading panel.
I tried to get it.
Panel, and bring in Alex Coffey, co-host of Next Gen Investing, and Joe Mazzola, Director of Trading Services at Charles Schwab. Alex, I'll go to you first. Optimism continues. It seems like we were hitting record highs. We pulled back on the news that came out, but this is a momentum trade at this point, and that's hard to stop after 9 consecutive weeks of gains for the S&P 500, right?
Yep. Yeah, I talked to Sam and
Not
Jim
really.
about this last week, but at the moment, over the last 3 months, and it's really even more dramatic if you look at maybe the last 2 months, if you just give me the performance of the S&P 500's tech sector, right now the 3-month correlation is 0.98 to the S&P 500. So if you square that, you basically get like 96 and some change percent for the R squared value, which in statistical circles is known as the coefficient of determination. And basically, 96 and some change percent chance I'm going to get it right. I'm going to say, okay, that's how the S&P is moving. Well, today, it's teetering because the S&Ps are pretty much unchanged. But
Get ready to squeeze again.
Very momentum driven. You look at S&P momentum today, it's up about...
I almost jumped in at 470 just because we're holding up the 9 on the SPY. Oh, there it is, 470 again. The SPX looks like we could pull back. I'm going to wait. I'm going to wait. We had a triple top with a lower high, and we've got higher lows. So we got an ascending triangle. I mean, it does look kind of good. But if we come back for one more time down and make that 3, this candle right here, there it is. Okay. It's saying Jimmy. It's got Jimmy wrote all over it. $470. There it is. 470. And we could do a triple bottom too. That'd up another 50. There it is. Right there. I got to use the restroom, so I'm not going to take this trade, but I would. I'll be right back. We'll listen to what the frog guys have to say here. $440.
It's adding a little bit of a additional, rocket fuel, if you will, to kind of the upside move that we're seeing. I think there's an important concept. Alex was kind of referring to the R squared and the correlation with with the markets. But there's another correlation that continues to kind of drift a bit, and that's in the dispersion. And basically, what that talks about is volatility with the single stocks versus the indexes, and as that index volatility continues to come down, you're seeing the single stocks volatility continue to expand, and that's a lot of that upside call buying that we're talking about. I mean, even on a day like today, just take a look at kind of the sector performers. There's only 2 of the 11 sectors that are positive right now, and if you look at overall, it's basically 2-to-1 decliners to advancers, and we're basically unchanged. Why? Because of the strength that Alex alluded to in technology, software, hardware, wherever it might be. But that's driving the momentum that you're seeing right now, and it's one of these markets where you want to get diversified, right? Because in the back of your mind, it's telling you that, hey, at some point this has to broaden out. But I guess the way I look at it is ride the momentum while it's still there. Look to tighten some stops. Look to be a little bit more active if you are long these stocks in figuring kind of maybe some of your exits. But it doesn't mean that you have to get out at this point because they continue to show strength.
Yep. Yeah, it's hard to, buy the dip mentality probably coming into play here also on any pullbacks that we've seen. All right, great stuff, guys. That's Joe Mazzola and Alex Coffey joining us. Thanks for joining us here on the Opening Bell Morning Trade Lives. Coming up next with Sam Vadas, live from the NYSE.
Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Schwab Coaching is concepts brought to life in the real world.
Schwab Coaching is learning constantly.
It's relatable, it's practical, clear, understandable, and hopefully entertaining.
Take it for what it's worth, but I think it's absolutely world class.
Schwab Coaching is actionable, individualized, community, growth, and empowering.
It's really a human touch with your investing.
We have coaches who have been in the industry and around the industry for a long time.
So the nice thing about Schwab Coaching is that clients get access to 9 different sets of expertise.
We want to engage with you in chat on the shows we host. We want to engage with you outside of the classes we host.
A consolidation that could add to this trade. So we shall see.
We have different formats because people learn differently at different times.
If somebody's a real bookworm, we've got courses for you to learn from. They can dig in, go at their own pace.
We have webcasts running through YouTube all day, every trading day.
Ongoing 24, 25 times a year events that are making their way around the country.
So you get that opportunity to share experiences and knowledge with other traders.
They're kind of helping each other learn step by step along with the education that we provide them as well.
We're going to be able to help you regardless of where you are on that
That's right.
education.
It's really unique, not just that it exists, but that you can tap into 30 some hours.
We got a Head and Shoulders coming up
each and every week. How incredible is that? And it's free.
Prepare ye if I'm moving these up. Well, no, we'll keep them right here.
Live insights, actionable data, and market-moving analysis.
Spy's definitely out of
Schwab
support.
Network connects the headlines to the why in real time. Watch free 24/7 at schwabnetwork.com.
The 756 is on the Spy.
Monday morning, everybody. This is Morning Trade Live. I'm Sam Bardis, live from the floor of the New York Stock Exchange. We've got plenty to hit on both here and abroad over the next hour. Here is a look at what is coming up. We'll focus on the Fed after former Fed Chair Jerome Powell warned of political pressure on the Fed. Later, we'll dive into the good news from NVIDIA as it's jumping into PCs now with its
Powell's got issues.
chip that will debut in laptops from Microsoft, Dell, and HP. And in Inside Out, we'll preview earnings from HP Enterprise and get you an example trade before that report. Let's take a look at where markets are trading half an hour into this fresh trading week and fresh trading month. We were a little bit wobbly earlier today as oil spiked just before the cash open. Here you've got the S&P 500 trying to find that flatliner once again.
That's
just
the
down
SPX.
marginally at 75.21, of course. Coming into this fresh trading month, a 9-week rally here that we've seen and records for our major indices as well. But we are seeing a little bit of a pullback this morning just as oil popped on a lot of these headlines coming out of Iran. We'll get to KG in a minute and break down exactly what they had to say via that state media news agency. We've got the Russell 2000 under some pressure today as we've also seen yields spiking across the board here. We've actually got the 30-year that's north of 5% once again, the 10-year yielding at 5.51 right now. Here's how foreign markets are trading right now. We have had a little bit of a sort of risk-off tone in Europe for most of the day. A nice pop for technology stocks in that part of the world, and we'll discuss that later with Richard Flynn as to why. It's got a lot to do with SoftBank. The FTSE 100 down 0.7 right now, and the DAX down 0.3%. Obviously, the markets in the European region reacting to this little spike in oil prices that we've seen this morning as well. Of course, Asia's wrapped up the session already, not currently trading. We had another record night for the Nikkei 225, as you could see there. All right, this is the futures products, and this is where, of course, what is driving the story for our markets this morning. You've got crude oil now up 7.5%, so at $94 a barrel. We've got US dollar also firming up this morning, so that's keeping some pressure on, and as we've seen yields driving up across the curve too, as I mentioned. We've got gold on the back foot and Bitcoin lower as well to the tune of 2.5% at 71,000 and change. It just keeps getting pressured as we've seen
133
last week as well. So that's how we're getting up and running for this fresh trading week. As I mentioned, a lot of developments around the Middle East headlines. So let's get out to KG now, who joins me just to break down what we've learned this morning. I was just looking at the Iranian news agency, KG, what they had to say via Tasnim. Obviously, they're talking about how they have set their agenda to completely block the Strait of Hormuz and activate other fronts, including Bab el-Mandab, that strait. I know you and I have been talking about that quite a lot. We're also talking about the IRGC saying they're taking full control of Iran diplomatic channels, and also there will be no talks until Iran's demands are met on the cessation of Israeli operations in Lebanon and Gaza are met, because obviously we've seen Israel expanding that ground assault in Lebanon at the weekend. Walk us through what you know and the price action we're seeing in oil right now.
Well, we are seeing obviously oil moving to the upside based on this news. Last time that I checked, it's up about 7.5% so far if you're looking at WTI. And this is because of the increase in hostilities over the weekend. We saw some ballistic missiles
when
it comes to U.S. bases in Kuwait, and then we
I'm going to get out of this trade.
Response. So there's definitely a back and forth that is taking place. But that news headline, or those several news headlines that you're kind of talking about here, that could actually create a little bit more of a headwind when it comes to the energy complex as a whole, especially when you're looking at logistics. Not only because of the Strait of Hormuz and the flows that are being disrupted there, you can make the case maybe 10 to 13 million barrels per day or so. But if you start seeing a blockage of the Bab el-Mandab, that basically is leading from the Gulf of Aden going into the Red Sea. Now there is a little bit of around that, if you will. It takes about maybe 3 to 4 weeks for ships to kind of circumvent the Bab el-Mandab.
HVAC up there now.
Into some risk, Saudi Arabia flows, especially from the East-West pipeline, which is doing around 7 million barrels per day right now. So you are seeing some buyers stepping in, probably a little bit of a short covering rally on the oil front as well. But equities, for the most part, are still holding up here. So it seems like escalating, not de-escalating.
I'll be back.
We do see strikes, official strikes on Beirut. That could also create a very big headwind for the broader region here. And I think that's what the market's kind of pricing in on the energy front.
Yeah, I was just seeing that Israel is telling residents of Beirut's southern suburbs to leave, so no doubt keeping an eye on that situation, particularly as you've seen headlines around the U.S. intercepting Iranian missiles, Kuwait's bases under pressure and under attack as well at the weekend. So a lot going on, plenty of moving parts as always. Let's bring it back to the data and how all of this is feeding into what we're seeing as far as the PMIs. We already got the S&P Global about 15 minutes ago. ISM just hitting the tape right now. I see
Be careful
picked up from the previous
with this news.
Compared to the estimates. Run us through these numbers and
I'm going to take profit here in a second.
Component, because obviously that's what we've been watching very closely.
Definitely. So if we're looking at the headline for ISM manufacturing PMI, they came in at 54 for the reading. She was looking for around 53.3, and that's better than the last print at 52.7. So we continue to see marginal improvement on the manufacturing front, at least when it comes to sentiment from purchasing managers. Now, if we're looking at the ISM manufacturing prices, that came in at 82.1, lower than the street's expectations of 85.3, but still at elevated levels. This is actually a decrease from what we saw for the previous print at 84.6. So some improvement, but still really elevated when you're looking at that 82 mark here. Now, new orders came in at 56.8. Last print was 54.1, so improvement there. And if you're looking at employment, that came in at 48.6, better than the previous print at 46.4. So overall, it's actually a really decent report, especially on the prices front. If you continue to see that trend, I think it's going to be a headwind, but we can continue to see that trend move to the downside here when it comes to input prices. Maybe that puts a little bit of a buffer in when it comes to the inflationary picture, at least in the near term.
Okay, yeah, that's encouraging. So coming off a bit, but as you say, you're remaining pretty elevated at this point as well. Let's talk to some of the individual stock stories we're seeing in this market this morning. Obviously, we're seeing some moves under Berkshire Hathaway with this Taylor Morrison deal under Greg Abel. Just walk us through how important this is at a time for U.S. housing where we haven't really quite seen that meaningful rebound that everybody was hoping for.
Yeah, well, this is actually a little bit unique when you're looking at Taylor Morrison and who they actually cater to. It's usually the upper tier of income earners here in the United States. So they're a little bit more, let's say, resilient to higher interest rates and things of that nature. This is the first major deal under Greg Abel's leadership for Berkshire Hathaway. Now, they are looking to purchase Taylor Morrison for $72.50 per share. That's going to be in all cash. That's around a 24% premium to Friday's close. And then it includes around $6.8 billion when it comes to the equity value here. Now, it is expected to close in the second half of 2026, pending the shareholder approval here. And this just kind of shows that they had a lot of cash on the sidelines. They still do, but it looks like they want to try to reposition back into this market. And they are looking at this acquisition as a way to be able to streamline some of the operational items within this business, making it a little bit more of a hybrid operational structure, if you will, cutting a little bit of the expenses. So not so much maybe optimistic when it comes to new home sales, but maybe on the expense management, they can find a little bit of alpha when it comes to improving margins. So a very big deal. First one, once again, with the new leadership here, and you are seeing Taylor Morrison obviously moving to the upside on the enthusiasm of this name. And usually Berkshire, if you look at the past, when they are trying to build out stakes when it comes to the housing market in general, they're not doing that in low interest rate environments. They're usually doing it in higher interest rate environments because of the perceived valuation and future outlook when it comes to the housing market in general. So this might be a position play for a longer term outlook for outlook.
Yeah. Interesting and really good context there. Obviously, we're watching all eyes on the Fed as we're seeing a lot of those officials turning more hawkish, and then of course Powell's comments as well. Hashtag keeping a low profile, as he says. Let's just keep with the M&A theme though for this Monday here. KG, CNBC just out in the last couple of hours breaking this report around Barry Diller's preparing a bid for MGM. Interesting moves, just because obviously we were talking about, what was it, Caesars last week. There seems to be a lot of activity going on in this space right now. Just walk us through what we know here and the price action we're seeing.
Yes, we are seeing People's Inc., formerly IAC. They're actually proposing to acquire MGM Resorts for $48.30 a share, and that's an $18 billion bid. And once again, that's coming from CNBC, or reported from CNBC. Now, People's Inc. already owns around 26.1% in MGM at this point in time. It was actually very interesting. Barry Dillers actually sits on MGM's board, but he stated that he will recuse himself following this particular deal when it comes to the proposal and the vote for this. So an interesting dynamic when you're looking at the gaming and entertainment space. You can make the case here, Sam, that it is definitely needed. They are seeing some headwinds, especially when you're looking at the gambling front, as that has kind of evolved to more of an online business. But the experiences is still something that is still there, that can still provide a significant amount of margins here, but you are seeing maybe some lackluster traffic within Vegas and some of the other hotspots that we have seen in the past. But this acquisition, along with Caesars and going private, I believe that was announced last week, seems like we are seeing a change when it comes to the casino business in general.
Yeah, it was Fertitta that was interested in taking that private as well. So plenty of going on in that space right now, as you say. It's been a pretty tough time for the space as well. I mean, they're not sort of seeing this kind of foot traffic, I think, you know, post-COVID that they would have liked, you know, particularly as far as the visitation numbers are concerned. Bringing it back to the markets, KG, I mean, what levels are you looking at today? Something that sticks out to me today, why is copper higher while the rest of the metal space is down?
Well, for copper, I think there's actually a couple of reasons. We did get some optimistic numbers, some privatized numbers that came out of China over the weekend, so I think that's putting a little bit of a bid there. We already talked about the sulfuric acid situation as far as it being removed from the market or being delayed from the market. If you expand to the Babel and DAB, it's even going to get worse, bringing premiums up a little bit higher there. And then we do have some mining issues. Mines continue to see collapse and certain pockets of the market, especially in South America, you are seeing some strikes taking place as well. So copper is still making higher highs here. It's not on the optimism of economic expansion. It seems like this is more of a supply issue that's being priced in.
Understood. Okay, something to look at up 1.5% right now. KG, always appreciate it. Thanks so much. Coming up, we will take a look at the Fed, and our next guest is making the case for Fed tightening sooner rather than later. Morning Trade Live is back after this.
I'm the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor. Subscribe now at schwabnetwork.com.
Intern, this place is incredible.
It's where I get all your office supplies.
Your golf balls, your fancy coffee,
your giant TV.
It's everything in one place. It's like Schwab. Everything investors need, all in one place.
Come again?
Yeah, at Schwab they can do everything. Invest, trade, get full service wealth management,
and anything in between.
Think I'm gonna be sick. We have to buy that now.
Schwab. Invest your way with Schwab.
No politics, no spin, just the market from open to close and beyond. Streaming 24/7, any screen, anywhere at schwabnetwork.com.
Grandparents moved here. Did they know what our family would become?
I don't even know if they could envision it. To leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years through purchasing of houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Trade Live shares of Dell are once again on the rise after it launched its XPS 13 laptop. Dell is going to go after Apple's MacBook Neo in terms of pricing. It's a compact laptop weighing 1 kilogram with touch display. In reaction, Morgan Stanley upgrading shares to equal weight from underweight and raising the price target to $448 from $170. The firm believes Dell is executing across nearly all business lines while taking market share of a growing AI spend pie. So that is one of our leaders on the S&P 500 today. Obviously, it is also getting some help from this NVIDIA news as well, as it's going to be jumping into the PC space too. That's helping names like ServiceNow. In fact, if you take a look at the IGV today, the rally continues into June off the back of a couple of good weeks here, up 7% right now. MGM Resort, we know the story there as we just broke down with KG. It's got a pop of 13.8% right now. CW Corp is up 8% as well. There are the winners. Let's take a look at some of the laggards on the session thus far. And Qualcomm is down 7.5. We've got Intel and AMD down as well. This is obviously off the back of the NVIDIA news. So some negative headlines perhaps for some of these companies that are looking to compete in this space. As CBOE Global Markets down 6.5% right now as well. So that is what is moving in these markets, as really the S&P 500 is trying to find the flat line once again off the back of this pullback we saw earlier today on a spike in oil, which is up at 6% currently. All right, let's move on to our next guest and welcome in Ed Yardeni, President Yardeni Research. Good morning to you, Dr. Yardeni. So nice of you to join us. Hope you had a lovely weekend. Let's just start with this 8250 year-end target on the S&P 500. I mean, that is a street high alongside Morgan Stanley, which I think is at 83. Just talk us through what gets us there.
Well, we've been in a earnings melt-up, an earnings-led melt-up, and that continues, and that's really what continues to drive the market higher. Basically, I'm looking for the market to anticipate that the outlook for earnings will continue to be very good next year. Now, obviously, along the way, there are going to be some pullbacks and some volatility, but all in all, the market has continued to be impressed by much better than expected earnings. I've kind of dubbed it FEMO, which is fabulous earnings momentum, as opposed to FOMO. In other words, it has them in the valuation multiple that's gone up. We're not seeing that kind of irrational exuberance. We're seeing rational exuberance based on earnings being delivered by companies.
Yeah, I mean, we've certainly seen that backed by the earnings profile. It looks very strong, even though things are looking a little bit stretched as far as the NASDAQ is concerned. But let's just switch gear more to the macro and what you've been saying about the Fed, because you actually see the Fed raising rates at the July meeting. So you remain an outlier with that call. What's the case for the Fed to hike at a meeting next month?
Well, the April FOMC meeting was pictured by the Fed Chair Jerome Powell in his press conference as being kind of leaning towards maintaining their easing bias. However, when the minutes actually came out a couple of weeks ago, it turns out that the underlying theme in those minutes was actually fairly hawkish. There were more and more members who were saying that they should drop the easing bias. A few even said it was time to move towards a tightening bias. I think they're going to have to move to a tightening bias at the June meeting coming up here in a few days. I don't think they're going to go from a easing bias to a neutral bias. I think they're going to go straight to a tightening, because the inflation has been more elevated. It's been spreading more, and in addition to that, the labor market is looking pretty good. So the risks are all on the inflation side right now, not on the employment side. And then I think they're going to have to follow that up pretty quickly with a rate hike at the July meeting. And of course, a lot will depend on what happens in the Middle East. And as of today, it's still the same old, same old. There's still a war going on. There may be a ceasefire, but it seems like missiles are still flying. And the price of oil is up today.
Right, that's it. And would you be suggesting that it's one and done, Ed, or would you be saying that there's more to come throughout the second half of the year?
I'm hesitant to claim it's going to be one and done, because I think much will depend on what happens with the price of oil, with the Strait of Hormuz. And so I think it's going to be one, just to maintain some credibility on the inflation side, and then have me back on the show and ask me again. I mean, I think we're all trying to be military strategists, and I think at the end of the day, we're finding that the art of the deal for Donald Trump isn't going all that smoothly right now in the Middle East.
Sure, and then how would the market likely react to a hike then? I mean, you know, sooner rather than later.
Yeah.
Because, I mean, if you're maintaining an 8250 call on the S&P
Right.
by year end, you believe that the earnings would be strong enough and
Yes.
insensitive to a rate hike.
I think to a large extent the United States right now clearly has a lot of advantages, particularly the fact that we are oil exporters. I think in the near term we've obviously had a great run here in the market since March 30th, since the perception was that we're getting closer to an end to the war. Now I think a couple of events are coming together here that could create another pullback in the market, and it could be the SpaceX deal coming at the same time as things continue to deteriorate in the Middle East. That combination would not be very propitious. We need a stock market that's able to handle a big financing here for SpaceX, and so all has to go well. And on top of that, I think the Fed is going to get more hawkish. So I would say that summertime might be a good time to take some profits, position maybe overweight energy actually, and then I think I think all this will pass, and I think by the end of the year, I think once we head into the fall, the market will do better. But you know, it might be one of these summer situations that leads to some continuing sell-off in September, creating great buying opportunities. But for long-term investors, I think you just kind of stay the course.
Right, and you're saying the rally won't be linear to get to that 8250. What about yields then, Ed? Because obviously you're saying that these are likely to stick as far as the 10-year is concerned between the range of 425 and 475. I mean, some would say that north of 450, 460, like we saw in recent weeks, is the so-called danger zone, but you call it the normal zone. Just talk us through that.
Yes, I do. Yeah, well, it's pretty straightforward. Somewhere between 4% and 5% is the kind of range we've really had in this market for the past, since mid-2023. And that's the same range we had prior to the great financial crisis for several years. A healthy economy should have rates around these kind of levels. I think the economy's done just fine with rates between 4% and 5%. I don't see them going up to, above that. We already tried that back in 2023 and found that a lot of buyers concluded 5% was a pretty good yield for a 10-year period.
Dr. Yardeni, always a pleasure to speak to you. Thank you so much for your time today. Ed Yardeni, President Yardeni Research there. All right, coming up, we will get a closer look at the big picture with the team from Charles Schwab. Morning Trade Live will be right back.
On the floor of the New York Stock Exchange. When markets react, we are live with analysis that matters. Watch now, only on SchwabNetwork.com.
How's it going? First day, so...
Sometimes,
Next. Try it again?
You could have done better.
Please.
Same goes for where you invest. Level up and invest smarter with Schwab.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live.
Gotta head back out.
And access support.
I'm at 149.
Email and in-platform.
We break the orb, we go higher. Better I take profit here.
The final 90 minutes of the trading day, that's when markets make headlines and traders make decisions.
From earnings shocks to sector rotations, we're tracking the catalysts that move markets right into the close.
Here on the floor, I bring you real-time sentiment from traders driving the action.
And in Chicago, we break down the data, technicals, and trades you need to see before the bell rings.
Live coverage of the close every single day.
This is
Market on Close,
live weekdays 3 p.m. Eastern, only on Schwab Network. We're back on Morning Trade Live. We're seeing shares of Zscaler higher today after Guggenheim upgraded shares to buy with a $214 price target. The firm said Zscaler's relevance is likely to grow in the era of AI, especially with the C-level executives.
Yeah.
It tends to do business with that believe in zero trust equity. Guggenheim also said the valuation presents an opportunity, I should say, to buy a category leader of a still nascent and hyper-growth market. So we're seeing shares popping 10%. Remember that pullback last week was pretty brutal for that stock. Welcome back to Morning Trade Live. It's time now for the big picture. So let's welcome in Cooper Howard, Director of Fixed Income Research and Strategy, Schwab Center for Financial Research. All right, Coop. So a big week on the Labor data front. As Dr. Yardeni just said, I mean, obviously things have looked pretty stable on that front, so the Fed can really focus on the inflation side of the picture. I mean, he thinks they fire off as soon as July. I don't know if you caught that interview. He is an outlier with that view.
He's a liar.
How are you looking at the jobs data this week?
Yeah, thank you for having me on, Sam. It's obviously going to be a big week for the labor market data that we're going to come in to see.
Every week is, ain't it?
That's coming in, but also then the big reports coming in on Friday for the non-farm payrolls. Now, it is expected to be only about 85,000. I think that's what the Street is expecting, with the unemployment rate to hold steady at about 4.3%. So if you look at the overall picture of the labor market, there are some signs of stabilization. So that's something that I'm going to try to continue to watch to see if there are those signs of stabilization. And ultimately what that probably means is that if we do continue to see those signs of stabilization, I do think that it probably means that the Fed is going to be on hold for an extended period of time.
Knock,
and
knock,
for longer
knock
term
in the
rates,
city if you want to.
muddle through, if you will. We do think that there might be a little
Baby,
bit more
it's
upside in longer-term
okay.
yields, due to a little bit kind of potential for stable growth and obviously higher inflation prices. So I do think that those are some very important catalysts to watch this week.
Okay, and that is obviously why you and I have discussed this over the last few weeks, why you are very much recommending slightly below benchmark duration because of the potential risk of rising rates. And we just heard Yardeni sort of saying that this is kind of normal, when others would argue maybe it's the danger zone for stocks. But just across the fixed income landscape, what else are you looking at as far as what is attractive here? I mean, obviously you and I have spoken about muni bonds, but not in a while. How are you looking at that story? And, you know, for what type of investors do you think should be giving this a bit of a look in at the moment?
Yeah, there's definitely some opportunities that we do see in the fixed income market. And like Dr. Yardeni had mentioned, we have seen a move up in yields. So given that move up in yields, that does make fixed income investors or investment opportunities in the fixed income arena a little bit more attractive. Because if you do look at just what makes up the total return and kind of the biggest driver of that in the fixed income market, it tends to be that coupon, it tends to be that yield. So one of the things that we do think is relatively attractive is municipal bonds. But like you'd mentioned, Sam, it really depends on who the investor is, as well as the investment type or investment account that they're investing in. So we think that they can make sense for investors who are in taxable accounts, like a brokerage account, and they're in a higher tax bracket. So looking at just after-tax yields, we think they make sense relative to other conservative investment opportunities. And then also, if you look at credit quality in the muni market, we have mentioned this quite a bit, and it's kind of a story that has happened over the past few years. But it's not a major concern in our view. We are seeing some signs of a little bit of a slowdown in credit quality, but overall, we're still at a very strong point. And there's a lot of evidence, whether you look at unemployment rates, rainy day funds, growth in tax revenues, there's a lot of different factors that are filtering into credit quality in the muni market and keeping it fairly sustained in our view.
What's the biggest variable to your outlook right now? I mean, what would be the biggest catalyst for you to shift your current view on the markets right now, given all these moving parts heading into the summer?
Yeah, so I won't say I'll venture out on a branch in terms of this one. We're probably going to stick very close to the tree trunk, and it's the outlook for inflation, the outlook for Iran. So I would expect, if you've seen, if you look at just a chart of the price of oil relative to the price of the 10-year Treasury, they've moved quite precipitously since the wars began. So they've moved, I don't want to say necessarily in lockstep, but very close to one another. And that's really what longer term yields are trading off of. And that's just that outlook for inflation. So if we continue to see the situation in Iran further look like it's a muddle through and maybe a ceasefire is further in the distance, then I would expect that probably puts a floor on longer term yields. And we might actually see longer term yields potentially increase as well. So no surprise, but I'd say the big thing that we're watching is the outlook in Iran and the situation with oil prices.
Absolutely. Cooper Howard, thank you so much for your time, as always, and jumping on with us this morning. Director of Fixed Income Research and Strategy, Schwab Center for Financial Research. Coming up, it's time for the morning trade. We'll get a closer look at NVIDIA after the company entered the PC market. We'll explain that coming up next. Morning Trade Live. We'll be right back.
Markets. Download the Schwab Network app and stream live coverage wherever you are.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time.
From the most iconic trading floor in the world, this is Opening Bell with Nicole Petalides, live on the floor of the New York Stock Exchange, the countdown, the setups, the stories that make markets move. Minute-by-minute breakdown of the biggest headlines, earnings, and global movers, just the trades that matter. As the bell hits and the markets react in real time, Opening Bell, live at the NYSE, right when it counts.
While others recap the news, I help you read between the lines, from what's moving markets to what's next, with sharp takes and market know-how. Follow me on all social media platforms at Diane King Hall, and connect with me on LinkedIn for more.
Sometimes, you know, you could have done better. The same goes for where you invest. Level up and invest smarter with Schwab.
Schwab Network delivers real-time market insights, live from the NYSE, NASDAQ, the CBOE, and beyond. From earnings to economic data, we cover what matters as it happens. Streaming 24/7, anytime, anywhere, free on schwabnetwork.com.
We're back on Morning Trade Live. NVIDIA is jumping into the world of PCs with a new processor called N1X on a new RTX Spark superchip. The ARM-based chip will debut on laptop models from Microsoft, Dell, HP, Asus, Lenovo, MSI as well. NVIDIA CEO Jensen Huang unveiled the new processor during a keynote address at Taiwan's Computex conference earlier today. So that is turning out to be a major headline catalyst for this stock, in fact, more so than the earnings, and it's sending shares in Intel and AMD in the other direction, which I would say, having covered Computex for a number of years, is not a surprise, because NVIDIA does unveil some big announcements. Marley, who's giving us a closer look at this today in recent years. But just walk us through the details here, because this is, as I said, a huge market mover. I mean, particularly for some of those names that we spoke about last week, which were out with earnings as well. Even the software stocks, which are getting a look in today off the back of that as well.
Good morning, Sam. Yes, it's a huge headline, but it's not the only headline. NVIDIA just having a really strong day. We're up almost 5% so far on the heels of this keynote speech from Jensen Huang, where, of course, he did announce NVIDIA's new entrance into the PC market, but that's not the only thing. Let's start with that, though. Pushing into PCs with this new processor, like you mentioned, it's called the N1X. It's on the new RTX Spark superchip. That new superchip is set to reinvent Windows PCs for the era of personal AI agents. It's an ARM-based chip. It will debut on models from Microsoft, Dell, HP, Lenovo, and MSI. And Jensen Huang, as you said, at Computex came out announcing this new processor that they made alongside of Microsoft. That's the primary partnership here. It will be incorporated into that super chip, which will make its debut in the fall in this fresh line of Windows PCs from all of those brands that I just mentioned. Jensen Huang going to say, quote, this reinvention of the computer is as big a deal as the reinvention of the phone into what we know now as the smartphone. He pointed to the fact that agentic AI will run across all of these new computers, adding, quote, that Microsoft and NVIDIA are going to reinvent the PC. This is the first completely re-engineered, reinvented line of PCs that has happened in 40 years. In addition to this, the company also said that global AI labs are planning to adopt their new Vera CPUs. Those include names like Anthropic, OpenAI, and SpaceX. And they also have ByteDance, CoreWeave, Lambda, Nebius, Nscale, and Oracle listed as partners as well. Now, of course, they debuted that first Vera CPU back in March during the GTC conference, and now they're saying that they are fully ramping into production for the Vera Rubin platform to power these agentic AI factories. So a lot of really strong announcements coming out. Obviously, that PC announcement and its foray into the computer market, and then this commentary around this readjustment of the PC is going to be the same thing as when we move from what we called phones to now smartphones. Certainly could be a huge transformational thing, but also saying that manufacturers building standalone CPU systems at scale with this new Vera Rubin platform. Another big announcement here, some other big names: Dell, Hewlett-Packard Enterprises, Lenovo, Supermicro, Asus, Compal, Foxconn, Gigabyte, Pegatron, Quanta Cloud Technology, Wistron, and WeWin. So a lot of new partnerships unveiled here, a lot of progress on the Vera Rubin front. But of course, as you highlighted, Sam, that first major announcement, that big announcement, is this move into the PC market alongside of Microsoft in this shift to transform Windows PCs as we know them, with the inclusion of these LLMs from OpenAI and Anthropic.
Yeah, there's certainly something in there for everybody today. Sprinkling the love around. 5% now for NVIDIA. So thanks so much for that, Marley. We'll trade it now with Charles Moon, stock strategist at Prosper Trading Academy. Very good morning to you, Charles. Hope you had a nice weekend. How would you approach an example trade for NVIDIA this morning?
Probably pretty aggressively. I was looking for the breakout early today at around 17.5. And I love the idea that this is the stock's going to make a push towards around 225. I think getting above 225 opens the door for a revisit to the all-time high. So I was looking at a shorter dated contract, the June 15th 225 strike. I was looking to grab it at 4.5 or lower. So we're going to need a little bit of a pullback to buy in. I believe the stop should be at around 50%. That'll break it below key technical levels. And certainly show that the stock will be working lower versus higher. And I believe that if you grab these grab this trade, that the wins will exceed easily over 100% because of this push, especially with the near-term demand. You know, we have seen kind of the contrarian price movement where NVIDIA has shown strength today and AMD has shown some weakness, that the market is actually looking for a reason to buy into NVIDIA. And this is the one catalyst that could really spark up the actual demand and have it sustainable. We've seen what it's done to names like Dell, and Dell continues to push higher. ARM's performing really well on this news. I just believe that NVIDIA is going to be that Pied Piper for a lot of these names. And I just believe that that break of that 217, which they've struggled over the last week to get above, was really, really key today.
Okay, so key moment there for NVIDIA, trading at 220 bucks and change right now. Any thoughts on the overall market today as we kickstart a fresh trading month, obviously at these record highs? Obviously, oil seems to be the story today, but other than tech and that, what are you keeping your eye on?
Well, you know, it's pretty evident that we've seen somewhat of a rotation out of these semiconductor names. Not everything. Certainly, the component makers are going to benefit. I believe that memory and optic plays are still going to be really, really good on the heels of this NVIDIA news. But it's the software names that's really catching my attention. You know, cybersecurity names are starting to explode over the last few days. Okta, OKTA is really coming to life. Cloudflare and Zscaler off of a pretty bad earnings reaction is starting to come right back up off of these lows. But it's pretty notable that IBM in the last 2 weeks went from 52-week lows to 52-week highs. names like Adobe and CRM, which were kind of left dead in the water, are actively moving, like their names switched to AMD and AVGO. So, you know, we're seeing this kind of rotation back and forth. You know, it's a bit surprising considering how strong crude is, which is generally going to be negative for the markets. Obviously, the rise in crude is more of an impact on how negotiations in the Middle East are going. And I just believe that right now, while the markets are overall bullish, we have to be very careful as short-term traders, because we're going to be back in this news-driven market. And, you know, it's something that you really just can't foresee how the news feed is going to print out and how the markets will react to that news. So, you know, we're seeing a little bit more of the short-term thesis. We're seeing a little bit more of a chase of the momentum trades right now. And I believe it's going to be like that for the time being until there's more clarity in the Middle East.
Yeah, and just when we thought software was dead, I mean, the IGV up for, what, 7 weeks now, and 40% or so over that time, putting on another 3.5 today, 104 and change. So that's obviously something we've been watching very closely. Charles, always appreciate it. Thank you so much for that. Charles Moon there, stock strategist, Prosper Trading Academy. Coming up, we'll get a closer look at international headlines impacting global markets. Morning Trade Live will be right back.
Morning. Find out what's shaping early market action. Tech Check, Options Corner, Futures Focus, Technical Analysis, Morning Movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Stay connected to what moves the markets. Download the Schwab Network app and stream anytime wherever you are.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Morning Trade Live. I'm Sam Vardas, coming to you live from the New York Stock Exchange. Joining us now is Richard Flynn, Managing Director at Charles Schwab UK. Hello to you, Richard. So nice of you to join us. Hope you had a nice weekend. Just walk us through, first and foremost, since we've been talking about this PMI data here in the US, how things are looking in your neck of the woods. I know that we got some data out of Germany, France, the Eurozone, and the UK overnight as well. What are you seeing there?
Yeah, good morning, Sam. Great to see you. The story here is one of a bit of tightness in the UK economy. I think inflation is definitely a concern for the Bank of England. We had some pretty negative housing data come out overnight. The nationwide housing price index showed a drop of 0.6% in house prices, and that's the first drop that we've seen on a monthly basis in 2026. The old saying goes, an Englishman's home is his castle, and it's very true. I think, unlike a lot of European countries, we have
Apple sewn off, Tesla blushing.
And so people put a lot of store in those numbers when they come out. That obviously has led to impacts in mortgage rates, which are driven by interest rate uncertainty as a consequence of the energy crisis that we have at the moment. So the housing
I missed that bottom there.
Overnight is probably the biggest bit of data that
I would have took that probably.
To looking at the UK today.
All right, what's that going to mean for Andrew Bailey and co. in the next couple of weeks? I mean, obviously we're approaching
so the SPY's back down to a
meeting,
buck.
but all eyes on the Bank of England too, just because, of course, they're dealing with a very different situation there, and obviously not at the mercy of that dual mandate either. But what is the situation and the thinking going into this meeting?
Yeah, what is situation?
You know, June the 18th is a pretty big day.
Luck on the spy.
But it's their next meeting. What they're unfortunately in a position is they're in a bit of a hawkish pausing mode at the moment. They haven't got the ability to tighten things up because of the inflation risks, but also the economy is showing some signs of softness. Employment is falling. We hit a 5% unemployment rate recently. There was also a rather worrying report called the Milburn report relating to the volume of young people in unemployment. There's a kind of metric here called the NEETs, which are not in education, employment or training, between the ages of 16 and 24. That number got over 1 million people for the first time in recent history. And so there is a lot of concern about growth rates. And the Bank of England, I'm sure Governor Bailey will be addressing, or at least talking about the considerations on the employment market as they likely keep rates where they are for now.
Okay. Don't know what you have in terms of any ideas or views on what we're hearing out of SoftBank. I mean, not maybe on the deal specifically, but the fact that they're going to be making the biggest investment they've ever made in Europe, in the north of France here. I mean, I was looking at European stocks overnight, and while we've seen a pullback across our major averages here, in fact, tech was bucking the trend. And I don't know if you have any perspectives, Richard, on what that means for Europe as a whole, because there seems to be some thinking from my conversations across the pond here that, I mean, Asia has a very strong AI and tech story. Europe's kind of being left behind. Does this give it a little bit of an endorsement here, do you think?
Well, it's a tricky one to talk in specifics about, Sam. I think when you say it's been left behind, I would argue it's not necessarily left behind, but it's certainly behind in the race. You know, I think they are making strides to try and catch up. And I think that my guess would be that's what SoftBank are looking at. To put a UK lens to this, though, which is, I guess, why I'm here, it's interesting to see the global capital and where it's flowing. One of the headline problems that the UK government has is how we can move from being a nation of innovators to actually attracting investment and scaling.
We want to hold this support right here.
One of the big challenges that we have as a country. We have fantastic innovative firms, including tech firms and including AI-driven firms. The question is, you know, how can we prevent those firms from needing foreign investment on other markets and specifically moving to the US to list? That's a big problem. You know, I was looking at some data this week, which was really interesting. In 2025, the biggest IPO raise in London last year was Prince's The Tuna Cannery Company, which raised £400 million, and as an equivalent, the largest IPO in New York raised $7.2 billion. So the capital, the depths of capital are available, but not necessarily at the moment. And when you look at companies like SoftBank making investments in Europe, it's again something that the UK government has to consider.
Prince's Tuna Cannery, is that what you said?
You weren't expecting me to drop that on you today, Sam, but it's true. It is actually, it was the largest raise, £400 million last year. There's good money in tuna.
It certainly wasn't, well, yes, and no doubt I'm helping that trade as well. I'm a big fan of tuna, but no, that wasn't.
I'm a big fan of tuna.
Just
how about sardines, baby?
How are you folks out there thinking about the developments we're hearing out of the Iran war? I mean, obviously, this is impacting the inflation picture. That is something the BOE is going to have to deal with. But anything that you're seeing as far as the latest take and developments on that, given the weekend's events?
Yeah, well, today, as we've been on air, I've just got a couple of notifications about things breaking down to an extent.
Having technical difficulties.
From the UK, the UK is highly susceptible to these disruptions in energy, and you know we are.
We're at 112.
Exclusively an importer of energy, very reliant on
take profit
moves as a country. You know, there are other countries which are less dependent than the UK, and so as a result, we're in a bit of a sensitive situation as an economy. And again, back to Andrew Bailey and the realities of the situation from a central bank point of view. You know, the UK is going to have to walk this tightrope pretty carefully. And I believe the Labour government are looking at an electricity review to try and move away from gas fuelling in residential homes, which is again something which you wouldn't have expected a year ago. But here we are.
Yeah, and obviously that fiscal spending has been such a big part of the focus for investors moving forward, particularly when you're looking at yields across the curve. I know the gilt market has been a big focus as well. Thank you so much, Richard Flynn from Charles Schwab UK, as always. Coming up, it's time for Inside Out, and we'll take a closer look at HP Enterprise ahead of its earnings report this afternoon to bring you an example trade when Morning Trade Live returns.
Hey, and market moves.
I'd be careful today.
You move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock.
That could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Welcome back to Morning Trade Live. Let's go inside out on HP Enterprise now. So joining us to discuss this is Dan O'Brien, president at Futurum. Dan, nice of you to join us. What are you expecting from the numbers tonight?
Hey, Sam. Thanks for having me. Expecting great results tonight. I mean, I think we've seen pretty consistent performance across the sector. HPE getting a big pop at the end of last week on the back of Dell's blowout results. But all the signs pointing to us being still in the very early innings of the AI revolution, massive infrastructure build out happening. I take a lot of positive signs from the Cisco and the Astera Labs earnings earlier this season. Really strong performance on the networking side, and HPE couldn't have timed the acquisition of Juniper any better. They're getting a huge shot in the arm on the networking side, right as that bottleneck is really coming to the forefront of the AI infrastructure build out.
And that's exactly where the money is flowing. I mean, a lot of my guests have been saying, hey, look, it's not NVIDIA that's the only game in town, although it very much feels like it today. But we have seen, of course, a huge amount of capital going into those bottlenecks, like you're saying, across the AI infrastructure landscape, the chips as well, the memory too. 52-week high today for HPE. Obviously, we've heard a lot from the others in recent weeks. I'm just wondering if the bar is pretty high going into this one, or if they'll just prove like the rest of them they can jump over it.
I think the bar's really high. I mean, I think we're going to be looking down into kind of the sub points, right? Are the margins maintaining, kind of their profile, given the scarcity in the market? Are we able to turn that, into profit? I think we're also looking at, kind of where the backlog is going, right? I mean, one of the things that's really stood out to me is that this is not really just a hyperscaler build out. You're seeing this with the neo clouds, and what I took out of the Dell call last week was this is really happening at the enterprise too. And HPE has a particularly good and unique story around kind of that sovereign AI, that enterprise build out who really wants to kind of control their AI future. And I think they've got a really nice full stack story across server, storage, and networking. So really looking to kind of get down into the sub bullets and really understand kind of what's going on with HPE specifically, given we've generally got a pretty positive tailwind across the sector.
What are the key metrics you're going to be looking out for tonight?
Certainly, the margin profile, the AI backlog, that acceleration. I mean, we'll put a lot of weight onto the guide tonight as well. But really looking at how well they're managing the supply chain. I think that's one of the things that stood out to me again last week was, with Supermicro going through its challenges. There's not necessarily more net supply out in the market, but how that allocation is flowing, can really kind of lean in and accelerate one vendor versus another. So, looking into those data points as well. I'll also be looking at, any commentary we get on, future quarters and, kind of that conviction in the order book. I think we're getting to a point where some of these vendors are able to give maybe a little bit more longer term view, and, interested to see if we get any updates to the year tonight as well.
It's all about that visibility, isn't it? Dan, always appreciate it. Thanks so much for the preview for tonight. Dan O'Brien, president at Futurum. Thanks so much. Let's trade it now with Tom White, host of Fast Market. G'day, Tom. Just walk us through an example trade for HPE.
Yeah, implied volatility levels really elevated going into this report, Sam. Not surprising, the parabolic move that we've seen in the shares over the last couple of months here, hitting all-time highs in today's session. The option market's pricing in a massive plus or minus 19% move in either direction, about $8.70 in either to the downside or the upside going into this report. So a lot of optimism going into the report, but the bar is really high, as you mentioned on this one. So I looked at a strategy that I can offset some of the costs on this. The IV percentile rank is about 100%. So we're at the highest implied volatility levels that we've seen over the last 52 weeks in this name. So there's a lot of extrinsic option premium. So if you want to take a directional bias, you can still offset some costs on that directional bias. So I looked at something to the upside. If you think the stock is going to pop post earnings, I looked at a bullish call vertical here, and I went out to the June monthly cycle, the June 18th expiry. So you've got 17 days to expiration, so not a pure earnings play, so it gives you some duration on this bullish position. Where I'm going to buy the at-the-money 45 strike call, and that's the bullish portion of this vertical. And then against it, I'm going to sell the 55 strike call. So a bullish $10 white call vertical. You're going to pay roughly about a $2.50 debit for it. The debit you pay is going to be a risk. So on a $10 wide vertical, I'm only paying $2.50. So you've got a really good risk reward setup, risking $2.50 to make $7.50. It takes your break even up to $47.50 to the upside. That's only about 5% above the current share price in there. So well within that one standard deviation move that the option market's pricing in just post earnings on a one-day move. So this might be the way to look at it with higher implied volatilities. Hey, I can still take a directional bias, but I can offset some of the costs on that. Now, why did I pick the 55 strike call to sell against my long 45 strike call? Well, the option market into that June expiry on the 18th is pricing in about a plus or minus $10 move. So that kind of sets up with what the option market's pricing in. But you definitely need to move to the upside, but well below what the option market's pricing in at this point on this bullish call vertical.
All right, great stuff. We're counting down to the HPE earnings and report card later on this afternoon. Thanks so much for the preview. An example trade for us this morning, Tom White over in Chicago. And we're looking at a pretty flat picture here for the S&P 500 as, of course, we've got oil spiking this morning and some of these negative headlines are coming out of Iran. We've got a little bit of pickup in the NASDAQ 100 thanks to, of course, some of the news around NVIDIA entering the PC market here and helping out some of the softwares as well. We've got Microsoft having a very nice day as well. The Dow is underwater. Thanks for joining us here.
The Dow's underwater.
I'm Sam Vardas. You've got Trading 360 up next with Marley Caden. I'll catch you later.
And see if Marley's got any cleavage.
Checking. The checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you.
Or Tesla new low.
ATM fee rebates for cash withdrawals worldwide.
You got a double
No
bottom
overdraft
coming on
fees,
NVIDIA.
and enhanced security features to keep your money safe.
You got a double bottom off the wick. SPY needs to hold here. We got a triple bottom. Also got a head and shoulders. Got a falling wedge. So we got definitely some solid support here. And then if it don't hold, it's double bottom. Oh well. So you got kind of a fallen wedge. You got a head and shoulders. And you got a hard resistance. This is your triple top right here. Getting tight. Well, it's almost an ascending triangle. I mean, top part.
Memory sector. See how the analysts think some of those names are faring, and if any of those names may or may not be in a bubble. I'll tell you right now, at least one of them thinks that they are. Let's check in with the markets, though, see how we're faring as we kick off this new trading month. We are a little bit of a mixed picture today. The S&P trading just marginally lower. We're at 75.7426. On the NASDAQ, we're trading close to 0.2 higher this morning, 30,385. On the Dow, we are 0.4 lower, 50,827. We've lost a little more than 200 points so far today. And the Russell 2K is down 1.25% right now at 2883.50. As we jump ahead to some of our futures products and check in here, the 10-year is at 452. We are higher. The dollar at 99.25, also elevated today. Gold, though, moving lower. We're down 2.25%, 44.8920 a troy ounce right now. Crude oil back above the $90 a barrel mark. We're at 94.64 a barrel. That's up 8%. And in Bitcoin, we are lower. We are at 71,680, giving up all of those gains that we found about 2 weeks ago. We are now down closer to 3% on the cryptocurrency. Do you want to welcome in Alex Coffey, though, to take a look at another big name we have on the move today? Alex, talking about Dell today, skyrocketing to some new all-time highs after some coverage from Barclays.
Yeah, the stock's up like 9–10% again today. It's up over 55% in the last 5 trading days. I mean, easy math. That's averaging over a 10% gain every trading day over the last, again, 5 trading days. So, you know, your bubble talk, I'm not sure if it's a bubble or not, but it's certainly mania out there for some of these names. I got 4 analyst targets for you. Goldman buy rating, price target to 500. Mizuho outperformed to 500. Morgan Stanley, kind of the most bearish of the bunch. They upgrade, but they only upgrade to a neutral equivalent equal weight. Their price target is 448. And then Bernstein in outperform, which is unchanged, but a huge price target raise to 500. Now, I should note, these price targets are being adjusted substantially. Goldman went from 230 to 500. Mizuho, the smallest adjustment, is still quite large, from 435 to 500. Morgan Stanley going from 170 to 448, and Bernstein from 280 to 500. Key themes across the bunch here: increasing confidence in Dell's ability to scale, as well as its business mix, but really this strong belief in the demand that agentic AI is bringing this space broadly. Goldman Sachs, in particular, views Dell as a differentiated player benefiting from this AI infrastructure build-out.
Strange.
Mizuho talks about the ongoing supply constraints that are likely to support the movement to the upside here all the way through 2027. Morgan Stanley talks about execution and how it's all things that go across the business units. And then Bernstein really just looked at the company as firing on all cylinders and was really impressed by the exceptionally strong first quarter results.
I want to focus in on that Morgan Stanley note, though, because like you said, the most bearish of the notes, but their price target is actually under where we are currently trading. So take us through what the sort of the different look from that analyst is, as opposed to the others who all seem to see a little bit more upside here.
Yeah, I think in this case, this is a situation where you look at Morgan Stanley in particular. They said that they're managing the supply constraints better than peers. They see these memory concerns easing. And they said that they're gaining share in AI and traditional enterprise. They say that they're using pricing power more effectively than other companies. Nothing about it is bearish. To me, this is a situation where they probably put this note out. They worked on it for a couple days, and when a stock's up 10% every single day, it just becomes stale really, really quick.
Yeah, it didn't hold on this one, so we'll keep an eye out for an adjustment there. But Alex, really appreciate you breaking through all those latest notes from the analysts and that 9+% move that we're seeing in Dell today. I do want to broaden it out, though. Welcome in Ted Thatcher, our next guest, joining us, friend of the show, president at Bright Lake Wealth Management. Ted, great to have you on to kick off this new month of trading, although nearly entirely red big board right now as I'm looking at our major indices. But yet still, I'm saying record, 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 record. I think we've notched a few more than a dozen since March. So how are you looking at this rally and how sustainable it is?
Yeah, Marla, you know, I think coming into this weekend, investors were expecting positive headlines, probably pushing equity markets a little further, you know, thinking about positive headlines with the war in Iran. Obviously, we got the opposite of that. We've seen oil spike this morning. You know, we see the 10-year above 4.5, and still, you know, like you said, a little bit of red, but really flat on the equity side. And so investors, I think, have really said, hey, there's not that much risk with the war in Iran, especially the last several weeks. And so we're trying to say, okay, you know, how much risk is there here? Is the, you know, pulling out of the ceasefire by Iran really going to be sustained? And so ultimately, you know, we'll see that reflected in markets very quickly here. But right now, I think things are fairly stable, actually.
And as we look at the market, you described it in the notes that you sent over as being on cloud 9. Now, I'm not sure if you wrote that before or after this weekend. I'm also not sure that this weekend actually makes that much difference because it's not the first time we've priced in peace and not got it. But sentiment is improving. We've got a lot of chasing of momentum here.
So we're at 113. We might get up here to a double, triple top. 756.40 selling it short. Look pretty good. Kind of did exactly what I wanted it to do. Stop right there. Where it stopped before. With a little higher low there. Okay. Do.
At low end on the K, of course, that we've discussed and has been discussed so much in the last 12 months.
So with that backdrop, Ted, where are you putting fresh money to work right now? Where do you see the most opportunity?
The way I look at this, Marley, when we think about investors, again, always thinking about return and then risk and obviously what the objectives are in between. When we see a rally like this, rarely do investors want to go, heavy with a new bet when you do see run-ups. So I think it's important for investors to think about entry points as well as position size within their portfolio. That said, I think it's really a good thing to own leadership and the leaders in this market, specifically NVIDIA and Google. Again, I kind of mentioned their forward earnings, NVIDIA specifically, between 14 and 17 times forward. Jensen's been out in the media saying, hey, we deserve basically a much higher valuation. Of course, they're fighting the fact that they're the most highly valued company in the world. But if you look to the future and you start to take a little bit of a longer term view, 3 and 5 years out, I believe both NVIDIA and Alphabet are $10 trillion names. You see these huge companies kind of get re-rated at times, and so I would expect that to continue to happen to NVIDIA over time. Interestingly, of course, they had all these beats coming out of their Q1 earnings reports, and they almost kind of lost a little bit of value for it. Again, I think that they will eventually be re-rated here. And then, of course, on the Alphabet side, so much have they been rewarded for their full stack advantage, their TPUs, their Gemini, of course, model, and then I think most importantly, Marley, their distribution. And I only think that that's going to continue to grow in terms of the moat and the value they get from that.
Very good.
All right, and I know you also like some other AI plays, AMD, Micron, IREN here. Later in the show, we're having a memory conversation, so you may want to stick around to hear some perspectives, because I know there's one that's going to stick out to you, Ted. But really appreciate you being with us today to take us through the picks and also for a broader look at the markets. Ted Thatcher, president over at Bright Lake Wealth Management. And we've got a lot more for you today on Trading 360. Next, we've got the big three coming your way. 3 stocks, 3 charts, and 3 trades. Rick Ducat will take us through the
Can't wait. I'm excited.
Scott Bauer will take us through the trades for Arista Networks, the GLD ETF, and Dollar General. That's all next on Trading 360 on the Schwab Network.
No. Dollar General.
in the world. This is Opening Bell with Nicole Petalides, live on the floor of the New York Stock Exchange. The countdown, the setups, the stories that make markets move. Minute-by-minute breakdown of the biggest headlines, earnings, and global movers. Just the trades that matter. As the bell hits and the markets react in real time, Opening Bell, live at the NYSE, right when it counts.
She looks like you, Dad.
Aw, she's got your smile.
Carl.
Yep, your #1 broker's here to welcome your new little dependent.
Actually, we invest with Schwab now. They have everything we need all in one place.
I can set up her college fund.
I've been learning about new trading strategies.
Schwab helps me generate retirement income.
All this Schwab is everything you need is making me cranky.
Does somebody need a nap?
Schwab!
Invest your way with Schwab.
Welcome back to Trading 360. I'm Marley Caden. It's time for the big three. We've got 3 stocks, 3 charts, and 3 trades for you. Rick Ducat, of course, will take us through the charts. Here to take us through the trades today, Scott Bauer, the CEO of Prosper Trading Academy. Scott, great to have you back on the show. Would love to start with your thoughts on everything we learned over the weekend and now how we're starting off this new trading month.
I'm not sure we learned anything, but what is really significant out there is it is now the largest disparity between single stock volatility and the VIX in the history of that comparison. So we're seeing the VIX, in the 15, 16 range here, but single stock volatility is astronomical compared to the VIX. So I think that's just because of the major divergences that we're seeing across the board in different sectors. Definitely something to watch for.
And Scott, I don't usually ask follow-ups here, but I want to ask one now. I'm glad you highlighted that. What does that signal to you? How are you approaching trading differently with that historically new setup?
Absolutely. 2 things. A, I am definitely buying some upside in the VIX. I think it's just too low here. And then B, when I look at many of these individual stocks that have this implied volatility just really, really high, I'm looking to sell premium, typically sell iron condors. That's one of the setups that we're going to look through.
All right, so let's go into big 3 then and go through these first picks here. You've got Arista Networks as your first one here. They're more than 6% higher today, just as I'm looking at their chart alone. Walk us through your thesis on Arista.
Yeah, and that's one of them that I was just talking about. And we had been long this after earnings. We exited last week. The stock has now rallied and filled this major gap from earnings right around that 170 area, and implied volatility is very, very expensive. So I'm selling a bearish iron condor for this week to try and take advantage of collecting a lot of premium. So I'm selling this week's 157.5, 152.5 put spread, and also pretty close to being at the money 172.5, 177.5 call spread. Looking to collect $2.50 for that. That's a lot of premium for 4+ days remaining here.
All right, Rick, as we look at the volatility on this name, as volatility is part of the play here, what are you seeing in terms of the technical setup for ANET?
Right, so the first thing Scott mentioned would be the thing that I would also start with, is that we filled this very large gap that formed after earnings. So that comes in right around 170 or so. We're backing off a little bit from that point. So
nailed that AMD.
But a notable development to be
New
sure
high
that
on
stands
it,
out
but I
as a
didn't trade it.
potential upside breakout point now if the bulls can regroup and push above that area once more. Then we also have a resistance area here, 179.80.
Kind of like a cup and handle.
Highs. We did not quite test it again during the rally that we saw shortly before earnings as well. If you were looking more toward the downside then, the first area that I would highlight here would be around 150. That was one of our intraday lows that we saw. Beyond that, we could also see another pretty large gap down here near about 134. Beyond that, our 2 trend lines would be more of a symmetrical triangle type shape here. We have one going across the lows to the upside direction, one starting with our old highs to the downside, giving us an increasingly narrowing range in which price has been bouncing around recently here. So kind of a wide range to be sure yet. We're not really in that very narrow part of the triangle shape yet, but that could develop if we do see a rejection here at this gap. Our 5-day EMA in dark blue comes in a little bit below 160 here, so that could be a short-term supportive area. We also have our teal 21-day monthly EMA right around 153.45 at this point. So our moving averages are starting to diverge farther apart from each other. They're all pointing upward, prices above all of them.
Here's my second
not really
chance.
seeing the signs of trend interruption just yet, so be on the lookout for them to start to shift downward if you did have more of a bearish outlook. RSI trending upwards still. We are below the overbought threshold. If we push above 70, that could be more of a notable bullish sign. Finally, our volume profile study shows that much of our trading activity during the past year was a big block in this area that kind of matches up with our range-bound period that we saw for much of the past couple quarters there, between about 127 to 147.
We got two hard
A much
resistances.
smaller node up here at these highs,
And a triple
172 to 178, could present another hurdle as well.
All right, as we look at ANET, we're at 169.32 today, up more than 6%, but up more than 95% in the last 52 weeks. Now, Scott, your next play here is the gold ETF, Spider Gold Shares ETF, GLD. A lot of volatility here in gold. We've seen unprecedented volatility. I remember back in January touching that record high north of 5,500, and I think at the top of the show, I put us even under 4,500 today. So take us through this one.
Absolutely, and this one is based on a couple things. A, a buy the dip, and B, that we are trending right down towards the 200-day moving average, which has been significant support. We're not quite there yet, but I'm getting ready for this one. So in anticipation of that, I'm looking at just going out a few weeks to June 18th expiration here, and just buying a simple call spread, 415, 425 call spread. Looking to do that somewhere in the range of 250 or 275. GLD would have to come down a little bit lower and get closer to that 200-day moving average for that to happen.
All right, Rick, as we look at GLD here, I can see that we've got some converging lines, and walk us through what the setup is here.
Right, kind of, you know, in one way you could say it's another type of triangular shape here, but it's a bit more biased toward the downside. Our upper line is a bit sharper here, pointing downward, starting with those highs near 509.70. You could also argue potentially that this could be more of a descending triangle type shape. So we have our connections across these highs that we've established repeatedly, but you also could say all the way back here, we had this notable high point near 403. That was where we saw some gaps as well. That's around where we saw support a couple more times too. So this could give us this more triangular shape. Downward sloping trend line coupled with horizontal support, typically regarded as a bit more of a bearish setup. But as with all these patterns, you're really just looking for a breakout beyond either of these two established boundaries here. If we were to start moving lower, 395, another relative low point, stands out to the downside. But if we were to break to the upside, 427 would be a gap that we could fill not too far above current price activity. We also could see 440 as a series of low points and then a subsequent high that we saw, save for a little bit of an intraday breakouts above that level. It's mostly
JMC breaking out finally.
When we look at RSI, a triangular shape again here is forming. We are below the 50 midline, a bit more of a bearish outlook, but look for it to break above or below these trend lines concurrently with price. We have our 251-day EMA, 388, our yearly exponential moving average, coming in below our breakout area here. Meanwhile, to the upside, our teal 21-day comes in around 420. That would line up with our upward trend, or our trend line that's above our current price activity. Volume profile in this case shows small nodes here around 395, 400 or so, and then up here as well near about 420 to 430. So a bit more fluctuating here, not really clear defined nodes, but these are some areas that stick out in the short term.
Yeah, and GLD right now at 410, trading down a little bit more than 1.5% today. But your third pick in the big three has an earnings event tomorrow, so I'm guessing that might be why they're on your radar. But we're talking about Dollar General here, and I was just talking to my last guest about the consumer and sort of the difference between the commentary we're getting from all of these retailers that we're still spending that just doesn't jive with the sentiment we're getting that people don't want to spend anymore and feel uncomfortable, yet we still seem to be doing it.
And this is based right off of that conversation that you had, even though I said this earlier. This one really will define the K-shaped economy and kind of if we're really in that. So Dollar General, and this is totally just for earnings, very bullish play, looking to buy the 115, 125 call spread this week, pay around $2. And we're gonna see from this earnings report what they say and how much that K-shape is really being played out.
All right, Rick, as we look at the technical setup for Dollar General coming into an earnings event, clearly we have a downward sloping channel here, but what else are you seeing?
115 to 125 lines up pretty closely with some of the areas that I have highlighted here. 115 being the low point that we saw after our gap up from earnings in December, and then that was around where we saw lows. Subsequently, we had a breakdown around that level as well. Then 127 is where I have highlighted here based on those old highs. So that gives us a range to watch out for that example trade right around this area that we can see there. So we do indeed have a downward sloping channel type shape here between our two white lines. We saw some support in this area here near around 101, 100 or so. And then after our small gap to the upside here, around 108 stands out as a potential supportive area as well in the shorter term. When we examine our moving averages, we have a bit of a confluence to the upside here. Around 118, our 63-day and 251-day, our quarterly and our yearly exponential moving averages come together right around that level there, 118 or so. Meanwhile, to the downside, we have another confluence right around 108, 109. Our 5-day and 21-day, our weekly and monthly moving averages are around where we formed our lows so far today. RSI shows a bit of an upside breakout from our trend line, but also a rejection at the 50 midline. It's pretty common for momentum to slow heading into earnings too, so perhaps wait until after we see our earnings event to start reading more into that particular type of indicator. Now when we see volume profile, we have a node here that contains our point of control, the heaviest trading area of all, near about 113, the node in question, 109 to 115. Meanwhile, to the downside here, another concentration area between 102 to 106. If we were to get that upside breakout, the heavier area that we have next is a very small area between around 123 to 125. So pretty short range there that you could see some potential resistance based on volume.
All right, and with Dollar General right now, we are trading about 2% lower. We're at 108.38. We'll get those earnings tomorrow morning. And of course, we'll have coverage of them throughout the day. But Scott, really appreciate you being with us for Big Three today and for bringing those trades and also highlighting that disparity we're seeing between equities and volatility right now. Really appreciate that. Scott Bauer, CEO of Prosper Trading Academy, and of course, Rick Ducat, our lead market technician, for always breaking down the technicals for us. Coming up next, we are going to spotlight Zscaler and the cybersecurity segment. The company's CFO is joining us when Trading 360 returns.
Moves markets. Download the Schwab Network app and get live coverage wherever you are.
Hey, Dad. I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The two grandchildren planning for their college educations. Someday it'll be their turn. My man!
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Morning movers, be the first to find out what's shaping early market action. Tech Check, Options Corner, Futures Focus, Technical Analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Schwab coaching is concepts brought to life in the real world.
It's absolutely world class. We have coaches who have been in the industry and around the industry for a long time.
We have different formats because people learn differently at different times.
We have webcasts running through YouTube all day, every trading day.
We've got events
that are making their way around the country.
So you get that opportunity to share experiences and knowledge with other traders.
How incredible is that? And it's free.
Stay connected to what moves the markets. Download the Schwab Network app and stream anytime wherever you are.
Aw, she's got your smile.
Carl.
Yep, your #1 broker's here to welcome your new little dependent.
Actually, we invest with Schwab now. They have everything we need all in one place.
I can set up her college fund.
I've been learning about new trading strategies.
Schwab helps me generate retirement income.
All this Schwab is everything you need is making me cranky.
Does somebody need a nap?
Schwab!
Invest your way with Schwab.
Welcome back to Trading 360. I'm Marley Caden, live in our Chicago headquarters. It's time to spotlight the cybersecurity space. Joining us now, Kevin Rubin, the CFO over at Zscaler. Kevin, great to have you on the show. I'm just looking at your market action today. Really nice pop to the upside of about 10% so far this morning. But I want to talk about earnings that we got last week. I mean, it was a bit of a head scratcher for me. I'll walk through some of your numbers, right? I covered them live on air. You beat on revenue, you beat on earnings, you raised your ARR guidance, you crossed $3.5 billion in ARR. There was a lot to like here, but we saw a sell-off. So I would love to get your perspective on what you think Wall Street is missing here.
Yeah, thanks for having me on, and appreciate the opportunity to highlight the quarter. Look, as you mentioned, we delivered a very strong Q3. It was driven by a record $1 million plus ACV deals. I think where Wall Street was struggling, quite frankly, was we did provide an early look into 27 and growth that we were seeing today. That early look did provide or did reflect prudence given two dynamics that we're seeing today in the business. First, sales leadership transition, which I talked about on the call. And second, the commercialization of our new integrated SecOps solution and just uncertainty around the pace of uptake amongst our existing customers of that new solution.
And Kevin, in some of my other conversations just generally about cybersecurity, there's an argument that's being made that some of these slower growth rates should actually be viewed as healthy readjustments, natural readjustments in the life cycles of companies, as opposed to a sign that it's a long-term slow growth phase. What do you have to say to that?
Look, I think we are in a moment of time here in cybersecurity, especially for our business, that is going to be very COVID-like, right? You have Mythos and Mythos-like frontier models that are going to redefine what cybersecurity looks like going forward and how companies need to respond to those threats. And we think we're very well positioned to do that. Our early look really is more driven by dynamics that are specific to our business going into 27. But I think the tailwinds that exist in the market are significant.
So with those tailwinds, do you think that the market is just becoming too focused on near-term growth rates and missing the bigger picture overall?
I do. I think that we have gotten so accustomed to seeing some of the AI companies and the just incredible growth that those companies have put up, and it does distract from what are very solid scaled businesses. I mean, we're a rule of 55 company at $3.5 billion in ARR. I mean, that's a significantly scaled business that has continued to perform incredibly well. And I think, investors are looking far too narrow-sighted in terms of growth rates, in my opinion.
And every day we talk about AI. I think it's a rare interview wherever I get through without talking about AI. And as far as you're looking at AI as Zscaler, we have this continued conversation about, is AI a threat? Is it not? What makes AI a growth opportunity for Zscaler specifically?
Yeah, I mean, we have built a incredible global infrastructure, the largest security cloud in the world. And it doesn't appear to me that the frontier models are seeking to build out that level of infrastructure. So I think we have a significant opportunity with AI. And if you look at what has transpired recently, you've got frontier models identifying vulnerabilities at a rate and pace that we haven't seen ever. And so you think about your typical large Fortune 100 business, they have already got a backlog of thousands of vulnerabilities they've yet to be able to patch. And now with these new frontier models, that has just grown exponentially. And they're struggling with the level of vulnerabilities they have to patch today. I don't know how they're going to be able to handle the onslaught of additional vulnerabilities that are identified. From our point of view, put everything behind Zero Trust Exchange, and you can't breach what you can't see. And so we have a very differentiated architecture that allows our customers to essentially hide behind our global security cloud and not really have to worry about vulnerabilities because they're not exposed to public clouds.
And I want to talk about the acquisition of Symmetry Systems because I find this fascinating. Visibility into AI agents and the agent-to-agent communication as a part of the cybersecurity protection and an important piece to this security challenge. Why was this acquisition so important for Zscaler?
Well, it provides us with a very innovative data graph. Essentially, it allows us to understand what permissions are being inherited or being used, and we can directly apply that to agent-to-agent communication with an agent exchange. I mean, if you look at where we've built our business, it started with protecting zero trust for users. We've since moved it on to cloud workloads, branches, which we describe as zero trust everywhere, and soon to be zero trust for agents. So if we're protecting millions of users and devices today, you can imagine that's going to become billions of agents tomorrow, and being able to integrate Symmetry's technology into that is just another key piece to significantly differentiating our platform from others in the market today.
And Kevin, you highlighted how many issues so many companies already have that need patches and repairs, and we're just playing catch up really at this point. So where do you view us? I'll use the sports analogy because everybody likes to talk about what innings we're in here, but in terms of the game of AI security spending, as far as where we are in the game in terms of innings, are we still in the very early innings, or are we meaningfully into it where customers are already beginning to allocate significant portions of their budget to AI-related security solutions?
No, I believe we're at the very beginning stages of this. I think many companies have been rushing to take advantage of AI and deploy it within their organizations. And we know from a variety of surveys that have been in the market over the last 90 days that very few companies have actually been able to keep pace from a security perspective. So I think this is very early, and I think you're going to see budgets continue to be allocated to protecting AI use, both within the organization as well as how AI gets incorporated into commercial products. So we think this is a big tailwind for us.
Kevin, really appreciate you taking the time to be with us today and give us more insight into Zscaler and your outlook going forward. Really nice pop for Zscaler today, up 11%, trading at 155.21 right now. And that's Kevin Rubin, the CFO at Zscaler. Thanks again. Coming up next, we've got the disruptors. George Tillis going to give us a closer look at IBM today, rallying after negating nearly 30% just in May alone. He'll have a breakdown of why we're moving higher yet again and an example trade for us coming up next.
Lunch is ready.
Schwab Network. Tune in 24 hours a day, 7 days a week on SchwabNetwork.com
And on all your favorite streaming services. Schwab Network.
Available anytime, anywhere, on any device for free.
How's it going?
First day, so.
Sometimes, you know,
Next. Try it again.
you could have done better.
Please.
Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Nicole Pedalides, live at the New York Stock Exchange, and this is the Watch List. Your midday view into the trends driving the markets with a sharp
Let's break it on SPY.
technology, innovation, and companies leading the next wave of growth. Big movers, real-time interviews, and insight from analysts, founders, and market voices you trust.
Nailed that for sure.
The Watch List, 2 p.m. Eastern, only on Schwab Network.
On the call
is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of
wedge,
passionate
breakout,
traders ready to
pullback.
tackle your trading questions,
Boom.
no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform.
Hey, Bob. Hey, Andrew. Last year, my dad had a stroke. Big shock to see this person that I've always seen in our family be vulnerable.
Wait, I had a stroke?
Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial consultant. I probably
I am not your financial consultant. I've never met
Any
you.
questions I ever have makes a huge difference when you have someone that actually cares.
Welcome back to Trading 360. I'm Marley Caden. It's time now for the Disruptors. George Tillis, our senior markets correspondent, here with today's company. We're talking about IBM today. We saw the stock surge nearly 30% in May due to quantum computing momentum, but we got Barclays initiating coverage with a buy rating today, mostly focusing on software here, though, George, and we're up almost 9% on the heels of this note.
Yeah, this is something I talked about last week. At the end of last week, we're actually seeing a pivot going back towards the software services-based businesses, especially the enterprise software names. If you look at IBM, I looked at the last 30 days, the stock is up about 38%. If you look at companies like Oracle, ServiceNow, Workday, Intuit, I could name another dozen or so. A lot of these names have actually been moving considerably to the upside over the past, week and a half or so. So there may be a little bit of a pause in the hardware tech space with, companies like AMD and Intel down, and maybe some mobility or rotation back into value areas of the software stack. And IBM is interesting in the context, I think, of what's happening from the standpoint of data analytics, but also enterprise software, hybrid cloud, virtualization software with Red Hat. They essentially bind together, artificial intelligence, cloud networking, data analytics together, and it's a very well trusted company with a global history and a legacy franchise. So I think that's an interesting case for IBM's movement in the past, 30 days or so, hitting some new 3-week highs. And so if you look at, Barclays is looking at, they initiated coverage on IBM. They've got a price target of $350. They still see core stable growth around its defensible enterprise portfolio, software portfolio. They see solid growth going forward, higher margins because of integration of AI and networking and enterprise software. And they also did mention the quantum computing because that's essentially where this ignition for IBM started last week. Now, it could have been coincidental that IBM got the quantum news with the $1 billion grant from the Department of Commerce alongside some of the other quantum names, but I think it corresponds with the movement in the other software names that were already going on, including ServiceNow and Oracle and even Microsoft. But they do see that quantum computing is an interesting option value for IBM. It's not their core business, but it certainly is, a periphery business that has a lot of potential going forward.
And as we talk about quantum computing here, I was so surprised that there was just very little mention of it. I mean, I think it said It represents a very interesting option value, and that was pretty much the only mention here, especially after we've seen such a takeoff in terms of its conversation around quantum in the last couple weeks here.
Yeah, look, I think this is an interesting area, and if you look at some of the bigger names that have already presented, in the quantum space, IBM and Google are two of the larger players in the quantum R&D space. So they got a boost, and they did get, at least IBM did, receive a $1 billion grant from the Department of Commerce alongside, it was an addendum on the CHIPS Act from the Trump administration. So that boosted many of the quantum names. IBM also got the boost, but I do think that there's a corollary between what's happening with IBM's price outside of quantum as well, which is the enterprise mainframe software that is binding together hybrid cloud virtualization, data analytics, and essentially all of the networking needs for integrating technologies like artificial intelligence to the end consumer, but also in the enterprise backbone aspects of the business. So that's where I think that the majority, that's where the majority of their sales come from. But quantum is certainly an addendum to what's going on in the context of the tech ecosystem, which is growing, and it's an interesting space. And IBM is certainly a company in the quantum field that is profitable amongst other businesses.
Yeah, I mean, interesting to say today's call sort of echoes something from Oppenheimer that we got, where I think they called their software portfolio sticky. And I was what do we mean by this? They said if clients are returning to their products, even though there are other options out there and alternatives, a lot more alternatives even now. But very interesting, as we look at the momentum here on this name, George, I mean, another 9% pop. You highlighted that infusion from the federal government. I mean, just in the last month, we're up 40%. So how would you look to trade IBM right now?
Well, so if you look at the price action on a weekly chart, it's breaking out to a new high, at least on the weeklies, which is around 315. So the stock seems to have at least stabilized right around the 325-ish area. So what I'm going to do is I'm going to play trend continuation here, going out to the expiration for June, which is the third Friday of June. And I'm basically going to buy a call spread, and I'm going to buy the 325 call. I'm going to sell the 340 call against it. So it's a $15 wide spread. Altogether, it costs you about $7.50 a share, or $750 a contract. So ideally, we'd like to see a continuation of IBM higher, as it is now breaking above a 3-year trading range high, like I mentioned just a moment ago. If you do structure this trade, your break even, if you do hold its expiration, is $332.50, and then your max profit is $750 on $750 cost. So it's a 1-to-1 return on risk, and that max profit will occur at $340 or higher by expiration. So it needs $15 approximately from the current price, give or take $325 is where it's at to achieve that max profit.
All right, playing momentum on this one. We've got a
George, you didn't make no sense at all.
The upside here, George. Really appreciate you taking us through that latest note from Barclays that initiated coverage, and also for the example trade there. I'll talk to you a little bit later today. That was George Tillis. Coming up next, it's time for our 360 round. We've got memory stocks in focus. They've been one of the best trades of 2026. But are we in a bubble? Our panel's going to weigh in when we come back.
Oh, come on, Marley.
Trip powered by.
Are we in a bubble?
Unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization. And
we're coming to the first support.
Up to the minute news and insights.
SPY. SPX 2. If I can do this, so you can do it too. I don't know. I'm gonna wait. We're almost to the VWAP over here. So if we want to stay bullish on the /ES, SPX. Oh yeah. Already had a good bounce here. One for the 7600s. There's a doji. I make the best soup. Very, 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 very good. Take him. No, you missed me. There's a doji right there. Oh. Belch. CRWV's at it again. Wow. D-Dog's up. An arm. These some big bounces on these things. $64. Disturbing. CRM's up 1982 with a new high just now.
To 3 months, and so it gets very difficult to keep up with these prices. But really what's baked in here and what we think the key levers for investors to look at on both Micron and SanDisk is really how high do we go in the current upcycle, how steeply does that come down thereafter, and then do we ever get to a landing point at some point in the future that we could call mid-cycle, and what is that landing point? And to be clear, our valuations have come up enormously over the past 12 months on the memory names. And that's really reflecting that this cycle is going higher more quickly than we expected previously. And we think that that future mid-cycle landing spot is a whole lot higher now where it lands versus what we thought it might be 12 months ago. But it's really baked in these sell ratings, or 1-star ratings as we call them at Morningstar, is baked into how much we expect that cycle to turn down after it peaks. And again, we think if you're a short-term time horizon over the next 12 months, things look a lot rosier. But for any sort of long-term investor that's not trying to speculate on the price movement in a short-term horizon, we think that these look risky and overvalued.
All right, and Ed, I want to jump to SanDisk, the other one you've both mentioned here. We're up 640-ish% year to date. We're at $17.57 in terms of our price. You have been more constructive on SanDisk than Micron, though. So why do you view SanDisk as having a better risk-reward setup?
I just don't think that SanDisk is as expensive as Micron is. When you look at the valuation of SanDisk is a lot more acceptable than Micron. And SanDisk is storage and Micron is memory. And the storage market is in great need of a lot of capacity. And I think that SanDisk represents a better risk reward than Micron does.
You think so, huh?
And William, last question to you. What's your thoughts on SanDisk right now in terms of how it stacks up against a name like Micron? Are you also seeing this as in a super cycle here as well?
Yes.
Yeah, we are, and we think that very similar dynamics are playing out across the NAND and the DRAM markets. Our fair value estimate on SanDisk is $1,000 a share, so a little bit less overvalued than we have Micron at, but still 75% above what we think it's worth to investors. So we see very similar dynamics. There's a huge amount of AI demand going on. Demand is soaring, and supply is extremely constrained. So again, those prices are just skyrocketing, but long term, we expect them to come down to earth.
Really appreciate you both being with us to take a look at some of these most talked about names in the markets right now. William Kerwin, equity analyst at Morningstar, and Ed Batowski, managing partner at Chapwood Investments. Also want to thank all of you for being with us today on Trading 360. I'm Marley Caden. You can download our free Schwab Network app in the Apple App Store, and you can tune in 24/7 on schwabnetwork.com. I hope you'll join me at 3 Eastern, 2 Central for Market on Close. Have a great day.
Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in...
That's how you do that. Tesla bounced back a little bit from its dip. Intel's at 111.33. Hit 105 this morning. 106.
1/4%. The Dow taking a step back. It is off by just shy of 1/4%. NASDAQ 100 is the top of the leaderboard, better by about 1/3%. Russell 2000 lower by 3/4%.
That's what I get for daydreaming.
Today's show, we'll look at example option strategies for NVIDIA. It's gaining ground today as it moves from data centers deeper into desktops. Plus, the team from Lightfolio will be along with new sentiment data on Dollar General. And HPE is also on our radar today ahead of its quarterly results. Now that we've got the roadmap for today's trading action, it is time to bring in my co-host. You've got Tom White in our Chicago studio and Kevin Higgs joining us live from the SIBO. The band is back together again. All right, guys, the Bulls and Bears are going head-to-head today. Oil prices jumping. We're sitting around $93 a barrel on WTI. It's keeping gains in check after a record-breaking month for stocks. Tom, let's start out with you. Your take.
I think if you take a look at, there's only 2 of the S&P 500 sectors out of the 11 that are in positive territory: information technology and energy. Of course, you mentioned crude oil up over 7% today, but it's not negatively impacting stocks. I mean, we went down a little bit when that report came out of Iranian media that basically said, hey, they're not going to communicate through third parties with the U.S. anymore. They're talking about maybe closing, Straits of Hormuz completely at this point, but it's not negatively impacting stocks. So once again, the optimism in the equity market continues to get pushed, pushing aside any of the geopolitical concerns here. And I think that's, a telltale sign that maybe we're getting a little bit frothy at this point where, the market kind of ignores what's going on and what could potentially happen in the Middle East. Is a deal getting worked out? Is a ceasefire going to hold? Will Israel keep pushing more into Lebanon? So, yeah, there's a lot of different dynamics that are working out right now, but I'm just really surprised that we're seeing equities as firm as they are, even with these headline risks. Now, the reasons that we have seen the growth in equities is the fact that earnings season this quarter has been really good, right? We're at a beat rate in the mid to upper 80s at this point, with nearly 90% of the S&P 500 companies reporting. So that's kind of lent some credence to it. And I think the market's getting comfortable with this higher interest rate environment with the 10-year at 4.5%. I just think maybe, it's a little bit maybe too optimistic in my opinion at this point, just due to the fact that I think there's still a lot of headline risks out there for the economy. But the equity market is a forward-looking product, and it's looking past what's going on right now in the Middle East, and that there's going to be a resolution at some point.
Great call out on the sectors in the S&P 500 because we actually saw the same thing on Friday, albeit it was one sector that was different. Information technology was at the top, and it was followed by financials, but by some distance. So those were the only two sectors in the green, even though we finished at all-time highs. Kevin, your take as you look across the market as we kick off a new month.
Yeah, I think this market gets more and more concerning because the leadership, in this case information technology, if you take energy out of the mix, and energy just goes up and down with crude oil prices in most cases, this market is a one-string banjo. It's information technology, it's everything surrounding the news that came out with NVIDIA, and it's nothing else on the upside. And that should concern bulls, because without this incredible market that we find in information technology and correspondingly in the NASDAQ, this market does not have a lot going on, and it's starting to get more and more concerning. Now, as you know, NVIDIA's news is really good for a lot of names. Not good for Intel, not good for AMD. It reminds me of the days when Amazon used to get into business. When Amazon attacked your business, you were either the middleman or you were the high margin player. And then Amazon would get in that business and those stocks would go down and rarely recover. You remember the moves in Kroger. Well, now here's NVIDIA getting into this business that Intel and AMD were dominating. That's why AMD stock had rallied so much, because they had that dual product in not only GPUs, but that their business was growing, but CPUs. Now, NVIDIA getting into CPUs with their Vera chip, it's
coming back down here.
It's a game changer, and you see the effect. And so,
what time is it? Let's see, SPX. Where are you? The 7600s. Now we kind of broke out. Now we've pulled back. So let me put the flag in here. They're 7600s. We're squeezing between the VWAP and the 50 over here on /ES.
Just recently, you know, maybe it is, right? They're growing into this higher valuation at this point, but, you know, on a technical basis, the RSI of 83 on Dell, you know, it's getting frothy, right? But is it growing into those valuations? I think that's something that we're going to have to kind of wait and see on if they can continue this growth rate and this margin expansion. And then on the flip side, with ARM Holdings, this whole infrastructure, you know, ARM's royalty-driven business, this is going to be probably for years to come with this demand for server CPUs and NVIDIA getting in there using that ARM architecture at this point. So, yeah, that's a benefit, and that's why that stock has gone parabolic and hitting record highs also. So, yeah, a lot of positives coming out of an area in a sector, guys, that I think that is driving markets, right? They're big components within the major indices at this point. When you look at, you know, Dell and then Micron getting into the top 10 and as far as weighted components within the S&P 500, can that, what's the breaking point, right? Are we going to have tech continuing to lead and maybe the other 470 names start to play catch up? Because the equal weight index is basically right at or near all-time highs. Or is tech getting a little bit frothy here? I think that's one of the things that investors you know, kind of have to figure out. But this momentum trade and this optimism for the space, that this investment's going to continue over the next several years, not just maybe into the end of 2026, is the reason. And a lot of these companies, you know, are frothy as far as the technical sides and the moves that they've had, but at the same time, if they're growing into these higher valuations and that they've historically had, then maybe it's not a bubble, and maybe this investment cycle continues for more than a year or two.
Kevin, further thought from you on the, in particular on Dell.
Yeah, you know, I spoke this past weekend out in California to a bunch of Schwab clients, and the first thing I said, Diane and Tom, when I got on stage was, Michael Dell, why did we ever doubt you, right? This man is turning out to be one of the most savvy, most incredible CEOs in American business history. And so he basically love-bombed us with everything. It was explosive AI demand. It was backlog. It was guidance. It was the Pentagon contract. It was all these things he gave us in one. And today's, you're just seeing a follow-through of Friday's price action. Now, ARM, that's, remember, what is going to build the CPUs for NVIDIA? ARM is going to build the NVIDIA. So this is an extension of the massive deal and new products that NVIDIA is putting out. So both of these are benefiting, but you know, let's put it this way. Both are benefiting from AI demand. Both are benefiting from relationships with NVIDIA, and both these stocks are having historic, incredible runs, and there's reasons for those, right? And so, looking at these names, these two are named in two different ways, are right in the middle of the AI infrastructure build out, and so at least if you look at an S&P 500, these two stocks should be going higher.
And two guys, Anthropic confidentially submitting a draft S1 to the SEC. This news just hitting the wire moments ago. Anthropic saying it submitted its draft registration statement to the Securities and Exchange Commission for proposed IPO. As we know, we've been anticipating this IPO to come, so it shows the IPO market is indeed heating up. They said the proposed IPO will depend on market conditions and other factors. The number of shares to be offered and the price have not yet been set, but this is certainly something we will continue to watch. We've been having this conversation about big mega IPO set to come to public markets.
7600s.
So, they have confidentially submitted their draft.
The 70 SPX Lotto 7600s. Calls. One 175. 170 right here. $170 off 200 EMA. Boing. Blake. Come on.
And Microsoft's big investment in OpenAI was taking a hit a little bit. They got dragged down with the SaaSpocalypse trade also. So yeah, making up some ground on some of their competitors within this space, and this partnership with NVIDIA is definitely a benefit for them.
Yeah, and you have those investors who were believers breathing a sigh of relief as it makes up some lost ground here. All right, guys, let's put a pin in it. We've got bull versus bear coming up. The guys will get their example trades put together for NVIDIA after it makes a big push beyond the data center. We'll have more fast market after this break.
You see it in the stock action. NVIDIA up, Intel and AMD down. I think this puts a whole new
down $10
going on with CPUs and PCs
and we broke out of the channel.
and everything. I just think it puts a whole new level of energy under NVIDIA stock, Diane, Tom.
Oh, it does?
Tom, your thoughts on NVIDIA?
Yeah, I mean, you take a look at the resurgence that we've seen in the CPU market, and that's why you're seeing those massive rallies in Intel, AMD, that x86 architecture that Intel kind of started out and AMD's been taking market share, is the demand side of this. And now all these partnerships that they have, including with Microsoft, Jensen Huang said he's going to come out and, they're basically coming out and reinventing the PC, reinventing the laptop. This is the biggest change as far as hardware technology that they're going to see since the addition of the smartphone years ago. So, yeah, a lot of adjectives thrown out there that revolutionizing maybe the tech space in this in this world. But at the same time, Kevin mentioned it earlier, if you start getting NVIDIA into portions of your business, and that's why you're seeing the weakness in Intel, Qualcomm, AMD, you start getting NVIDIA in there, and maybe they innovate quicker than them, and they play catch up with them, and then they partnership with Microsoft, with Lenovo, with ASUS, and some of the others in the hardware making segment of the business. Yeah, it kind of makes sense at this point because CPU prices have rallied so significantly over the past 6 to 9 months or so. So this makes complete sense. They're going to use that ARM architecture. We talked about that before. That's going to help that company. But yeah, this is just another step in the evolution of what Jensen Huang's trying to do with this company and have their foot into every aspect of not only the AI infrastructure build out, but as Kevin mentioned, humanoid robots, robo-taxis, everything at this point. And that's probably a benefit for NVIDIA. You're seeing the reaction in the shares up over 4%. And we're still not back to all-time highs yet either, guys, especially after that earnings event where they grew revenue 87%, data center revenue grew 77%, another blowout quarter, another beat and raise quarter. And now, we're starting to see investors wake up to NVIDIA once again.
Okay, they're like, let's get in this one, clearly, by the price action today. All right, let's get into the trade examples. Kevin, let's start out with yours. What's your approach today?
Okay, what I wanted to look at was a way to be bullish and give yourself time, right? I think with some IPOs coming up, you never know what the price action is going to be. People could be raising capital on such a large cap tech name, such a widely held name. So what I want to do, I want to be able to let these IPOs happen and then let this play out over a long period of time. So I went out to the July 17th expiration. I gave myself a month and a half for this to happen, Diane, and I bought the first thing I did, I used the right-hand column of the Thinkorswim platform to look at the expected move out to July 17th, right around $29.50. Let's round it to 30. And so what I looked at was an unbalanced butterfly, buying the 220, selling the 250, in line with that expected move on the right-hand column of the platform. And then to finish the unbalanced butterfly, I sold the 250, 260 call vertical. And so I've got an unbalanced butterfly and I'm long a $30 strike, short a $10 strike. I put that in around $7.85, maybe trading a dime more than that now, but it can max out at around, what's $30 minus 8? Around $22. And so, Tom, this is one of those, gives you time, gives you a month and a half, has an upside posture to it, but if NVIDIA were to blow through 250 and head towards 260 and higher, you don't lose your profitability on this butterfly, something that often frustrates investors in butterflies.
Yep. Yeah, let's take a look at this and break this one down because it's a longer term call butterfly that's bullish on this example trade as we've got 46 days until July expiration on this butterfly. So let's break it down. Buying one of the July 17th monthly, the 220 strike calls, sell two of the 250 calls, that's where you want it to go, and then buy one of the 260 calls. So in essence, you're buying a $30 wide bullish call vertical and selling a $10 wide call vertical to create this unbalanced call butterfly to the upside. You're paying roughly about a $7.85 debit. So there's your risk, $785 per spread. You can see there the break even goes to $227.85 to the upside. That's basically about $6, $7 above the current share price. So on a percentage basis over the next 46 days, you don't need a big, massive move to the upside on this one. You do want to kind of grow towards that 250.
Finally, come on, break out.
If this thing blows through, goes to new all-time highs, goes through 260, it's still more than a double
we got a triple top up here
on this particular trade. So yeah, looking for giving yourself some upside exposure, offsetting some of the costs by doing the unbalanced call butterfly as opposed to just buying maybe the 220.
Jim, for God's sakes, you're green again.
On this, by turning it into a butterfly, you offset some of the costs on that. But you definitely need a move to the upside. But hey, you've got 46 days in a slow grinder. If it goes back above all-time highs of about.
We are now, the 9 is crossing the 21. We had a little breakout.
But I looked at a different strategy that we typically don't talk about on the show. We talk about iron condors, but not an equidistance condor that I looked at. And this is on the put side and really short-term positioning on this one. I went out to the June 12th weekly cycle. So just about a week and a half in this particular trade, 11 days, where I'm going to buy one of the 220 strike puts. It's basically at the money. The stock has moved a little bit higher. Buy one of the 220 puts, sell one of the 215 puts, sell one of the 210 puts, and then buy one of the 205 puts. So $5 wide bearish put condor, paying roughly about $1.25 debit on this trade. It's probably going to be a little bit less than that because the stock has moved a little bit lower. Probably trading about 115, but that debit you pay on this is going to be your risk. So if you pay $1.25, $125 per spread. You can see from this risk profile that it apexes out between that 215 and 210 strike that you sold. You sold each one of those on this trade. And your break evens on this one, where you want it to kind of settle in, is between 206 and 206.25 to the downside and 218.75 to the downside. So Kevin, when you look at this, yeah, you've got two break evens, right? But the risk you pay is going to, the debit you pay is going to be your risk on this trade. You just think maybe it's going to grind a little bit lower. You've only got 11 days in this position, so it's really short-term bearish outlook. You just don't want it to kind of go higher, and you don't want it to just fall out of bed and go back below the 206 level.
Yeah, I think this is an interesting discussion topic here because really, if you think about it, the condor and the butterfly are really in the same family, because though an iron condor is a short call, short put, you're long a put vertical and short a put vertical, much like the butterfly is, except your short strikes are not the same. You're giving yourself an area where you can be profitable. And this, it's between the 215 and the 205 level on the downside. So these trades, though they look different, are actually very similar in how they do, because you're long a put vertical in times and short a put vertical. I'm long a call vertical and short a call vertical. You both have targets where your short strikes, but Tom has more of a range target, where mine is more specific, Diane. It's a great way to look at these types of trades where you're buying one spread, selling another.
All right, good stuff there. Those are example trades there for NVIDIA, which has been gaining some ground today. We've got cash tracks coming up. The team from Lightfolio will be along with new sentiment data on Dollar General ahead of its quarterly results. Has been an underperformer year to date. Stay right here on Schwab Network. Fast Market. We'll be right back.
I'm Sam Bond.
Stock Exchange. When the market moves, we're on it, getting the reaction, the strategy and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform.
My parents didn't really talk about money at all. In college, everybody around me had money. I didn't want anybody to find out that I wasn't middle class. I was using credit cards to do anything and everything. I ended up with $20,000 of credit card debt. That's when I kind of realized, like, all right, I have a money problem. This is about how my finances got wrecked and how I fixed it. And if I could do that, you can do it too.
No politics, no spin, just the market from open to close and beyond. Streaming 24/7, any screen, anywhere at schwabnetwork.com.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it. To leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years through purchasing of houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Go back to Pat. It's Mark here on the Schwab Network. I'm Diane King Hall alongside Kevin Hinks over at the CVO. Time now for our cash tag segment. For that, we want to bring in our next guest, and that is Andy Swan, co-founder of Likefolio, taking a look at Dollar General today ahead of its quarterly results. Andy, so we recently got some results from Dollar Tree, and one of the things that showed up there was a shift in, more consumers from higher income brackets going there. At the same time, even though ticket size was increasing, traffic was increasing. What does your latest sentiment get it at a headline level?
Headline level, I think that's exactly what's going on. A lot of consumers are trading down. They're seeking value. And
did anybody take this trade with Bobo? Yes or no? Yes or no? Anybody take trade with Bobo? Yes or no? There you go, 220. I think you know what to do. That's how you do it. So what do you think about that? V-Whopper. 2 cap took it. Time for me to get some praising. V-Whopper ticket? Yes or no? Prison guys on.
Say, all right, last quarter we gave some cautious.
Well, that's how you do it.
And we're starting to firm things up a little bit here because the consumers are moving.
Randy, were you scared?
Direction.
Andy, this stock is, it spent a lot of time right around $100. It's bumped up to about $109, $110, and it looks like the sentiment is starting to turn up. Now, we know that this company...
You don't know jack shit.
A lot of them are rural, right, where people may be trading down, especially as gas prices get and stay high.
The rich ain't gonna care. The rich go to Dollar General. Come on. Who are you kidding here?
Are you seeing, do they participate in this trade down? Are they one that you can look at and start to see a recovery? Because their footprint, their value proposition, if people are trading down, they should be the beneficiary of that, Andy.
Yeah, and I think we saw that with Dollar Tree last week. Exactly what we're talking about.
Nobody shops at Dollar Tree.
Perhaps even better positioned than Dollar Tree to capture a lot of that trade down type of value seeking customer. You see the big moves in consumer demand for Five Below and Ollie. Those are different customers. Those are
they said the same thing about Walmart.
Spontaneous
what happened?
Purchasers, but it's also
they said the same thing about Walmart and what happened. They're lying.
And exponentially growing the difference between the people that are making a lot of money and the people that are just barely getting by. And so Dollar General is the natural recipient of all of those customers. And not just that, but it's also, this is a company that executes really, really well at.
I disagree with you.
So those customers that they are.
If this is how it works, prison guy, we have a thing called Amazon, ordering online. If I want to look for something and I want to look for a discount, I'm going to go online and look for it, so I won't have to get off my couch. Sorry, I had to get physical with this guy.
When you say there's no risk in that name, what's the risk that you're looking at?
It is the overall consumer. So, we can talk about people trading down and trading down to value, but people can only spend the money that they have. And so if wallets are getting to the point that they can't spend as much money just overall, that also impacts Dollar General. You've also got, tariff concerns and so on, but I really think that the story here is if the story is a trade down to value, then Dollar General wins. If the story is the consumer is breaking, then everybody loses, and that probably includes Dollar General.
Please help me.
We'll see what the executives say on the call tomorrow, but I have a feeling they're going to be a little more optimistic than they were 3 months ago.
Andy, one last thing. When I'm looking at your consumer demand chart, the 90-day,
I got my triple top.
Looks like what we're talking about is starting to happen between the price of the stock and the demand for Dollar General. Are you seeing that too? It looks like it's early, but it looks like there is a little divergence starting to set up there on your chart.
Yeah, it is. It's early, but it's flashing green, and this has happened a few times in the history of Likefolio Data and Dollar General, and each time we started to see this divergence emerge, it grows, and generally speaking, the stock on a 1 month to 45-day lag responds. We like the setup here. We think this earnings call could be a positive catalyst. If it's not, and there's concerns about
that's a good one
or whatever, and we get a little bit of a pullback, then we start thinking about it more than just a trade, and we start thinking about it as a position in a portfolio.
Andy, real quick, your earnings score on this.
Big C's had a little bit too much to smoke.
Yeah, it's plus 30, which anything positive is good, but it goes all the way up to 100. So I would say it's cautiously bullish going into this. We would definitely want, you guys are so good at providing us with the trades that maximize, that define our risk. And that's the way we'd want to trade this going in, is cautiously bullish on a risk-defined trade.
I don't trust you.
That's Andy Swan, co-founder of Likefolio.
Andy.
Now for the trading thank you, Andy. Appreciate that deep dive there into Dollar General. Now for the trading perspective, let's bring Tom back into the fold. Tom, you got some insights from the Likefolio team. We'll see him on screen in a minute. You got the earnings score, which I know you like to know that. Final thoughts before the example trade?
Yeah, you have to wonder, the stock's down 30% from those 52-week highs that we reached a couple months ago, maybe at the end of February, and the K-shaped economy, what impact it's having. Well, investors have been selling this stock since that last quarter when they reported, so that's going to be a concern. Will that pick up? But it seems like their data is kind of reversing here a little bit to the upside. The option market pricing in about a plus or minus nearly $10 move in either direction, so just under 10% move in either direction on this one. Not typically a lot of volumes, but we're seeing a lot today. Put volume is more than double call volume today going into this report, so that's pretty interesting on this one. But Kevin, when you look at this one, it's been beaten down, and maybe their data's turning a little bit more positive. How do you want to look at this one from an example trade?
Tom, we've got retail sales data. We've got Bank of America Consumer Insight data. We have a lot of data saying the U.S. consumer is still strong and an employed U.S. consumer is still spending money. Are they trading down? I think that's what we're going to learn on this conference call and their numbers. And so using Folio's data, looking at the chart, how much it's sold off, you've got new management in there. Maybe they're going to have an aspirational positive conference call where they look to the future. I did something a little more on the aggressive side from the bullish camp. I went out 2 weeks, bought the June 18th 110 call, basically right at the money, and then I looked at the expected move, about $9.70 for the week, about $10.50, and I split the difference and did the 110 120 call diagonal, Tom. That's trading about $4.25, trading a little higher than that now. It's moved through $4.50 as the stock has firmed up here. But Tom, this is one that is risk defined, but it's in the calendar spread family, but it's not one that you have to really worry about if the stock were to go up more than $10, right? If it goes up 20 or 30, you'll lock in profits on this because of the built-in vertical spread within that calendar, creating the diagonal.
Yep, let's break this one down. It's a $10 wide bullish call diagonal for this example trade that Kevin brought us. So keep that in mind, right? Going out to the June 18th monthly options that expire in 17 days. Buy the 110 strike call. It's basically right at the money, right? That's the bullish portion of this trade. And then you take that one standard deviation move that the option market's pricing in post earnings, and that's plus or minus $10, nearly $10, right? Well, that sets up with the sale of the June 5th weekly options that expire this Friday in 4 days, the 120 call. So a bullish $10 wide call diagonal, paying roughly, we've got $4.25 debit. As Kevin mentioned, the stock's moved a little bit higher. That's expanded the price of it. But the debit you pay is going to be a risk. So maybe you pay $4.50, $4.60 on this. But it's still less than half the width of this bullish call diagonal. You'll have that ability or potential to roll that short option as you get closer to expiration over the next 4 days. That collects credits, that increases potential profitability. But you can see here from the risk profile, you wanted to go at or near that 120 strike over the next 4 days, right? That'll expand it to the most profitability, right? It goes towards your short strike. But because you're paying less than half the width of this bullish call diagonal, as Kevin mentioned, anything above maybe about the 112 level is going to be profitability on this trade. So keep that in mind. Taking advantage of that vol dispersion that we talk about going into earnings, because implied volatility levels in the near-term options in those June 5th weekly options where you're selling the 120 call, that's about 112% implied volatility on aggregate in that series. And then buying in the June 18th, that 110 call that you're purchasing, it's about a 70% implied volatility. So that vol dispersion really lowers the entry point price of this. So you're taking advantage on this type of strategy of that differential between what you're buying as far as implied volatility and what you're selling. Now, implied volatility, historically we see that vol crush, so the options you're buying will lose some value also because volatility will come out in those also. But the near-term options is the one that's really elevated, and that'll collapse post-earning. But it sets up with, Diane, with what Folio, their earnings score is and the data that they have, if you think this stock's going to continue moving up towards that 120 strike or beyond.
All right, good stuff. Thanks, Tom and Kevin. Coming up, the breakdown. We're taking a look at HPE ahead of its quarterly results. We'll have more Fast Market after this break.
Oh, pulling back. Forward Bobo here. Here we go. SPX at 160. Do-do-do-do. I don't know. I don't know if I should. I like it down here better. Especially right there. I wait. I wait. I'm gonna run back down there again.
Technology stack. Now, if you look at the numbers going into this report, the expectations are quite high. As you mentioned, Diane, 54 cents. That's 40%.
We're about ready to break high here.
Quarter. And then sales are also expected to be around 9.82 billion, up 28% compared to last year's 7.62 billion. I think this is the core, I think, for this report for a trend continuation HPE is very similar to Dell. What's going on with the backlog, what's going on with the AI optimized server markets, and then of course guidance in this area of their market where revenue base is going to be key. Because right now the expectations are around $4.2 billion this quarter. Around 45% of sales are just coming from servers for HPE. So if they come in with a beat and they guide higher and a bigger backlog, we could certainly see a continuation in this name, considering the corollary we're seeing with Dell Technologies.
So essentially, it definitely needs a beat and raise, especially given how shares are performing heading into its results.
Correct.
All right, thank you, George. That's George Sillis, our senior markets. Oh, go ahead, quick, go ahead, finish your thought.
Yeah, no problem. Yeah, I do suggest that that's what they'll need, and if that's the case, you certainly could see a continuation here because now they're gaining market share, both Dell and HPE, away from Supermicro, which has its own idiosyncratic problems, and I think that's important in the context of the AI build-out.
Okay, great contextualization there. That's George Sillis, our senior markets correspondent, taking a look at HPE ahead of its results. Let's get Tom and Kevin back in here for example trade purposes. Tom, this time you've got the example trade in HPE. Take it away, guys.
Yeah, I think you take a look at the parabolic move that we've seen maybe over the last couple of months, but since the start of the year, right? It's up basically about 88% so far in 2026, reaching an all-time high since they went public, and that's a concern, right? You take a look at this as a trader and you go, oh my goodness, the parabolic move. But we've seen this before in names like STX on the memory side and Micron and some of these others. We've seen them growing into these moves, and the expectations, the anticipation, and optimism is pretty high on this one going into the report. Now, Kev, I looked at this. The option market's pricing in a plus or minus nearly 19% move in the shares in either direction on a stock that's $45 roughly. They're expecting about an $8.40 move in either direction. So, you look at the call skew versus the put skew on some of these names, and it just seems like they're reaching for any out-of-the-money call that they can buy to the upside. It's a less expensive stock than on a dollar basis in a lot of names in this space. So, Kev, I looked at a strategy that takes advantage the IV percentile rank at or near 100%. So it's at the highest level that we've seen as far as implied volatility over the last 52 weeks. So I looked at something. If you think it's going to continue to rally, this is a less expensive way than maybe just buying the outright 45 call. And I went out to the June 18th monthly option. So this isn't a pure earnings play. Got 2.5 weeks in this position, 17 days. Buy the 45 call. That's at the money. That's a bullish portion of this trade. And then against it, take about that one standard deviation from the current share price, and we'll round it up to the 55 strike. So a bullish $10 wide call vertical, paying roughly about a $260 debit. There's your risk, $260 per spread, which can expand to over $10 if it gets above 55 over the next 2 weeks. So, Kevin, really good risk-reward setup, but that really steep call skew at this point really it makes this trade offsetting some of the costs by selling that 55 call. It limits your upside and limits your gains, but at the same time it also reduces your risk on this bullish call vertical.
Yeah, it's still a chance to make almost 4 to 1 on your money, but you got to be right. You've given yourself duration. That's a good thing. You've got 17 days. You've got momentum on your side as long as Hewlett-Packard will deliver the numbers. And so this is one that your risk is whatever the debit paid is your risk. It can go to the width of the strikes. In this case, it's $10. And so you know what you can lose, you know what you can make, and most of all, Tom, you know you have duration for that move. And so you're aware of what you need for this to be profitable, and it's going to be good numbers. You need a move. This is not a short vertical. But the trade-off of a long vertical is you get paid exponential if you're right, Tom.
Yeah, and I think that's key here is that it's not a pure earnings play, right? You got 17 days in this. So if you get the move that you want right after earnings, this will start expanding the price. If the market's open, you can close maybe all or a portion of this before expiration on this. So you have a little bit of flexibility as far as trade management goes on this one, Diane. But looking for some extension of those gains that we've seen on that example trade.
All right, good stuff, guys. That is going to do it for us today on Fast Market. I'm Diane King Hall alongside Tom White and Kevin Hinks. Download the Schwab Network app. It is available in the App Store and tune in 24/7 on schwabnetwork.com. Stick around. We've got Next Gen Investing with Alex Coffey and Jenny Horn coming up. Thank you as well.
So what is unique about Schwab Coaching is the community.
There's a lot of energy, like-minded people are learning with you.
You can just see and feel all the excitement around getting to learn a new topic.
Some of you want to get everything face-to-face with you and 400 or 500 of your closest friends.
Some clients like to be in the privacy of their own home on an online workshop, but still having that live interaction with the coach.
As I'm talking, questions are coming in from that live audience, and they help me fill in those gaps as an educator. People learn differently, but all those ways we actually teach it all come back to the point of making a difference and helping you make progress.
And so that means not just giving you theory, it means giving you the practical implementation using our platforms.
So we want it to be fun, we want it to be informative, and most of all, we want you to walk away with a skill set and independently be successful in achieving your goals.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, any. schwabnetwork.com. For instant reactions, earnings breakdowns, and hot takes that teach you about stocks and markets, follow me on X at @NPetalides and connect with me, Nicole Petalides, on LinkedIn, Facebook, and Instagram.
I'm Sam Vardis, live from the New York Stock Exchange. When the market moves, we're on it, getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Welcome to Next Gen Investing and happy Monday. I'm Jenny Horn alongside Alex Coffey. And as we check out on markets here, we are seeing a pretty split session with the S&P and NASDAQ actually still holding on to some gains modestly though on the session, while we are seeing some weakness in the Russell and the Dow 2000, or the Russell 2000 and the Dow, excuse me. But of course, following a really record-setting May, where Alex, we had been saying the adage of, basically May being this very much weak month and sell in May and go away. We saw quite the opposite when you were obviously exposed to tech and more specifically even like memory and storage.
Yeah, we should note though that old phrase actually refers to a 6-month period. So
the period that begins on May 1st, that's 6 months long, is typically the weakest 6-month period of any year. So we still got 5 more months. That may ultimately proven to be true, but certainly avoiding May on its own, on the merits, not necessarily a good decision. But we still have a market, Jenny, that is very momentum driven. Momentum of the S&P 500 up 1.3%. Semiconductors up 2%, memory up 7.5%, and software joining the party. Software up about 5.5%, as you see names like ServiceNow and Microsoft, as well as CrowdStrike, which I know we're going to get earnings this week from, really powering some of these tech names and tech parts of the market higher. But this is more of the same. So although software has decided that it wants to have a little bit of fun too, for the most part, continues to be a narrow market in terms of the majority of the movement is coming from a handful of names. There's no difference in that today.
And I mean, even great, I think, point to make also, we always say like the way that expectations reset for new year are kind of the same for a month, where why would it change abruptly? I mean, obviously that's always possible, but like Dell, for example, just continuing that trend we saw really kick off after its earnings. But I mean, Dell also had been on a run into that print, so now up a whopping 262% this year, and up another 8% today. So it's not like a month necessarily resets overall price. We are seeing the same trends really continue to kick off this month. And I think a good call out. Oftentimes I think that the month of May is so isolated. It's really expected to give more of that summer weakness, but we have not really seen that at least play out so far. Obviously, it's just the first day of the month of June, but we will kick off the next 60 minutes of coverage with several of these movers to keep on your Monday radar. We'll also look at the latest technicals in AMD and Intel, with both stocks lower after Jensen Huang unveiled a new chip that pushes NVIDIA directly into the PC market. So obviously adding some competition there. We'll also discuss the move more in detail, spotlighting NVIDIA for FOMO today, as well as examining what early IPO trends are telling us about SpaceX's debut to the public markets. And we will close out the show today with Digital Turbine shares, which were up almost 10%. We've since pulled back here ever so slightly and up now about 5.6% on the session, so giving back now about 5.4% of their gains, but still interesting move following some analyst enthusiasm.
Yeah, let's talk some analyst enthusiasm, because one stock that's getting that is Dell. I saw 4 analysts that moved their price targets pretty substantially. Fair amount of them, 3 of the 4 went to 500 a share, so that implies still another 10% from here. And this is a stock, Jenny, that's basically averaging like 10% rallies over the last week's worth of trading, 5 days.
I mean, it's amazing. And so like that chart to me is as ideal of a yearly chart as you could really imagine, especially for a company that is as established and really as entrenched already in the tech market as Dell. You know, this isn't like a pure growth play that we've talked about, like these pre-revenue, pre-earnings, or really pre-profit companies. Dell is, I mean, is one of the biggest, most really, I'd say, distinguished forces in terms of like hardware and its PC markets. But so seeing analyst favorability, no doubt about it, continuing to send shares higher today. Morgan Stanley was one upgrading shares to equal weight from underweight. Price target raised to 448 from 170. I think what's so amazing about some of these analyst calls is they're substantially higher than like their previous targets, and obviously this does actually imply downside from where we're currently trading. But they did highlight the first quarter earnings report and a visit to Taiwan last week indicate that Dell is managing the current semiconductor supply chain shortage better than its peers. Also saying that this right now could help alleviate memory concerns, and they do believe Dell is executing across nearly all of its business lines while taking market share of a growing AI spend pie, as they called it. Saying that right now traditional enterprise markets and leveraging pricing powers they're taking advantage of in ways that its peers are not. So further upside, but again, 448 lower than where we've currently traded, because I think who could have predicted now 2 sessions of like some of its best performance ever?
Yeah, this stock has grown something like $160 billion since the beginning of May. So here's an example. If you sold in May and went away for Dell, it has not been a very fun month. That said, if you were involved from the beginning, it's been an incredible rally. It's vaulted Michael Dell way up the billionaire list now, almost $250 billion. He's like the 6th wealthiest person on that list. So pretty fascinating stuff, and that probably doesn't even take into account the movement today. So, you know, when a stock's moving 10% at a clip, it's a fun ride if you're on it.
It is a fun ride if you're on it, you're right. And a great example of the names, the spaces that have worked over the last month, and that has definitely been everything tied to Dell, closing out the month as the S&P 500, I believe it was their best performer, but one of the best performers within the index, gaining over 100% last month. But now to shift gears into MGM, which is also actually making a really standout move today, up 15.6%, now adding to its near 39.4% gain on the year. And not even our best performer today. And so amazing to show this still appetite for this upside in a lot of these names. But the company did confirm it had received an offer from People Inc. to acquire all outstanding MGM shares that it does not already own for roughly $48.30 per share in cash. That represents roughly a 24% premium to the volume-weighted average price of MGM's common stock for the last 30 days that ran through May 29th. MGM did note that its board, along with the financial and legal advisors, will review the proposal and that there is no assurance that an agreement will necessarily be reached. But obviously, price is king. Shares are trading somewhat on that expectation today, just based on the huge move to the upside, Alex.
Yeah, I guess I was shocked. I had to double check, and I was just kind of like, People is going to buy MGM? I would have thought maybe it was the other way around.
Right.
But hey, if the maths, I guess maybe it's half cash, half stock, like GameStop. Kind of jokes aside, we'll see if this goes through. Whenever there's an outside party, even though they're already the largest shareholder, People is of MGM Resorts. So whenever you see though a company, a group of investors, a single investor, whatever it is, sort of indicate this type of interest, whether or not it gets accepted matters ultimately for the shareholders of the company, but it kind of puts in some way a new psychological floor as to what this company could be worth. Doesn't mean that this will go through, doesn't mean that ultimately it will get that 48.30 or not, but it does go to show that there is some value to some extent that someone's willing to buy a controlling stake at that level. And so the fact that you see the stock kind of getting to that and then beyond shows that it kind of resets again the expectations I think the street has for a company like MGM.
Yeah, and I think that's a good point. I agree. I think that the People, acquisition I thought was interesting, but we will see obviously how this does shake out. And they did make a point to say that again, no deal is necessarily guaranteed at this point, but they do already own roughly a 26.1% stake within MGM Resorts. But a huge move today, and obviously street liking at least some reports of this news. But now to look at our next name here, which has been one that has been battered down really after its earnings were a major repricing event, but getting some love today. Zscaler shares are up nearly 10% on the session. Guggenheim actually upgrading shares of Zscaler to buy from neutral with a $214 price target. They did note that while this is a trust me story, the valuation here does present an opportunity to buy a category leader of a still really overall growth market, and they call this a hyper growth market at that, saying that Zscaler's relevance is likely to grow in the era of AI, especially with C-level executives, and they do intend to do business with, that they do believe really can further trust this zero trust security offering. I think also hugely encouraging that we've seen really strong performance from a lot of its cybersecurity peers, and obviously a critical test will be this week when we get that report from CrowdStrike and I believe Palo Alto Networks that also saw pretty solid months. But Zscaler, brutal move post earnings. We've actually seen a lot of reiterations of coverage, but price targets reduced here. So we're now down about 32% on the year, but at least starting off the month of June on a relatively brighter note here.
Yeah, and doing a lot to repair a lot of that technical damage where this stock just kind of drove off the cliff. It had been a long road really throughout the month of April into the latter parts of May, and then giving it all back in one session is always, I think, discouraging. But quickly stabilizing and working its way back in the last 3 sessions, I mean, it's rallied a good 25% basically, almost 20-25%. So doesn't undo all the damage, but it has done a fair amount. It's actually up over the last 1 month of trading, still 18%. So pretty crazy when the stock was down like 30% in one day.
It was to me the first move we saw that was as substantial to the downside. We had so many. Really, like last week was led by things like Snowflake, Dell, that had huge moves to the upside, but I do think that important reminder, it can be also very company specific and really execution specific. And a lot of the analyst notes I read did somewhat blame overall execution, which also then could make you say, hey, we could see some further upside, some recovery if they're able to figure out somewhat of their bottlenecks. But our last name today is our most notable move to the upside of the group, which is up now 22.4%. That is Taylor Morrison, which has agreed to be acquired by Berkshire Hathaway for roughly $6.8 billion in cash, with a total enterprise value of roughly $8.5 billion, which the company has announced late Sunday. So the price for the acquisition was roughly $72.50 a share. That was roughly a 24% premium to Taylor Morrison's latest closing price of $58.50 seen on May 29th. But following right now the anticipated second quarter of this year closing of the deal, which does still need approval from Taylor Morrison's shareholders and regulators, they will continue to be led by their existing management team, including their current CEO. So after closing, Taylor Morrison Home will become a private company. Its shares will then be delisted from the New York Stock Exchange. And it did get a nice lift. Berkshire Hathaway right now, I do think, is also signaling that under a new leadership, of course, after CEO Greg Abel took over early 2026, that he's been busy and he's definitely showing who's boss. So at the company, that I think difficult transition to make when Warren Buffett had been really so much of the brand and the identity of that company for the last, like several decades.
Yeah, I think this is, I have no idea, right? I don't know the legal implications, but at 71.64 a share, the buyout price at 72.50, it's like 90 cents of a spread at this point. This is pretty sure that the market's pretty sure this is going to come through and go through. That said, though, the stock rallied 22%. So if you were holding this still, say you had this just by chance going into it for whatever reason, you make the 22.5%. If for whatever reason, for 90 more cents, you're risking, if it just went back to where it was, 22% of your investment. And so at some point, this no longer becomes a retail game, becomes an institutional game. And it also goes to show, with that only being like 1.25% implied return left for this, that this is going to probably close relatively quickly. They say second half of this year. Well, the risk-free rate is like 4%. Well, that's like a quarter of the year, basically, for this to close. So I don't know that it makes a ton of sense. Look, I don't know that it'll go through, but just from a risk-reward standpoint, not a lot to make left and potentially a lot at risk.
A very good point, and I think that is also like the distinction of looking at a name like Taylor Morrison versus like Berkshire Hathaway, which is more of like an asset holding company. It frankly is. It trades different than like a typical equity, just based on historical patterns.
Yeah, and it's not getting bought; it's buying.
Right. Well,
that's around still.
That too, but like either it's not. It doesn't seem like the typical movement we see post like a true equity buying another equity, because obviously this is a different type of deal.
Yeah, all cash.
Yeah.
So, and a company that has it. So they're not going to be struggling to raise it. It's just a formality at this point. But things could break down. I'm just telling you, when you have a 90-cent difference and it's like a 1.25%, the street's pretty sure this is going through.
Yeah, and I think that, again, based on today's move, I would say the street is in full agreement with you there. But we will leave it there for the top of our show today. Coming up next, though, we will look at the latest technicals in both AMD and Intel, with both shares lower after Jensen Huang unveiled a new chip that pushes NVIDIA directly into the PC market. So for more on these moves, when Next Gen returns.
Nope, not going to happen. Cleared space. That's definitely a resistance level. We're squeezing right now. Something going to happen.
Stay connected to what moves markets. Download the Schwab.
I'm upset with you, girl. You're not there today. We got triple top on IWM. Jimmy called a double bottom here on the QQQ. That's the bottom call there too on the SPX and SPY. Unbelievable. Fallen wedge. Whatever's going to happen here next. Oh, I didn't see that. $170. Pretty solid. That's pretty solid. So you got a head and shoulders, then you got this triple bottom. Body could touch that, being the wick only touched that, so be number 4. And then it comes back up and breaks the shoulder the second time.
Have another relative low near 102. Finally, a notable old high point near about 100. So those are some areas to consider to the downside. Meanwhile, to the upside, 126 stands out as a ceiling at which we topped out twice, and then also 132.75, as we mentioned before, being the high point. So if we were to advance our chart and think about our moving averages that we follow in this case, today's move does bring us below our 5-day dark blue weekly EMA. That comes in just shy of 116 now. We are sitting currently pretty close to our 21-day EMA in teal, representing 1 month, near about 110. If we were to break lower through our trend line, there's not really too much in the way of moving averages to look out for until we get all the way down here to our gold quarterly EMA, 63-day EMA, near about 85.35. RSI trending lower. We can see that we have a downward sloping trend line. We are out of the overbought area. We are heading more toward the 50 midline. So be on the lookout for price to break below the trend line, break below those relative lows, and also cross over that bearish threshold there concurrently. So that would give us more of a directional bias confirmation. Finally, when we look at our volume profile study, we're zoomed into the past 3 months. Like many of these tech and chip stocks lately, the broad, big, longer-term picture, not quite as useful here because we've spent so relatively little time during this very sharp upward move. So if we were to get a bit more granular, we can see that we had a decent amount of trading activity established here between about 112 to 122. However, we're moving below that range, so the next area of interest is this smaller spike here near about 95 or so. From there, you can also see we have a node that developed between about 80 to 85 or so. So those are the volume areas that stand out most significantly during this compressed time horizon.
Are you vulnerable?
It's making a pretty significant move to the downside today. We pulled back from highs with this name not looking too shabby on a 12-month basis, as Rick did point out, a 465% over the last 52 weeks. So now,
vulnerable?
as we do assess trading intel here, of course, for example purposes, walk us through the thinking here, Alex.
Yeah, Rick pointed out that 1 month EMA around 110.
Rick did,
I had my eyes on that as well. Looked at selling a put vertical below that level. Just going out to the end of next week, relatively shorter dated, and then just going as far away from that, below that as I could. And at the time, the 105, 102 put vertical before the program, you could get about $1. So in this case, if I wanted to, redo this in real time, 2-to-1 risk reward. If I wanted to maintain that, maybe you have to get a little bit closer to 110, still below that support level.
I wouldn't do that.
Maybe this would be trading for a little bit less in real time. But nonetheless, with what we have here, the 105, 102, break even would be 104. You can make $100 on $200 in risk. So
I wouldn't do that, Rick.
Reward.
I mean,
and like I said, given the movement of the price, these stocks are moving around so much. Perhaps someone would consider shifting those strikes higher if they wanted to, if they still looked at that 110 support.
Big mistake,
or
Coffee.
if they wanted to keep this where it was, maybe extend duration. There's a lot
Jimmy
of things
said
you can
we'd
do
break
to
the shoulder.
adjust this in.
Washboard Jim was sitting here calling this trade out. He said if we pull back and we hit number 4, we could have the possibility of coming up and breaking this right shoulder the second time. Did I not say that? Attention deficit disorder. Left shoulder, right shoulder, boom. Head and shoulders. Rising wedge. In fact, it's more than a rising wedge. It's an inverse head and shoulders. Just extended that on out. Look at that. Body, 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 body. Inverse head and shoulders. Head and shoulders. Rising wedge with a 1, 2, 3, 4. Quad. If you can count 4, you can make a little bit more. I don't know how he does it. He identifies just with 2 lines 3 different patterns. Could make it 4, double top. By God, he did. Left shoulder, right shoulder, right shoulder, right shoulder, right shoulder. 1, 2, 3, 4, double top. Head and shoulders, right shoulder on the head and shoulder, breakout. Second time, Jimmy says, is the best time. I see what you're saying now, Jimmy. You are the best. AMD, what's he talking about here?
If we were to break downward and price started trying to close the gap here, another node stands out near about 330 to 355.
You got a gap right here with a pivot point,
some
you
areas
dick.
that really stand out from this
Right
volume
there.
perspective.
Okay, and appreciate that here, Rick. Of course, AMD lower, but not necessarily steepening any of its pressure, at least on the session here today, down about 1.2%. So appreciate it to Rick Ducat, our chart master.
Very good job.
Looking through trading, of course, AMD here for example purposes. I mean, compare and contrast with obviously Intel, they are similar, and as Rick did point out, they are also different. So looking to obviously trade this name, leaning into the fact that this has been also still a very solid winner this year.
Yeah, similar catalyst that maybe more is being made of than is reality at the moment too, with Intel and AMD both under pressure with some of that NVIDIA headlines that came out. And so similar idea, neutral bullish, leaning into some of today's weakness. But you also have Broadcom earnings this week. That could be a catalyst too. This is same strategy, Jenny, same idea, but even shorter dated. So this just goes out to the end of this week. Basically, a dip buying, neutral to bullish strategy, looking to collect $1.70, somewhere around a third the width of the strikes. Again, $5 wide spread in this case, so 490, 485 are the strikes selected. And
Vertical
in this case,
put.
it just goes to the end of this week. So you can make 170, 330 is the risk,
Damn.
and then break even would be 488.30 based off that $1.70 credit.
And I think a good reminder, this name could also see some movement, of course, on the back of Broadcom, another name we're reporting this week, which is another one to keep on our radar here, but we will leave it there for Chartmaster today. Coming up next, though, we'll look at the big move higher today in NVIDIA, of course, the disruptor of Intel and AMD, up 5%, as we are seeing its latest chip and what that could mean for the future of AI PCs, as well as the stiff competition already in the hardware market.
Vertical put at 102, the 505 and the 507.
Earnings
50.
breakdowns and hot takes that teach you about stocks and markets. Follow me on X.
I would follow you.
Petalides, and connect with me.
I will.
Nicole Petalides on LinkedIn, Facebook, and Instagram.
Is that the only place? How about
trading at Schwab
down there at
is
the
powered
coffee
by
shop?
Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop.
She says connect with me, and she didn't mention the coffee shop. I mean, that's all I want. Just a date at the coffee shop. From 102 to 112 now, the vertical put on AMD. I'm just watching it. What's he doing? This is called a vertical put. These were at 102. June 5th, 507.50 and 505. They were at 102, now they're at 112. So I'm watching. And I'm looking at the SPX. We're squeezing right now above the 9, and it's 1227. Vulnerable. I don't appreciate how it makes fun of his daddy. Then they get on here and say Jim. $7,600 calls. We're getting ready to come to a pivot point. What was resistance now becomes support. So pay attention real close right here. Am I buying at resistance? Yes.
based model chip here. And this is going to be utilizing the Windows PC processor market just in general here. Now, why is this actually a big deal? It's going to allow PCs to be able to run really advanced artificial intelligence models without really having to be connected or utilizing some of the inference measures, if you will, on web. And so that makes it a little bit more dynamic and as well as versatile for the end user. Now, this is obviously going to put a little bit of pressure on other companies like Intel and AMD and others that have obviously some exposure when it comes to the CPU space, but really trying to break into the market when it comes into AI chips just in general here. Now, when you're kind of looking at the breakdown and some of the competition, AMD is really known for the CPU space. They're the processors within laptops. And so NVIDIA really doesn't have that much of a first mover advantage. We know that AMD is pretty much, for the most part, right there. But maybe NVIDIA is going to be able to take some of that market share away from AMD at the moment. This is also creating a little bit of a boost to the upside for ARM as well. Last time that I checked, it was up over 10% in today's session. And this is going to be a bounce to the upside when it comes to NVIDIA, but...
Yeah, there you go, SPX.
Better margins, at least for now, but the tangible addressable market overall is probably on the CPU front, especially when it comes to
beautiful that was.
And handheld devices.
Yeah, KG, I just start doing the math, like on a company this big, for it to be up over $10, we're basically adding $250 billion in market cap. It trades at something like, I don't know, 14 times forward sales. So we're basically saying that this headline is worth like 18 to 20 billion in annual revenue. Do you see that in this headline? I know you're not an analyst, but like that's essentially what the math would tell us this is.
Well, it's probably going to be more than that over time, right? With the initial release and launch, obviously it's going to take some time to kind of ramp up production here as well as to figure out the overall demand within this market. I mean, if you kind of look at the PC market, especially since COVID-19, we haven't seen a really strong refresh cycle. Maybe this is going to be the item that really kicks that off, and then that could be a bigger driver when it comes to top line revenue. Also, when you're looking at a lot of the price action within the market as of late, Alex, as you know, some of them have been very exaggerated, both to the upside and downside. And I think that's just the environment that we are in. But over time, I think the overall revenue.
That's how you do it.
The revenue that they can make off of this particular product could be a pretty decent driver for them as far as the revenue mix. It just kind of depends on the consumer at this point, as well as enterprise spending. So it's a good move for NVIDIA. Technically speaking, we saw the earnings announcement about 2 weeks ago. We did see that pullback, that follow-through pullback last week. That's not outside of the norm. We tested the 20-day moving average. And it looks like we're trying to break this secondary downtrend to the upside here. We're trading about 220, and you can hold above 220 for today's session. You can look at probably going back up to, or maybe going back up to that 235-ish area, maybe trying to even break out, because it's still a lagging name.
You gotta hold his previous resistance.
Okay, and I think
that's
I
above the
realized
9.
First call out of being ARM a huge performer today, and barely was like really a mention, but I know obviously there's going to be expected.
So I'm sitting here calling this pullback, this previous resistance, the head and shoulders and the inverse head and shoulders. So this is called an inverse. This one here is a head and shoulders. So when this thing started pulling back, when it tweezer bottom off the 21, I said we pull back and hit that shoulder line. They went to $2. Now we're pulling back to support. So if this thing wants to stay bullish, it's got to hold this previous high in this 9. And we're going to be kind and draw the trend line to the 9. That's what we're going to call the double top break, right there, right off that 9. So if that holds, we're going to go up higher. That means you're still way bullish. We still have a chance to pull back to the shoulder line the second time off the 21. And that's that previous high right there. So that's where I'd add. Or that's where I'd take the trade if I wasn't in it. And I'd add if I was in it. These went to $7. Right now they're at 350. Oh, and you gave it all back? Shit. You gotta be, okay. I'm getting a lot of mixed messages again today about Iran. So I don't really want to pay much attention to it. And I know it's a choppy day, so I don't want to take too much risk. But so far, like this one I just did, I'm still in one. I mean, look at this bounce on this, just because of a headline. They hit with Pakistan where they found Bin Laden. So I don't think you can trust them too much. Kind of a clean chart for a choppy chart. I mean, everything's just kind of falling in place. We got a resistance on NVIDIA. Ascending triangle resistance on NVIDIA. Big C, are you trying to cause trouble? See that ascending triangle right there? And I just called it out, and we just got a new high. Okay, we're at 570 right now. I should go ahead and... Are we going to go to a grand? Are we going to do a double top? Should I sell it? Be all out? I think I will. $5.60. Okay. You know, I've heard traders, I like to learn from a lot of people. So there's this one guy says, I'm waiting until after 12 o'clock. I don't know the exact time. And I kind of get where he's coming from, because today I said I'm going to take my time and wait for the setup because of all the news that was coming out, and it wasn't really too trustworthy, and I didn't really want to try to let it bog my trading mind like it did last Friday. So I couldn't make any decisions later in the day on Friday because I let all that propaganda. You hear one side, you hear another. Trump don't care, blah blah blah. And then Pakistan's in here trying to do some work. Optimism overshadows the Middle East risk. Just which news is more important? And I don't think any of them are. Except being bullish like being very bullish like I am when everybody else is at their... The best time to buy, period, is when everybody's bearish. And I mean, everybody was bearish a while back, except me. They're at 660 now, and I got out at 560. So I could have grabbed another $100. Why am I bullish? Because I've already said it. I've been here 22 years, and I've seen times a whole lot worse. There's another. I left $200 on the table. No one would help me. Jim, stay in. Well,
that foreign direct investment, but they're also trying to avoid these companies just basically wanting to go to the US to list. And he actually raised a really interesting point that the biggest IPO in London last year, get this guys, was a canned tuna company. Yes. Tuna cannery. And that really just speaks to what we're seeing over in Europe versus here in the US, where, you know, some of the biggest IPOs, I mean, you're going to be talking about them next this year, are in the business of AI, are in the business of technology. We've seen the same out in places like Hong Kong with some of these Chinese tigers, as they're called, the LLM AI companies, to try to compete with the likes of OpenAI and NVIDIA. And so I think this is a really important part of the story. Masayoshi Son is a visionary. We know that. Obviously, he's backed a lot of companies. He was the one that obviously sold that stake in NVIDIA to go all in on OpenAI. And so he's also trying to build out that US infrastructure.
AMD vertical put, it's now at 125. In paper trade, I got in it at 102. So would I sell it now? Making that kind of money? Probably. Because I'd bought 10 of them. I'd be up $230. We just, oh, shit. 1460. Now that put went down to, well, this is really choppy right now. That AMD. 128, 102, 115. Damn. That sucked. 1,400. And I got in them at 230. So that'd been $3,600. $36 or $37. By darn. Two-pack. What do you think about that? Hello, Nate Dogg. Nate Dogg's got his ears on. Well, I forgot to listen to that station. Why didn't I pull that up today? I got to get in that habit. I want to see how fast I can pick that news up. Okay, well, we got to do this again. That kind of sucked, not being in that trade. I knew it was going to bounce. Everything looked good. So again, I was talking about, I get in there and I do the beach trade. And I'm very successful at the beach trade. And I've got this all divided up. Now after that first hour and a half, they start setting up. You got to look for the squeeze. So you could wait to trade, not do the beach trade, and just wait for that setup. Wait for it to finally start showing patterns, and using the 5 minute and the 1 minute and the 2 minute. You can see them in the 1 minute. It's like this one right here. After it broke out, you had this previous resistance, triple top breakout, pull back to that inverse head and shoulders. And then once it came up the second time and broke that shoulder line, that was a head and shoulders. That's when I called it out. Then I called the pullback out here. Jumped in it right there and sold it. And then it dips again, and then I didn't get back in, and bam. I had one left, and I sold it at the double top. And that would have went $16.90. That'd been a $1,400 ticket. $1,470. $1,480. $60. $15. $1,560. But wait for them, when they start showing the patterns. And I bet your success rate would go up better. You can't let the propaganda get ahead of you, because it's so mixed. Wow, that was a nice little bump. And then again, my AMD pays off. Breakout called the double bottom. Oh. Tick strike. So that ain't gonna help me none. What's it do? Let me see what tick strike means. Tick strike.
So guys, we are getting close to the 11th hour, which is the time this webinar is due to start. What I'm going to do now is just open up my tick strike window, and I am going to mute the volume of tick strike. So hopefully, or maybe I'll just have it very lightly on in the background, just to alert me. I hope that's not too annoying.
No.
I just want it on in the background, just in case something happens, and we can talk about it as it happens and have a good discussion about it. So I'm going to go through a couple of slides, and then we can just spend our time talking to each other. I think just by giving the questions that we've had so far, we're going to have some amazing conversations. And one of the things that I've struggled with which has been absolutely insane, and I'm kind of embarrassed to say this, is we've just been overwhelmed on the support side of things. Literally overwhelmed. There's been a few days up until I think the last I don't know 6 or 7 days, where from the moment I've woken up till the moment I've been going to bed, myself and a couple of the other guys have just been answering support questions. You know, about TickStrike, how to use it, people struggling with the download. There's been quite a bit of that as well. How people get set up. But it's really cool to see how interested people are in the software. It's heartwarming that, you know, there's a demand for what we're doing, and you know, hopefully we'll get through this stuff. And you know, because it just seems to be so popular, which is great to hear. So guys, I'm gonna just quickly run through a couple of slides just to give you the overall concepts behind TickStrike, and feel free to ask questions as we go. And then we're going to start talking about how you guys use it, and how I use it, how everyone else here uses it. I don't know how many of you guys experimented using the tick. I found it to be really interesting to kind of add that into the mix with my usage of TickStrike.
There's a lot of people that trade futures use the tick. I had mine set up at 100 ticks.
But we've kind of come up with a new way. But now, what we have available, Greg, is it what's? Yes, exactly. It's red with the sound up.
Yeah, I ain't got time to fool around with you. You're not giving me nothing new. George!
And so forth, and server names like Dell are moving higher. So I think there's an element of that larger software ecosystems that's helping create a halo effect for smaller players like Digital Turbine, which is essentially a $1 billion ad tech company. So they are a software app company. They help monetize and create digital apps for the mobile ecosystem, but they also help, you know, app publishers monetize those apps through partnerships through major mobile phone carriers, and some of the major you know, competitors that include Unity Software, AppLovin, symbol APP, which we've talked about, I believe, on this program quite a bit, another runner in the past few years or so, but also the Trade Desk, which in fact we know as a business which has been struggling altogether quite a bit in the past year or so. But you're starting to see some analysts, for instance, Bank of America has got a $7.50 price target on AppLovin. I'm sorry, I was going to say AppLovin. Digital Turbine, that's what we're talking about today, is apps. But essentially $7.50 target, because they're actually seeing some growth prospects in earnings and better margin profile for the business, as well as market share gains, considering artificial intelligence is helping these companies monetize their ad base quite a bit more than they have in the past. And I did look at the financials of this business as well. Even though in the last year the stock is up like 90 or so percent, it's still down quite a bit in the last 5 years. So there's maybe a turnaround story for Digital Turbine here, but effectively they're still generating around $560 million in sales. But it is the case too that you know, if you look back just a couple of years ago, sales were actually lower, and they lost back in 2024 around $420 million. In the trailing 12 months, they lost $37 million on a higher revenue base. So I'm just suggesting here that their internal financials are improving, as well as, of course, their mobile operations and core software ecosystem. And I do think that the recent move we've seen in the software space may actually have legs this time around. I know there's been a couple of times, or multiple times in the past year, where we saw software names pick up and then they just continue to pull back and go down. But in the past week or so, there may be a transition happening, considering some of the big moves we've seen in some of the big players out there in software, like, for instance, ServiceNow, which just alone in the last 2 days is up like 25%.
George's stock and company seems pretty vertically integrated. It seems like its competitors are almost like a bucket of big companies doing different things within this sort of mobile creation. Do you think that's a fair assessment?
Yeah, I do. I think it is. I think, some of the bigger players have multiple facets of businesses, like the trade desk. They provide, demand-side advertising services for back-end companies like YouTube, for instance. So they compete in that space, but I do think that the mobile application space is really where Digital Turbine focuses on. And that's a space that's been growing, essentially streamlining applications, providing publishing and advertising services, for OEMs and third-party, ad tech and mobile tech companies. And I think that it's a space that's been underserved, and it's also a space that essentially has a lot of beta if you're looking for high volatility price action. And that's the case also for AppLovin, symbol APP. That stock also broke out last week and is also on the move as well.
Yeah, and of course, making a pretty decent move today, with the markets actually also contributing as we're seeing some strength in the NASDAQ here in the back half of our show. But so appreciate it, George Tillis, for all of those details, senior markets correspondent for the network. That'll also do it for Alex and myself for Next Gen Investing for this Monday, kicking off the week. The watch list is up next.
Checking. The checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
765.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to
765.
the closing bell, we've got
On
you covered.
IWM.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales
No.
based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines.
We got a hold right here. It's going to be
Breaking news and sharp trade ideas
758.
minute by minute.
With
50.
shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists, streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
I love you.
Mom, when my grandparents moved here,
Oh, God.
it would become.
I don't even know if they could envision it, to leave everything behind, literally come across the entire world. I think that we
Were they legal
understand what
immigrants?
Their wishes were. Schwab has been with us for almost 25 years through purchasing of houses, opening up our business, having children.
How'd you have children? How'd Schwab help you do that? And are you an illegal immigrant?
App and stream live coverage wherever you are.
So your husband was shooting blanks? Is that what you're saying? Mr. Schwab helped you out? Right now, we're trying to see if we can gain. I see another support right here. I'm sure I thought I put that on there. Oh, that's a /ES. Yeah, that's definitely a support level. The SPX I did
Good
earlier.
afternoon and welcome to the Watch List. I'm Diane King Hall. Coming up on 2 p.m. Eastern here at the New York Stock Exchange, and investors are chewing on the latest headlines between the U.S. and Iran. Here's what's coming up on today's show. In our tech spotlight, we'll take a closer look at Alphabet Google.
You people are chewing on it.
Fully pricing in all of its revenue streams. Our watch list panel will dissect the oil market in light of the latest developments between the U.S. and Iran and conflict on that front. And in big moves, Alex Coffey will take a closer look at real options trades from today's session for Netflix, Microsoft, and Chipotle. Let's get into a check of the markets with about 2 hours left in the trading, Jay. We still got mixed action happening right now. Tech continues to be at the top of the leaderboard, but the S&P 500 now has a solid gain. It is better by 0.4%. We were holding near the flat line earlier in the session, but a stronger gain after some posts by President Trump on Truth Social with related comments on the negotiations between the U.S. and Iran. NASDAQ 100 rallying nearly 1%.
I'm going to go and check something out again.
Records, looking
and
for
I'll be
new
back.
records at the start of a new month on Wall Street. The Dow holding near the flat line. We're off the lows of the session. We're off by less than 0.1%.
Oh.
Same thing for the Russell 2000.
Not made a mistake.
It's been under more pressure on small caps earlier this session. Now we're off by less than 0.1%. Taking a look at the heat map there, we're seeing a more green now as we get closer to the close of the session. But again, the standouts remain information technology, just like how we ended May. You're seeing the same thing for June, but energy is among the leadership within the heat map there. We've got some pressure, though, over in utilities and consumer discretionary. That's the biggest laggards. Let's take a look at some of the other price action that we've been watching in today's session. We'll look across the dollar, gold, crude oil, Bitcoin. Crude oil has been a big part of what we've been watching, and which had been causing this tug of war between the bulls and bears as we start out a new month. Momentum had been in favor of the bulls, but bears had a chance to claw things as you see this price action in crude oil. We're off the highs, but still up more than 5% right now on WTI, above $91 a barrel, just below $92 a barrel. Gold taking a step back, off by about 1.5%, just above $4,500 an ounce there. Yield on the 10-year up just 2 basis points. Dollar up a little bit here. Bitcoin taking a step back, off by a touch more than 2.5%, but not very volatile at the moment as we see, for instance, the VIX sitting around a 15. We're just about 2 hours from the closing bell on Wall Street. Let's take a closer look at today's market moves. Joining me now for that, Tom White. Let's talk about the latest on the geopolitical front. The first half of today's session was really about the tech sector, but now as we get into the second half, it seems to be more about the headlines of when it comes to the U.S. and Iran. You had President Trump posting just minutes ago that talks are continuing at a rapid pace with the Islamic Republic of Iran. We saw some cooling in terms of the momentum in oil, but take us through the latest here.
Yeah, your head's got to be on a swivel with these headlines that are coming out on a minute-by-minute basis. Now remember, earlier this morning, they came out, Tasman came out and said that Iran is going to halt their exchanges with the U.S. as far as a ceasefire, and this was due to maybe some of the inroads that Israel made into Lebanon and to Hezbollah. That kind of dented equity markets just a little bit. We saw crude oil up over 7-8% earlier on in the session. It's only up 5% now. So we've seen that pullback. Now let's kind of walk through what we've seen over the last couple of hours. President Trump told NBC News he has not been contacted by Iran regarding reports surrounding its talks with the U.S. The Iranians claim that they gave that to the mainstream media here in the U.S., saying that the U.S. may have been talking too much, going silent would be good. Then he came out and he said he told CNBC that he couldn't care less if Iran stops the peace negotiations with the U.S. And then he came out and said, I had a very productive call with Prime Minister Netanyahu of Israel. He said that there will be no troops going into Beirut. And then basically Hezbollah agreed with President Trump that they wouldn't attack Israel at this point. So that came into the wires. And then you mentioned what just came out, Diane, was that he said talks are continuing at a rapid pace with Iran. Thank you for the attention to this matter. So your head's got to be in a swivel at this point. Just like I kind of stated earlier on some of the shows that we were on. It's basically, crude oil up 5%, and the equity markets now positive. We've only got 2 of the 11 S&P 500 sectors still positive, and that's energy because of crude oil prices, and then also information technology. Those are the only ones that are positive in today's equity market. So it's kind of a head scratcher why we're not getting maybe a little bit of a pullback from these all-time highs, but it kind of is just reflective of that momentum trade that we've had, the money that's trying to go into some of these equity markets and some of these sectors within equities.
Okay, let's talk a little bit about what we're watching on the IPO front. The IPO market heating up. We got that news earlier today, this afternoon, at Anthropic confidentially filing its IPO prospectus with the SEC. Walk us through the latest here.
Yeah, I think, this is the race to become public more than anything, and this is probably mostly between OpenAI and Anthropic. OpenAI is working right now to get their S1 together. They haven't released that yet, and this comes on the back of that capital raised from last week, $965 billion valuation. That's topping OpenAI's, which was valued at about $852 billion in late March. So the race continues to see who can go public the quickest, right? It's going to be SpaceX, right? They've already released their public reading of that also. So yeah, this seems like a race to kind of maybe take advantage of the capital that we're seeing from equity markets and a lot of the push into maybe some of these AI names as they try to become or get to that public market quickly. So I think that's going to be something that you have to continue to watch. SpaceX is already in the lead in that front, but I think this is more of a battle between OpenAI trying to ready their S1 versus Anthropic, filing theirs, and then they'll be able to start the roadshow, right? And that'll be, in preview. They've only need 15 days from when they start that roadshow to when they're able to offer shares at this point. So this seems like a race for all this excess capital that seems to be out there at this point, Diane, with equity markets at or near all-time highs.
It does feel like a horse race between them when we're thinking about SpaceX, Anthropic, then OpenAI is expected to happen. I imagine we're probably going to see all of that heating up this summer ahead of fall midterms. Let's talk what you're watching in the software space. We're seeing a big rally there. I just checked Salesforce. That stock is up 10%. That's wild. Is software out of the penalty box?
I think so, for the time being anyway. Salesforce was up earlier, then it popped a little bit more because of that IPO announcement from Anthropic, because they've got about a $5 billion investment in Anthropic, so maybe doubled their gains for the day. But you look across the software sector, whether it's ServiceNow, Adobe Analytics, you look at CRM, you look at Workday, some of these other names within that software space, they're catching a nice bid. Look at IGV right now. The ETF was up over 5.5–6% earlier on the back of this. And this comes after Jensen Huang, during his comments in Taiwan at that Computex trade show, basically saying, incredible time to be a software company. A lot of people have said that AI is coming for software. He said it's exactly the opposite, because there are going to be so many agents. The world is no longer limited by the number of people. Therefore, those agents are going to use more tools than ever, and the software side of the industry is going to benefit from that. So really, really solid comments from Jensen Huang, basically stating that, hey, this SaaS apocalypse that we've had and the soft pullback in software names isn't going to equate to maybe these companies losing subscription revenue and maybe their growth slows at this point. So this is really positive commentary out of Jensen Huang. And for the time being, Diane, they're getting a little bit of a reprieve, but watch that IGV ETF. That's a good basis. Watch Oracle too. That stock's popping pretty significantly, and that's the big leader in IGV.
It is. I noticed that one. That one's up more than 9%. So, close to the move that we're watching in Salesforce as well. Big move there in Oracle. Great catch. That is Tom White, co-host of Fast Market, with the market moves you should keep your eye on. Coming up, we'll spotlight the tech sector, taking a look at Alphabet, Google. I know a lot of focus has been on NVIDIA today, but that stock, Alphabet, Google, up more than 115% over the last 12 months. It's come off of last month's all-time high. We'll assess what's next. And still to come, big moves. Alex Coffey will join us with real options trades for Netflix, Microsoft, and Chipotle. So much more when the watch list returns right here on Schwab Network.
My parents didn't really talk about money at all. In college, everybody around me had money. I didn't want anybody to find out that I wasn't middle class. I was using credit cards to do anything and everything. I ended up with $20,000 of credit card debt. That's when I kind of realized, like, all right, I have a money problem. This is about how my finances got wrecked and how I fixed it. And if I could do that, you can do it too.
Real-time access, data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Hi, I'm Alex.
I'm Jane. And I'm his mom.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
We're back on the watch list. Dow continuing to move higher, rallying more than 9% right now. Hit a new all-time high today as multiple analysts adjust price targets to account for last week's post-earnings surge. Morgan Stanley now has an equal weight rating. It says we were wrong on shares. It's got a $448 price target. Analysts over at Goldman, Mizuho, Bernstein also boosting their price targets. They have buy equivalent ratings on the stock. And when you look at some of the names along with Dell, it almost feels like 1999 all over again. The dot-com boom, legacy tech names have some serious growth they've seen this year. Here's today's price action. Dell rallying more than 9.5%. IBM more than 8%. Intel down 4%. That, of course, has to do with that NVIDIA news. People looking at it as a negative for Intel. Cisco up about 0.5%. So it's a slim gainer compared to Dell and IBM. It's party like it's 1999. Let's go deeper into our tech spotlight. Joining us now for perspective is Luke Lloyd, President and CEO, Lloyd Financial Group. All right, Luke, I see you smiling here, thinking about the late 90s. Let's talk about the tech sector. It's setting the tone for Wall Street once again. It is AI is in the driver's seat. Before we get into Alphabet, Google, I just want to get your broad thought on the momentum that we're seeing in the tech sector, because even when we look at the S&P 500 today, it's just two sectors that are in the green: information technology and energy. What's your take on tech?
Yeah, great question. I think I was 2 years old. Yeah, I was 2 years old in 1999. So I don't remember much from 1999, but I remember the history behind it. And this does not feel like the same tech bubble, if you want to call it, that we saw in the early 2000s. And what I mean by that is the valuations are actually really, in my opinion, cheap in a lot of areas, specifically in information technology and software. I mean, I just was not long ago, about a week ago, I think it was Tuesday last week, I was sitting right there where you're sitting next to Nicole. I said, buy software. And I've been pounding my hands on the table about software since February. We've been buying, every single week. We basically added a new software name since February, and that's thankfully worked out very well today. I mean, we're up 3% today in our portfolio when the market's barely up because of how heavy we are in software. And the reason being, I'll bring up a name like HubSpot. You know, HubSpot was a name I mentioned, Nicole, last week. I think it's probably up 20% or so since then. But HubSpot was trading at over 40 times price to earnings ratio, forward price to earnings ratio in 21. Now it's a 16 times forward price to earnings ratio. And then you have, you know, basically doing 5 or 6 times the revenue was doing in 21 with almost similar growth rates and better profitability. I mean, software just makes sense to buy it. It's like almost the market felt like, you know, AI was going to come in and replace certain things, and then, you know, the trade happens to the upside. Like Intel was thought to be a dog for a while until it wasn't. You know, we bought Intel right after the government bought it around $25 a share. Now it's up quadruple since then. I think that's going to be the same story with a lot of these software names. A lot of these names are beaten down 50, 60, 70% from the top, and I think we'll see almost a double in a lot of these names in probably less than 6 months.
Okay, you just made me feel so old, by the way, Luke. It's okay. I insert the crying emoji here. 2 years old in 1999. I'm not even going to say how old I was. All right, let's talk about, so you mentioned some of the software names that have been beaten up and seem to be out of the penalty box now, but let's talk about a heavyweight. Alphabet, Google, you like this one. Where do you think it stands? How much more momentum do you see it having this year?
Yeah, I think Google will be probably the biggest company in the world. I think it will surpass NVIDIA eventually. The reason being, they play in almost every single space that's going to be bullish around AI. You have the semiconductor play, you have also the software play, you have the data play, you have the AI with Gemini play. You have basically a whole AI play in one when it comes to Google, and I think they're going to remain the top dog because of all the data they have. I mean, if you think about any big tech firm out there, you know, who's got the most data on everyone out there? With what you search on Google, their advertisement trends, it's going to be Google. And, you know, it's been this way for years, but it's even more important now. You know, data is currency at this point. So Google is going to remain top dog. We only own 2 Mag 7 stocks this whole entire basically year rally that we've seen, Microsoft and Google. We think those two are the best plays in the AI space, in the tech space, that are going to continue to grow earnings and be the place that people go to for the products they have.
Luke, when you think about Alphabet, Google is taking a step back amid a day of momentum in the tech sector, you know, and that may just because listen, its name wasn't mentioned in all this NVIDIA news. What do you think is the biggest driver in its verticals for Alphabet, Google, for the strength that you see potentially, I guess, for the next year to year and a half?
Yeah, so semiconductors, I think, was the initial play that kind of got it rallying from, I think, what, $250 a share, probably to $350. That was, I remember, news being talked about all last year. I think the semiconductor space is, as I see it overall in a macro trend, you're seeing the semiconductor money flow now into software, and I think that's going to carry you probably Google hires their software cloud side of the business and their AI Gemini side of the business. That's going to be, I think, where things go from here. So those are the verticals that get me, you know, the most excited, I guess, for the foreseeable future, just because of the rotation of capital. I think this trend of rotating capital from semiconductors like the NVIDIAs and Intels, Microns of the world will go into the more value-based areas out there, which is, again, software, which IGV is still 10% below its highs. You know, the market's at all-time highs, but IGV is 10% below its highs. So there's still a lot of a disconnect there in software compared to some of
Lebanon's efforts, together with the U.S. administration, revealed a breakthrough in terms of achieving
with
a
software
ceasefire.
coming off the mat to such a large degree today, for instance.
Yeah, AI is not going to replace software. That was the big concern. If you remember back in February, it felt like a new hit piece every single week, or every single day for about a week. First, it was like logistic firms, you know, trucking corporations, are going to be replaced by AI. Then it was, you know, talking about the financial services business, and then real estate business transactions being replaced by AI. Then it was software. So my point is there was this negative attention that AI was literally going to go in and, you know, me and you could go on to Claude or ChatGPT and code up our own software to do our taxes like Intuit, or do our own CRM management like Salesforce or HubSpot. That's not the case. You know, AI is not going to allow everyone to create their own software. Frankly, people won't even know how to do that with, you know, guiding the AI. Maybe younger people might, but, you know, it's going to take a lot for everyone to really learn how to use AI by their side. So all it's going to do with software is allow these companies to innovate quicker. You know, the $400,000 computer programmer, for example, my 2 brother-in-laws that are computer programmers, I mean, they tell me how much they use Claude on a daily basis. I mean, you almost don't need programmers anymore. A lot of this code can code itself. So that's a good thing for these software companies, because it cuts all their overhead that's already pretty light, makes it even lighter. It increases their margins, increases their profitability, and frankly increases their innovation. So the amount of innovation we're going to see in the software sector, I don't even think we can fathom over the next few years, which is a bullish scenario for software, not a bearish scenario for software.
Luke, I think your family group chat is about to be busy with the mention of the brothers-in-laws, and if the salary is or the job is necessary, we'll see. That's going to be between you guys. My name is Bennett, and
They tell me they're concerned, so it comes from them, you know?
Okay, all right, expressing their concerns, but you also have, again, your eye on Alphabet, Google, and looking at the moves in the software space. That's Luke Lloyd, President and CEO, Lloyd Financial Group. Coming up, we will get technical with Ben Watson. He's taking a closer look at the energy sector with charts for Occidental and Phillips 66. Also look at the S&P 500. The watch list, we'll be right back.
Kick off and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
My man. Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time.
This is Fast Market, built for traders who want more than just headlines.
We walk you through trade ideas with structure, risk management, and a focus on execution.
From options to earnings to volatility plays, we bring decades of trading experience to every segment.
With real-time insight across products and sectors, we deliver what active traders need to stay ahead. Fast Market weekdays at noon Eastern, live on Schwab Network at schwabnetwork.com.
We're back on the watch list. HP Enterprise will be in focus after the closing bell when the company reports its quarterly results this afternoon. Analysts are expecting earnings to come in at 54 cents a share on an adjusted basis, with revenue of nearly $10 billion for the quarter. The stock hit a new all-time high today. It is up 90% so far in 2026. Time now for charts to watch. Joining us for that is Ben Watson, Senior Manager of Trading Services, Charles Schwab. Ben, I'm getting to talk to you twice today now. We talked this morning, now we're talking this afternoon. The S&P 500 hit another intraday high today, and it was looking choppy this morning to start out the gate. What trends are you watching for the chart for the S&P 500?
Well, and I'm glad that we get to talk again, because in reference to your last guest, I also remember where I was in 1999, and I wasn't 2 years old, but I can remember trends that looked a little bit like this, and this is similar to that, but S&P 500 moving higher. And it's interesting the levels that we've seen recently and where perhaps this move might be taking this big index. You know, you see the 7,500 mark where we saw a little bit of a resistance area, a bit of a pullback last week into that 7,500. So the possibility of a bounce off of that 7,500 big round number. Now we're sitting just about in the middle of this. We're sitting at 76.15. So that would maybe put that symmetrical move overhead up around that 7,700 level, which would be fair. I mean, that's another big round level. But I would say this, in the aviation community, Diane, I'm just going to say this. The number 7,700 represents, if an airplane puts that in their transponder and squawks that represents a general emergency. And I think there are a lot of investors that are out here looking at an S&P 500 getting up to that 7,700 mark as kind of a general emergency, that it just can't go any higher. It's gotten overextended. But Yet we look at a trend like this, we look at the things that are happening in some of the sectors that are moving higher and what's happening in software, and there is that potential for this to continue to move up and beyond that 7,700. But that could be an area where we see a bit of resistance here, Diane.
All right, let's talk a couple energy names you have on your radar today. We've been obviously having our eye on this sector, especially with oil prices moving higher. But let's start with Occidental Petroleum. It's up more than 40% this year and on a year-over-year basis. So basically all of those gains are from this year in terms of that percentage. What stands out on the technicals on this one for Oxy?
Well, you pointed out one of those is the fact that Occidental has been kind of lagging behind generally the overall energy space, although to be fair, until energy started to come in, until crude oil started to move higher, energy in general was a lagging segment of the market. But what I've got here on the chart is a comparison between Occidental, which is a midstream and downstream partner, meaning primarily focused on refining and on. And the purple line that I've got on there is what crude oil is doing. Crude oil is up almost 6% today. It's up, on the week, almost another 5%. But you can see that typically Occidental tends to lag a little bit behind the movement of crude. So crude moves, Occidental kind of softens some of that blow. So getting some exposure to that movement in crude oil, but doesn't really see as much of the volatility. Nevertheless, you've got a resistance level here at $60.75 roughly. Price of the stock's been banging its head on that for a little bit. The symmetrical move based on a breakout of that resistance.
So we got a megaphone.
Up to around 60.
I'm talking. We have two possibilities. We got a head and shoulders, straight across head and shoulders, or we got a megaphone. So if it breaks the shoulder line, got a huge breakout megaphone. Now, I don't know where to start this. I'm going to start right here. This pullback right here. So we've already come down and done the 3. We got a head and shoulders. So if this breaks to the head and shoulders, you might get a good, nice breakout on a Trump tweet. And the options are at 1580, the 7600s. So you want to move it down to 7610 or 7615. 7610. It's getting ready to squeeze. Hold the 9. Ladies and gentlemen, prepare ye in the name of the Lord. Just like that. It's hot in Missouri. What is your hurry? What is your worry? Can you trade? Calling the call out, looking at a megaphone. Will we break the shoulder line, you see? Well, what's your worry? Why can't you wait? This dog's about ready to break that gate. Let's break the shoulder line. I've been waiting for a long, long time. Let's have a fall. If you can count to 3, you can trade with me. Let's break this resistance line. I've been waiting for so long, seems too long. I've been waiting for a long, long time.
$3.08. WTI crude July futures settling at around $92.16 a barrel, which is up $4.80 for 5.49%. Diesel July futures settling at around $3.63. Natural gas July futures settling at around $3.18.
You heard from the man. Let's make a grand slam. Let's break that shoulder line next time. Well, we just hit the 50 SMA. I've been waiting for this trade all day. Can you count to 3 with me? Don't be shy, don't wanna cry, don't be scared what's about to be. Can you count to 4? We just might make a little bit more. Should I jump in this trade right now? 76.10. Come on. Damn, no, I wanted 50. I wanted 50. There it is. Just wait a minute. Oh, we got another Head and Shoulders right here. We got the 63 for a double bottom. That's what I'm going with. If you got a problem, you better not have a problem, because that's what I'm going with. You could jump in now and buy 1 and then buy 2 later, but I'm going to see if I just need to buy 1. Okay. I'll be right back. That mist it looked like.
The Hezbollah lawmaker says we support a full ceasefire on all Lebanese territory. Hezbollah MP says full ceasefire would be a precursor to Israeli troop withdrawal from all Lebanese territory.
$6.80. That'd been $100 if I had the nerve to get in it.
In commodities is high prices cure high prices through demand destruction. We're already starting to see that. Now, I will say I'm pretty optimistic on the Strait of Hormuz situation. I know that there's a lot of moving parts. I know it takes time, but the reality is there's 194 countries in the world that are cheering for an open strait without Iranian control or tariffs, or taxes, I should say. And there's only one country on the other side of the equation, so I have to believe that it's going to sort itself out eventually. That said, money goes where it's treated the best, and we've already seen a lot of pipelines circumventing the strait, and that also will take a lot of time. But it is happening. We are seeing somewhere between maybe 40-45% of the oil that we lost with the strait closing coming back online through alternative routes. So, these things do. Oil is a very important commodity, and things find a way to work themselves out. So I remain optimistic.
Oil is a very important commodity. Don't ever tell a liberal that.
That here in the U.S., our supply levels are sufficient to cover any gaps. But I know globally that it is a supply
Okay, we're coming
issue.
up the second time. Now this is where you need to pay close attention. Ladies and gentlemen, we're about ready to have a new speaker here. Please, I want you to give a round of applause to Richard Nixon. Well, thank you very much. I've had a few crises back in my day. One was I couldn't zip up my zipper correctly, and every time I tried to, it would scratch my penis. But besides that, them were some hard times back then. I remember Jimmy Carter's wife trying to pinch me in the ass there at the White House. I turned around and I said, I don't want to allow this here, ma'am. And then Hillary Clinton, she tried to molest me back in the bathroom. And I told her that I wasn't up to that either, and because I just scratched my penis on my zipper. So, I just want to say peace. I think there's going to be peace soon throughout the whole world. And I wouldn't worry about China. I took care of them long ago. And Carter screwed up Iran. But we'll make it work out. Thank you very much there, Richard. We have an ascending triangle, a triple bottom set up here. I'm still waiting for the 63. I'll move this up just a notch. Now, Jim, why haven't you looked at your slash GS yet? That's a good question. It's a very good question. That'd be a double bottom off the 63, sir. No, what am I doing here? I've got to make this perfect for my next entry. I went and get my hair cut this weekend. And the guy getting ready to cut my hair had a mohawk. The first thing out of my mouth says, I don't want a haircut like yours. So he gets the dang thing done, and it looked good. Then I get in my car and I look at my beautiful hair, and I realize that he forgot one sideburn. He trimmed up the other one, but the other one hung down. And I had to do a U-turn and go back there. What the fuck, man? I'll give you a tip. You left the sideburn. I've been walking around with my head to the right. I said, I can't get a decent haircut anymore, no matter how hard I try. See, this is called an ascending triangle. What's an ascending triangle? Washboardjim, what's an ascending triangle? It's where you have higher lows and I have a horizontal resistance. And then when they two meet, you have what you call a squeeze. Now, also mind you, we got an inverse head and shoulders on the SPX. And we also have the same kind of ascending triangle set up on the SPX. So we almost came up and broke the shoulder the second time with a lower low, lower high. See, I wanted that body to touch that and break out. If it would have touched, I think if the body would have touched that trend line, that shoulder line, it would have went ahead and broke out the second time. But as long as we maintain the higher lows, we still have the ops of maybe squeezing here shortly. Do you understand?
Punchbowl's Jake Sherman says he's told that the Trump administration is planning to have a statement soon, today, on the weaponization fund, and the statement will be aimed at restarting the reconciliation process on the Hill.
Weaponization. We went through 4 years of that under Biden. And if you didn't see that, you're definitely blind or biased. I'm not biased because I used to be a Democrat. I saw it. I saw it coming a mile away.
The VIX is actually up on the day. So this is one of those head-scratching days where it's the parts that are moving higher are moving so much higher that they're overtaking the 9 sectors that are lower on the day, Diane.
You got a problem with that?
Yeah, it is one of those days where it's like about that, you know, you think about a heavy...
That's called broadening out of the market. They wanted the broadening out. Can't they describe it now once it happens? It's not scratching my head.
Of the S&P 500. So that being stronger, if you're looking for leadership, you've got it in the right place, Diane.
Thank you.
All right, thank you, Kevin. That is Kevin Hinks, co-host of Fast Market. Appreciate that sector spotlight there. Time now for our ETF watch list segment. Joining me now for that is Kyle DeCruz, Director of Digital Asset Products at VanEck. Kyle, it is good to see you. You all recently launching the VanEck BNB ETF last week. This is the BNB blockchain. The ticker is VBNB. Tell us a little bit more about this and what investors are gaining exposure to.
Absolutely. You know, frankly, this is a really exciting day for us.
Frankly, dropped the weaponization fund following that Punchbowl reporter comment there that Trump will be making a statement on that. Axios reporting that Trump plans to drop the weaponization fund.
He's going to drop the weaponization fund? That'd be a good idea.
Voice news disconnected.
Scratching my head song. I don't like. I want to listen to that. Scratching my head. Oh, that'll work. This is a song from a friend of mine. You know, I could always tell a person by their refrigerator how they keep their refrigerator. So as we watch this thing break out,
chief fundraiser for Children's Miracle Network. The goal for me.
Baby, I'm curious by nature. Let me look inside your refrigerator. See what you bought from the store. Did you buy oil, did you buy butter? It don't bother me one way or the other. Just like to know you a little bit more. Yeah, let me look inside your refrigerator. I ain't hungry now, but I might be later. Now, do you drink butter? Do you drink Pabst? What's that hiding way at the back? Baby, what's that all about? Looks like something you bought that you never ate, long since past its expiry date. Honey, you gotta throw that shit out. Yeah, let me look inside your refrigerator. Ain't hungry now, but I might be later. And if you want to know you better, don't draw me no picture, don't write me no letter. Just let me look inside your refrigerator. What we eat, that makes me toast. You turkey meat. We got different tastes. Well, we throw all together, make a big stew. I'll eat some, so will you. Won't let nothing go to waste. So let me look inside your refrigerator. Ain't hungry now, but I might be later.
That green shit on that cheese.
Now some folks, they think I'm rude, like all I'm interested in is their food. I guess they're right. Everywhere I go, people I meet, I go straight to their fridge and see what they eat. See the world in a different light. Let me look inside your refrigerator. Ain't hungry now, but I might be later.
How long's that milk been in there?
And if you want to know you better, don't draw me no picture, don't write me no letter. Just let me look inside.
Just checking that ring.
Cause baby, I'm curious by nature. Let me look inside your refrigerator.
Get ready. You're at support, baby.
Yeah, let me look inside your refrigerator. Ain't hungry now, but I might be later.
7610, 540. Get ready, we're at the 63 here. We got a hold. That's a spy. I'm not trading a spy.
Starburst, different every time.
You ever look at somebody's refrigerator and go, ugh? I looked at one yesterday and I went, ugh. Okay, get ready. We're at support. Now see if I should have raised this up a little bit above that 63. So I'm going to grab a contract here at $5.10. The 76.10s. And if it doesn't hold, I'm in trouble. $5.10. Strike is 76.10 at $5.10. Might be later. That guy was Mike West from Shreveport, or from New Orleans, Kansas. I'm going to type in off the 63. I'm using 63 as support. Now this is risky, so it's not one of them no-brainers. Because it has to hold. If it doesn't, it's an easy drop to the bottom of the megaphone. Risky. It might be later. $4.80. Ooh. No. Alex. Okay. Damn. Could have got me some cheap contract right there. $5.60. I would have. We're at $5.70 right now. Panic attack. Panic attack. Oh, $5.80 now. Panic attack. We're at $5.70. Give me 100. Make it worth my while. I want $6.10. I love them, man. whoa. Let's go. $6. We're at $6.20. $6.30. Please, if you took the trade with Bobo at 5.10 or under, please cash it in. Please, you have no other business but to cash it in. I'm not asking for much. I'm just saying cash it in. It's $120 in a matter of 4 or 5 minutes. I think your mother would be very happy for you. Do I make myself clear? That's how you do it. So in less than 5 minutes, I was able to score $120. I went to this restaurant. It was raining out yesterday or the day before Saturday. It's called, let me see here. Italian restaurant on Fremont. It's called Azari. And I think I could have gone in here and grabbed a meal for that price right there. So, where's that salmon? We got lobster in here, lamb, shrimp. There's the salmon. Sauteed salmon with kalamata olives, capers, fresh basil, diced tomatoes. That sounds so damn good. And then, along with it, I was looking at the, where is it? Ribeye steak for $46, and I'll have to get me some mashed potatoes. Get me a Caesar salad. And then I was looking at, where was that other one? I got to get some garlic bread and a little bit of calamari. So I could probably do that for $120. And if the waitress showed me a titty shot, I'd give her $20 tip. So I took these calls off the 63 EMA. Now, Jim says always buy it at the 63. He does not say that. He doesn't say that. It's not like buying it off the 200 SMA or EMA. In this case, it was like a pivot point. But eventually, the equilibrium is going to fail. more and more so this is what I was trying to get at Friday. Jim had 6 great trades today, so I come in and I was too scared to take any of those 6. So here comes number 7. Man, Jim's had 6 successful trades today. He ain't gonna fail. I might as well jump in this one too. And watch it be the one that fails. Because gravity takes a toll after a while, and it's gonna just bottom out. Would I took that trade right there? Probably, because it was a double bottom, triple bottom. Right here, right here, and right here. But it's starting to show a little bit of weakness under the 63. And it's been going sideways for frickin' hour and a half. It's 1 or 2 hours. 1 hour, 1 hour, 1 hour, 1 hour, 1 hour, 1 hour, 1 hour. One o'clock to 2. This is the time of day where I really don't want to be that ambitious to get into a trade. And I'm gonna go put some clothes in the laundry or some towels, and I'll be right back. So I'll leave you with big tits here.
Taking a look at the 10-year here and how we're faring in some of our futures products. The 10-year is at 4.48, the dollar at 99.14. Gold is lower on the session, more than 1.5%. In
Very
fact,
professional.
At 45.1760 a troy ounce. Crude oil has come off of some of those highs we saw north of $94 a barrel this session. We're still at 92.50. That is up almost 6% today. And Bitcoin holding pretty firmly right around the 71,000 range. We're 71,605. That is almost 3% off of the levels before this morning's session started. I do want to check in with Sam, though, and see what's sticking out to her on the day as we kicked off a new trading month. Sam?
Yeah, and we saw that rally continue into June for the IGV. It's now positive on the year, Marley. It rallied over 5% today. In fact, up 6% right now after 7 weeks of gains when it was up about 36% just during that time. We've got names like Salesforce, Workday, ServiceNow, Adobe as well, all jumping. And it came after Jensen Huang, as you mentioned, at Computex. Marley said agentic AI will increase software usage, so that's giving them a little bit of a boost. But we're also continuing to see that rotation away from the big AI spenders into companies that are involved in AI bottlenecks caused by those supply constraints like memory and cooling. Micron putting on yet another 6.5% today. The EWI, which gives you exposure to those South Korean names, also up almost 6% right now. Away from technology, energy rallying as oil prices spike on negative headlines out of the Middle East, although we've had a flurry of developments late this afternoon from President Trump. But earlier, Axios had said a Lebanese official told the US that Hezbollah was ready for a full ceasefire with Israel, and it came after Iran state media said there would be no talks until Iran's demands of a cessation of Israeli operations in Lebanon and Gaza are met, and that saw oil and yields jump just as we headed into the US cash open, pressuring rate-sensitive areas of the market. But as we mentioned, we are off the highs on oil and off the lows on stocks. So I'll send things back over to you and Jenny Marley in Chicago with some of today's top movers.
Thanks so much, Sam. Yes, Jenny Horn, co-host of Next Gen Investing, joining us to take a closer look at some of these names that are on the move. And let's start with the big one, NVIDIA, up 6%, which is just a huge move for a company of that size on all of these headlines coming out of Jensen Huang's keynote address at Computex.
I know, and I will say a very strong keynote address from Huang, as we've seen a pretty big reaction. And usually I feel like what we see from these types of events like GTC and just various unveilings of products, we don't always see the same positive reaction. So really encouraging to see now a over 6% gain as NVIDIA really is striking back against some of its closest peers, like think Intel, AMD, their core market with an AI chip designed for PCs. NVIDIA did unveil late Sunday the RTX Spark, which was described as the most efficient PC chip ever built, designed for personal devices to run these AI agents and programs that can act basically autonomously, while combining the central processing unit alongside their Blackwell GPUs. But the move is an effort to disrupt the market, really, that Intel and AMD has dominated in terms of PC chips, with NVIDIA using technology licensed from its processor designed for ARM. ARM also having a really phenomenal day today, up at double-digit percentages on the session. But it's also expected to add a major leg of competition to, say, Qualcomm, which has made its push into PCs with its range of AI chips. But the new chip will be aimed at more consumer devices, likely at the more premium end of this market. NVIDIA has said it's working with these PC manufacturers, including Dell, Microsoft, and HP. They did also say that eventually there will be 30 laptop models and about 10 desktop models utilizing this new chip. But it was made, of course, at this Computex conference, and it really does seem like right now this is top of mind for Intel in particular, whose x86 architecture was effectively basically called out as like obsolete at this conference for Intel's real core markets, which I think is really interesting when you look at like what is moving the most significantly to the downside today. Intel is one of those names, but Intel's been impressive. NVIDIA, frankly, has not been the same impressive as far as its price. So a 6.4% move, I mean, this then just further solidifies this company as the biggest market cap and then some. We haven't seen a move like this.
I'm waiting to see if it pulls back and hits that striped line, that yellow line.
And that is a huge move, a potential huge driver as they move into PCs. But we also got some updates on Vera Rubin, which was the driver everyone was looking at prior to this event, unknowingly that they were going into PCs, and got some big name clients there too.
I mean, right, and so this now just further boosting its positioning as, I mean, really like a one-stop shop, like a basically full stack type of provider. Like you have names like Lenovo and obviously Microsoft. The list just goes on and on, though, of like where this will also benefit outside of just NVIDIA. And I do think it's interesting to see like how much they'll be able to disrupt these new markets. And again, they're fairly understood by the markets, but I will be very curious to see like the disruption element. Will this actually have like broader implications? We talk about companies that could benefit from this, like the mass upgrade cycle. Not to say super cycle again, but I will be very curious to see how that obviously does shake out throughout the broader tech space.
It will be interesting to see. I had a super cycle conversation earlier on Trading 360, and it also involved a lot of the term bubble. So we won't step into that. We don't have enough time right now. But let's talk about IBM, because a really nice move to the upside from IBM today. They got some new coverage from Barclays, a $350 price target. Some other analysts have weighed in on this name, but a bullish note here.
Yeah, pretty optimistic note, as the team at Barclays did say this flashy narrative really behind like quantum hype and high-profile federal endorsements is actually precisely what investors should be looking past. So they did initiate their coverage on IBM with a buy rating, $350 price target, which is kind of an unexpected twist, though, as we know that right now a lot of the effort and a lot of the hype around IBM in the last several weeks has been with that federal infusion of $1 billion to build a standalone quantum foundry. Just days later, the company pledged to invest more than $10 billion in quantum research, development, and manufacturing over the next half a decade. But Barclays is actually more focused on a different aspect of their business, their concentration into software, which is behind nearly half of the company's revenue and now most of its profits. So the inflation alone, initiation alone, does not fully explain this recent move to the upside. We did also see some degree of optimism today, fueled by President Trump praising IBM's CEO at an event last December, which has been now a resurfaced video clip that was actually trending, I saw earlier today. But we know that they have also been hugely supportive of IBM and some of the quantum technology, which has only further then continued to help boost shares. But all in all, this note out of IBM's software infrastructure did highlight it's tailored to large, highly regulated enterprises, creating this very loyal customer base that, in their opinion, of course, is not at risk of being upended by AI. And so they're not the first to make that call. Oppenheimer also had similar reasoning back several months ago when they did start IBM as one of their top software portfolio picks, calling, of course, this software portfolio sticky, meaning that clients are repeatedly returning to these products. Well, even though there's, of course, alternates to offer some competition there. Evercore ISI also did make the same argument following fears that AI has disrupted their market. And Citi Research, also another one, that said that their hardware and software were entrenched across the world's most critical points of the most complex IET infrastructure. So a lot of analyst enthusiasm just building on what has been a stellar now, like last 10 trading sessions even.
Yeah, I did also see when those Trump comments came back out. You are right, I did see them viral. They were all over social media and in the headlines. Popped as much as 10%. We're now up about 7% still on IBM. So a nice move to the upside. But let's look at a move to the downside, because we're talking about strategy next, or MicroStrategy. They're down more than 5% after, I guess, what you could only call a sharp about face from Michael Saylor, who famously once said, "Sell a kidney if you must, but keep the Bitcoin." Not keeping the Bitcoin currently.
Not keeping the Bitcoin currently. And so I liked that framing of that, because of course he once swore, I mean, he's been actually pretty notorious for years for saying that he will never sell Bitcoin. And then, of course, the world's largest holder of cryptocurrency, being Strategy, has very much reversed that stance, recently executing its first strategic sale. The company disclosed that it sold 32 Bitcoin from the period of May 26th to the 31st at an average price of $2.5 million, or roughly just shy of like $76,000 a piece. The proceeds from the sale are expected to be used in these fund distributions on preferred stock. That's per Strategy. The transaction, though, is the first of its kind, seeing Strategy last sold Bitcoin back in 2022, and that was only for tax purposes. It also does reflect a departure from this, again, never sell mantra that we knew very well from Michael Saylor. And so the longtime Bitcoin bull really has been the head and so much of like the focal point of the company since founding it back in 1989. But now Strategy's seemingly reversing a little bit of that strategy here. Today, they're regarding it more as this investment vehicle offering exposure to Bitcoin, as opposed to, you know, a different type of Bitcoin company, because frankly, they're all entirely different from one another. But we did see that the overall indicating that, at least on an earnings call back in January, he was more open to the idea, that saying it was basically something that he's considering when it's advantageous to do so. I think interesting, though, given the timing of this move, especially because Bitcoin has been, well, not necessarily making new lows recently. We've sort of been stuck in this range of utilizing at least the more downtrodden price performance of the asset class. But Strategy itself is where the pain really is. We're down 67% from our yearly high in this name.
Yeah, I mean, I won't say this was wholly a surprise. On the earnings call, there was a question asked about funding dividends, and Michael Saylor did say, quote, "Yeah, we'll probably sell some Bitcoin," which was a much softer version of the commentary we've always gotten as never sell. But that did end up coming to fruition. They needed those funds, and now they have them. They sold Bitcoin. So a new rebrand may be happening over at Strategy, as in never sell is no longer the tagline.
Sounds like a con artist.
Because they held on to this double-digit move to the upside pretty much throughout the entire session after being really beaten down on their earnings. Guggenheim gave them an upgrade today and said there might be a buying opportunity here.
They did, and I think hugely encouraging that we're seeing a bounce back, because not only did we see pain up and post-earnings, this was one of the more major moves to the downside across all of our more recent tech earnings coverage, but getting a nice lift today, hopefully at least easing off of some of these yearly lows after Guggenheim did say that they're still pretty optimistic, actually really right now highlighting a more bullish upgrade, as they did say that their AI narrative is one that is going to be still this trust me story, but they did give a price target of 214. That does represent roughly 40% upside to current levels. And so the firm did note that shares obviously have fallen pretty substantially. Guidance also did not perhaps a buying opportunity, saying that they believe the current level presents an opportunity to purchase a leader as an important nascent security space, and it's really about the intrinsic value of the stock. If they were to run this hyper-efficient reality and never grow against somewhat this recent decline. And so the basis for the bullish belief is that their cybersecurity offerings will continue to drive their relevance in this AI era with their secure access service across various like cloud-based security as well as network connectivity architecture. So again, I like that they called it a trust me story. I think they're not alone in that thinking right now, but giving some optimism for basically a valuation reset and saying, hey, if execution is able to improve, maybe we could see some price performance follow as well.
Yeah, I mean, that you highlighted that deceleration of growth was the main focus on that earnings report, and we saw that huge move to the downside. But even with the move to the upside today, we're still
get ready, prepare ye in the name of the Lord.
Pre-earnings, Jenny, really appreciate you breaking all of that.
I do too, Jenny. I appreciate you.
Oh yeah, Jimmy's going to like this. Prepare ye in the name of the Lord. Randy, $4.10. $4.20. I don't know how he does it. His name's Washboardjim. SPX, calls, scalping, lotto, strike was raised up to 76.10 at $4.20. I tried to get 10. I can still drop. So I'm allowing myself a little patience. Now I'm at 490. I can make a business decision right here. The girl that cut her hair wrong is kind of cute. Now it's not looking so good. There's my 420, 400, and 410. Dad, can I ask you a question? Where's Grandpa at? He died. He left all the money to us to squander. I didn't know he died, Grandpa, Daddy. He was going to take me to the movie Saturday. Okay, 76.10s are back to 440. Now, if I don't feel comfortable in the trade, I sell it. But I came within millimeters of hitting my 76.1087. So I'm going to give it a little bit more time. This is a risky time to be taking this trade too. How many people are going to go home tonight or go home after they're done trading and clean your refrigerators? Because if I come over, I'm going to be, that's the first thing I'll go to is check it out. That alone will tell me what kind of character you have. Jim, you don't want to look in my refrigerator. I haven't cleaned it out for almost 3 years. Oh, here's the funny guy.
Know that they are semis, space, and options, but I'm more interested in what you have to say about whether they can last forever and whether we could be setting ourselves up for the possibility of a correction. And I ask that because trees don't grow to the sky. And I also spoke to Dr. Ayardeni about this morning, and while he has an 82.50 price target, or I should say end-year target on the S&P 500, he still believes we could potentially see a pullback over the summer. So just walk us through what the risk here and the probability of a correction is in your eyes, and how much we could pull back by, do you think?
Well, you're right. Trees do not go to the sky. However, manias can last lot longer than anybody thinks. So we need to be very aware of that. Now, in our analysis, probability of a correction has risen quite a bit. And the reasons are, the first one is the sentiment is extremely positive. And when sentiment is extremely positive...
I'm not making fun of this guy. I just love the way he talks. I mean, I could sit...
The correction is going to start today or tomorrow, but it says...
I play him well.
Here. So that's one of them. The second thing is the projections for Q2 quarter, second quarter here have just moved up earnings. And, when expectations are so high, sometimes those expectations are not met. And the other thing is, the AI stocks are now half of S&P 500. And when concentration is so high, there's a fragility in the market. Also, we see consumer sentiment. If you watch University of Michigan data, they started keeping in, I believe, 1954, and we're hitting the lowest levels ever. Now, consumer continues to spend, so that's good. But then, if you look at the consumer savings rate, is falling. Savings rate is going to go negative here. So you cannot continue forever with what's going on here. And lastly, we got midterm election ahead, and historically markets tend to dip before midterm election. So the probability of correction is quite high, but the manias can take us a lot longer. So then the question, Sam, is what should investors do?
So if that's the question, Nigam, and you just laid up the perfect setup, and last we spoke more broadly about the difference between mania and a bubble and why the distinction was so important, because sometimes in a mania it goes higher than a rational person would believe it could, or as Sam's analogy, can grow to the sky here. You've just highlighted a lot of reasons that likely won't happen. The fragility of the markets, we've got a midterm year. So what are you looking at as far as timelines for when to expect this correction, and how are you positioning to get ahead of it?
So we use a system of dynamic hedging, we recently started dynamic hedging again. And just for a reference, just one day before Iran war on February 28th, we raised some cash. We were very hedged, and March 30th, which subsequently turned out to be the low of the cycle, but that day we did not know. We started buying April 1st, April 2nd. We took profits on our hedges. April 7th, we said buy more, and now we're beginning to hedge. So this is hedging is a slow process based on certain proprietary signals. So as the market goes higher, and depending on how our signals trigger, we're going to start hedging more and more and more. And so the result is we're going to keep on holding to our long-term strategic positions. We take on some short-term positions, but short-term positions fairly close stops these days, and we're going to keep on increasing our hedges. So the point is we're going to continue to participate to the upside, but if the correction occurs, we're not going to get hurt. So that's the game, and I think that's what every investor should think about.
Given this Iran conflict has dragged out a lot longer than many had anticipated, and you come into a week like today where there's extremely conflicting and confusing headlines sort of driving the prices all over the shop, with that in mind, combined with a more hawkish sounding, basically, bench of officials over at the Fed and heading towards a meeting where there's an expectation that they will drop the easing bias, Nigam, has anything about your strategy changed in recent weeks, given the data we've been looking at?
No, Sam, it hasn't. So here is a, kind of a psychological thing, and I don't know what everybody thinks about it. If I were at the Fed and I was looking at the data, I would definitely be raising rates. But I don't make those decisions, right? My job...
I'm up $50 a contract. Should I sell? That'll give me $100. Should I sell? I'm up $60 a contract. It's $120. I'm up 100. Oh, come on. Let's go. This guy's funny. I like listening to him. I never really can get anything out of him, though.
Now, they will. Okay, the speculation is they're going to take the first step towards raising rates by getting rid of the easing bias they've had. Fine, they can do that. So that's a statement, but it really doesn't change the interest rates. So I think the interest rates are not going to go up a lot from here. Maybe a little bit more, but not a lot from here. So that's how
they're
we
not
kind
going
of
up
look
at
at it
all.
at this point.
And Nigam, I want to talk about this potential correction.
Yay! It's at $5.
In October. I know in your Aurora report you use support zones, and you've got 3 detailed here. I'm just wondering if you can take our viewers through each of these zones and how each scenario works out.
Yeah, so one thing we do is we use zones as opposed to just one support level, which a lot of people do. You know, in my experience, one has to be very arrogant to say, I know exactly this level the market is going to drop and then it's going to bounce or do something. I can't tell that. I've been doing this for a long time. And the people who do that exact support levels, I've never seen anybody succeed at that. So what we do is we use so our 3 zones are, the first one starts around, is centered around about 7,200.
He's never seen anybody chart as good as I can. Look at there, $5.20, you idiot. That's my zone. Jim, you're up $100 a contract, $120 a contract. What do you think about that, knucklehead? Watch me. Just 5 minutes, that's all it takes. Jim, you're up $120 a contract. I sold. $5.40. That was my zone. He says he's never seen anybody do this. I'll teach him a lesson. One he'll never forget. Whoop. $5.40. He says he's never been able to see anybody do that. He ain't been around long enough. Good job, Mark. INTC. Green Machine has a very clean refrigerator. Oh, franchise. Is that your pool?
April 7. So that's kind of how we'll proceed. It's not an on-off thing. It's not a market is going to go up, market is not going to go down, because I think that's a loser's game. Nobody can exactly time it.
Man, are you still carrying on about this? This guy can't trade stocks. When you say nobody, I have to disagree again. I mean, I would love to put an application in at your business and run all your hedge funds for you, sir. And instead of making 6 or 7% like Buffett does, we might make a couple thousand a year, percentage points. I mean, I just did 25% just now, you idiot. In a matter of minutes. Oh, the sneaky snake guy. I know who he is. Yeah, well, maybe one out there can do it. I know one out there that can do it. No, I didn't make 25% of all my money, but I guaranteed I could. Five, 10, let me see what time it is. $12:43, 6. This has been almost an hour and a half. We've been going sideways. It's going to start getting old. I want to say a big knife and a catch into close. I got triggered. The SPX was triggered. Hour and a half going sideways. Triggered. /ES. 2 of them triggered now. Oh, man. Well, let me think. $3. That's $3.10, $3. I'm gonna buy one contract at $3.10. And right when I bought it, it dipped. It's got a hold right here. $2.60. Now I got 3. Well, I better get out of this.
that data in the public cloud. But if you're a hospital or an airport or the Defense Department, you can't put that data up into a public cloud. So you have to.
That's probably right. You can't put it up in a public cloud. I mean, look at airlines. I need to have a watch list of airlines. Come on. Yeah. Already done their thing. Uh-oh. AAL at 14 something. That was a nice bounce. American Airlines. Meta's back at 604 after last week's run. Meta and Amazon both look kind of tasty, but I'm going to wait until I get out of this. I don't know. What did I do? Create an alert. On the megaphone on the spy. Ooh, gosh, that's a pretty good drop. Now a couple hundred. Now I'm back at another resistance line here. Now I'm under the 9, so I have to use that as a pivot point. If we break it, that means we can probably get back up to here. But we got to break it. We got to break the 9. I was looking at American Airlines. I heard Rivian was bouncing a little bit the other day. Uh-oh. $242. Now's the time. Right there at 110. Boom.
It's also starting to turn downward here. So when we think about
break the 9
RSI, our measure of momentum, we are starting to get quite close to the 50 midline, a crossover below another bearish signal. So if we were to break out of our trend line and cross over on the RSI, it would be more of a confirmatory piece of evidence that would line up with each other to give us more of a bearish outlook here potentially. Our volume profile study that we look at now is just focusing on the past few months. We had this very rapid climb to the upside, so we're looking at more of a distilled view of the recent activity in this case here. So what we see here is a node that developed between about 112 to 122. We have slipped below that area now. The next area that would see higher trading activity would be a very small pocket here between about 93 to 96, and then another one here shortly after we gap to the upside between about 80 to 85 roughly. So from a volume perspective, these are the heavier trading areas that we've seen recently.
And with this announcement today, did we see an uptick in the options action? Because of course we got this announcement basically overnight in Taiwan, but then we got some commentary from some other reporting outlets saying that there was perhaps another tailwind coming for Intel.
Right, so the sizzle, meaning the options volume relative to its 5-day
another tailwind,
came in at 1.4, so somewhat elevated activity today. That equates to about 616,000 options, so pretty heavily traded name here. In this case, about 61% or so were calls. The biggest open interest expiration, June 18th, our front month contract here, 27% of all open interest. So that would be
you got to hold here
box right here, plus or minus about 16.2% over the next 17 days. One big trade that I did see, an opening trade here, a bullish trade, plus 5,000 November 20th, 170 strike calls at an 1140 debit. So a $5.7 million opening trade here, looking for some continued upside in this name, looking to break above 181 or so.
All right, right now we are at 108.89 for Intel, trading about 5% lower on the day. Rick, really thank you for breaking that all down for us. Rick Ducat, our lead market technician here on Schwab Network. And I do want to check back in with Sam, though, to find out who she and George will be talking about today for overlooked stocks.
Well, we're going to be talking about Virgin Galactic heading into the close, Marley. So George Sillers has his eye on that one. He'll break down the news, what you need to know, coming up next on Market on Close.
Sometimes, you know, you could have done better. The same goes for where you invest. Level up and invest smarter with Schwab.
From the most iconic trading floor in the world, this is Opening Bell with Nicole Petalides, live on the floor of the New York Stock Exchange. The countdown, the setups, the stories that make markets move. Minute-by-minute breakdown of the biggest headlines, earnings, and global movers. Just the trades that matter. As the bell hits and the markets react in real time, Opening Bell, live at the NYSE, right when it counts.
I'm Jenny Horn. We go beyond the headlines, tracking the trends, sector moves, and fundamentals shaping the markets in real time. This is Schwab Network. Subscribe at schwabnetwork.com. Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services. Schwab Network.
Available anytime, anywhere, on any device for free.
How's it going? First day, so... Sometimes, you know...
10-minute mark here.
Yep. You could have done better. Please. Same goes for where you invest. Level up and invest smarter with Schwab.
Intern, this place is incredible. It's where I get all your office supplies. Your golf balls, your fancy coffee, your giant TV. It's everything in one place. It's like Schwab. Everything investors need, all in one place. Come again? Yeah, at Schwab they can do everything. Invest, trade, get full service wealth management, and anything in between. I think I'm gonna be sick. We have to buy sick. Schwab.
Invest your way with Schwab.
Welcome back to Market on Close. I'm Sam Vardis on the floor of the New York Stock Exchange. It's time now for overlooked stocks. Virgin Galactic has been soaring this past week as the pending SpaceX IPO drives investor attention to the space industry. So we're joined by George Sillis, the senior markets correspondent. Seeing a nice move in this stock today, up 25%, George. I mean, is this just space mania, or is there something more to what we're seeing here with this particular name?
Well, there's a couple things going on. First off, I mean, there's clearly a halo effect occurring across the space stocks because of the SpaceX IPO. That's just down the street or down the pipeline in terms of time. If you look across the board, companies like ASTS have been moving. Lunar, which is another space company, Blue Origin, which is Amazon product, also getting a lot of attention as of late. But if you look at space, so symbol SPC, that's what we're talking about, which is Virgin Galactic. This is one I actually haven't taken a looked at for quite some time, because originally, and still is the case for this company, this is actually a pure play space tourism company. So when you think about space travel, this is the company that provides the unique aspects of short-term travel above orbit for a very expensive price. And one of the things about SpaceX that's very valuable is Starlink, the communications satellite platform, which has a lot of capability to disrupt traditional cellular and 5G technologies. So that's why the valuation of that business is expected to be quite high, and also the hype around that technology is quite large. If you look at Virgin Galactic, there is some catalyst going on with this business. First off, they're expected in Q3 to launch their new platform, Starship, which is called the USS Unity. So this is a Starship that is in the testing phase right now. They're expected to start passenger travel on this platform in Q3 of this year, which is important. And then also in Q4, they're ramping up their revenues as well as next year. The reason I say this is important because if you look at last year alone, they only generated around $1.3 million in sales, market cap of the business around $583 million, but they still suffer from gross margins that are negative. And on $1.3 million in sales, the company lost around $260 million. So this has been a company that's in transition. It's a multi-year transition. Even though the stock is higher in the last month by quite a bit, it's up over 200%. There's no doubt there's a lot of attention in the space ecosystem and stocks. This one essentially is getting a positive boost because of the halo effect, but also because they're going to be launching additional flights on a new platform coming up at the back half of 2026.
Okay, understood. Pure play as far as that sort of more commercial tourism is concerned. A nice pop today, up 140% as well year to date. So we've seen a nice run for this one. George, really appreciate the details. Thanks so much for breaking that all down for us. And it is bright spot in what is otherwise a down market for that particular sector. But Marley, I'll send things back over to you in Chicago for now.
Thanks so much, Sam and George. We are nearing the end of our market session. Of course, Kevin Green will be joining us to break down the levels he's watching on the S&P 500. Plus, we'll have earnings from HP Enterprise after the close. That's all next on Market on Close.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Hey, Bob. Hey, Andrew. Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable. Wait, had a stroke? Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial consultant.
I am not.
20 years ago.
Jim's really been there to answer.
I have not been there from day one.
It's a huge difference when you have someone that actually cares.
I'm Kevin Green, and
I wonder if I can sue these people for using my name. because I'm vulnerable. SPX keeps dropping. Very vulnerable. My next support level, it's going to be too late. 5 minutes left and I ain't messing with it. Actually, probably stop here. Could buy one contract and give it a shot. Not in 4 minutes. $55.
From Trump, we've still got elevated oily yields, but it looks like stocks could be on track for another record close here. What are you looking at as far as the levels here, KG?
Yeah, I would agree. I mean, it was actually a pretty decent day, given the fact that we have seen some headwinds over the last 24 hours because of geopolitical risk. Going into the close, we are seeing a little bit of selling pressure, but we're still about up about 0.25% for the S&P 500. So kind of going into the close, what you would like to see is us holding the 7,600 level. We're trading below it right now, and it seems like we are seeing, once again, a little bit of a give back from the gains that we started to see about an hour ago or so. But overall, this is actually a pretty decent day. As long as we're able to hold around the 7,600, I think that continues to give us that higher highs, higher lows narrative, and that is going to be technically positive for the market. If you're kind of looking at the market breadth, though, we did see only about 40% of the stocks in the S&P 500 in the green for today, and unfortunately only two
higher high, higher low.
Positive. Information technology leading the way up about 2.4%, and then we see energy also positive on the session of 1.7%. Some of that dynamic of energy being in the green and technology being in the green, or markets in the green, is still kind of working itself out, at least for now. So 7,600 is really the area that I'm looking at kind of going into the close, and we'll see if that's going to take place here in the next couple of minutes.
All right, KG, and I know that you've been keeping a close eye on these chip names and the software names, and you've got an IGV stocks chart for us, so walk us through what you're seeing there.
Yeah, so this is the S&P 500 compared to the IGV versus SOX ratio. So when you have this orange line, that means that the software ETF, if you will, is outperforming the SOX, and if that orange line is moving to the downside, it means that semiconductors are outperforming software. We have seen the primary trend, obviously, semiconductors outpacing software when it comes to performance. But you're starting to see it actually hinge here a little bit. Now, the price action is actually fairly remarkable. If you're looking at the IGV ETF, a really green day over the last couple of trading sessions here, and really breaking out of some key structure to the upside. And a lot of these names are up 5% or even 10% on the session alone here. So this might be one of these trades that the pairs trade itself might be rolling back here a little bit.
Still
and then
60.
Also kind of that rotation after month end. Looking into June, where are some pockets of the market?
I did imaginary trade here at
Software seems like
60.
it's fitting that bill. We also have maybe some news headlines coming out over the
7,600s.
next couple of days from conferences and things of that nature that could also push software a little bit higher here. So this is a pretty decent catch-up trade. It's accelerating when you're looking at software outperforming semiconductors, but there's a lot that actually could be squeezed here if the market really wants to try to take hold of this new rotation trade that we've seen over the last couple of days.
Oh.
Yeah, it's certainly interesting looking at the software Vita semi-spread there, particularly given what we've seen in the last few months. I think it was Jensen Huang who made some sort of endorsement as well around the
back down to 60.
use cases.
Back to 90.
When, you think about softwares. CoinDesk also has an interesting report about the correlation between the IGV and Bitcoin
60
as well.
to 95.
About how that is breaking down at the moment, and similar episodes of low correlation have been followed by Bitcoin
And I would have probably not got out
in the
anyway.
months ahead. So I just found that fascinating because I think those market dynamics are really interesting.
Did you find me fascinating?
Maybe about some individual names today. It just looks like NVIDIA was kind of like the Pied Piper.
From an individual standpoint, not so much. I mean, the breakdown that you are seeing when it comes to the consumer staple stocks, I think is something to keep on the radar. That may give you
All right, well, that's the bell.
tone in the market. You have Costco.
That's it. I'm done. I had one red trade today at the end of the day, and that ruined all of my winnings. I mean, of 2 trades. So that's it. I am going to get out of here and relax and do my towels. I think that's it. I'm going to close these down. So really appreciate everybody.